you can please take your seats, we are about to begin. This forum will explore the latest trends shaping Saudi Arabia's capital market ecosystem, providing unique insights, fostering collaboration, and unlocking new investment opportunities in an evolving global financial landscape. Since its launch in 2022, the Capital Markets Forum has grown into one of the world's premier gatherings for capital market. The first track of the day, the annual economic sprint, navigating new economic frontiers, macro growth, and regional dynamics. So our first sprint will explore the evolving dynamics of the global economy. The global economic landscape in 2024 was shaped by significant volatility, geopolitical conflicts, and a constantly shifting.
Well, it's wonderful to be with you this morning, to have the opportunity to sprint through the global economy in 10 minutes and 5 key themes. Let's begin with the first theme, which is global resilience. I think it's very helpful to kind of step back and think about some of the challenges. In the year expecting that we would see a significant slowing in global growth, which just didn't happen. And when I think about the coming year, I think global resilience is a key theme. Second theme is that of normalization, particularly with respect to inflation and policy rates. As a result of displacements from the pandemic, we saw surging inflation, first of goods prices and then services prices as post-pandemic. Many individuals were engaging in what was referred to as revenge spending. For 2025, thus, I think the ongoing reduction in inflation, coupled with these central bank rate hikes, are likely to be supportive factors. That then brings me to my third key theme, which is U.S. exceptionalism. Now, if we've been surprised by the resilience of the global economy in aggregate, we've been particularly surprised by the resilience of the United States. And specifically, in each of these last 2 years, we expected that the U.S. was going to record a recession, and it just didn't happen. Instead, the U.S. economy has grown at roughly a percentage point above its trend, near 3%. First, U.S. asset prices have been in demand globally, and U.S. assets have been priced very aggressively. You see this, for example, in the equity market. The second dimension that people's minds as we think of uncertainty is what are the policies of the new Trump administration going to look like? And I think the reality is here that Donald Trump was elected to be a disruptor. Donald Trump was elected to disrupt the status quo, and that is exactly what he's doing. Now, when I think about the range of his policies, the one that gives me the most concern is his tariff policies. And I think, to be clear, in Donald Trump's world, tariffs do 3 things. First of all, they provide a negotiating lever and a way of motivating other countries to move in ways that are consistent with Trump's objectives. I think we saw this with the threatened tariffs on Mexico and Canada in recent weeks, where I don't think he had any particular intention of putting tariffs on Mexico and Canada, but he wanted help securing the southern U.S. border in particular. Second reason, tariffs are forthcoming, and then more broadly, we're seeing a deterioration in the U.S.-European relationship. Now, as I say all of this and highlight these question marks about President Trump and where his policies are going to go, I think there is an important governor on how disruptive they can. So I think that economic reality that he is clearly aware of and feeds into his political capital as a constraint as to how aggressive he can be on some of these policies. Now, with all of this, let me proceed to my fifth and final theme, which is tempered optimism. Optimism because of global resilience, because normalization, and because I expect the US economy to continue to perform in a solid way. Another way to frame it even more pithily is that the underlying fundamentals of the global economy strike me as still being strong. So that's the reason for the optimism. Tempered is obviously there are some significant uncertainties out there that we need to think about and we need to worry about. I think the implication of that is that we need to be cautious, we need to be nimble, we need to be agile, we need to react. But given where I think the global economy is headed, it's critical that we don't overreact. Bottom line, my sense is that during the year ahead, the relatively solid fundamentals of the global economy are likely to transcend any kinds of uncertainties that we face. Thank you very much.
Thank you very much, Nathan, for such valuable perspectives. Our next sprint shifts to focus on the Middle East with remarkable economic growth and diversification across the region. We'll explore how these developments are driving foreign direct investment and progressing economies in the region. Joining us for this is Mr. Ahmed Shamsuddin, the Managing Director and the Head of Global Research at EFG Hermès. Thank you.
Good morning, everyone. It's a great pleasure and honor to be with you today. My session is about the economic outlook in the Middle East. And the region is one of the most promising in terms of growth, diversification, and value creation. However, growth is uneven. Countries are very different in terms of economic fundamentals, in terms of the opportunities for growth and the challenges each country is facing on a standalone basis. So if I want to highlight some of the main themes that are playing out right now in the region, I would first start with economic diversification and growth, non-oil growth. And on this, Saudi Arabia and UAE comes at the highest rank of the list. We are seeing massive population growth in Saudi Arabia and the same for the UAE. Population growth and tourism development have been driving significant growth in the non-oil sector, driving aggregate demand growth and employment in both countries. For example, Saudi Arabia, according to the IMF, the country has added 2.7 million expatriates over the last 3 years. Similarly, the UAE added 1.7 million to its total population over the same period of time. This is massive, and it has actually fueled the aggregate demand on the non-oil sectors, and it was reflected very positively on the stock market, on equity prices, all the way from consumer stocks, healthcare and hospitality, banks, insurance, healthcare, everything. Tourism has also been one of the major drivers of the non-oil growth in both countries. We have seen Saudi Arabia revising upwards the Vision 2030 target for the total visitors annually to 150 million, which is massive. And also the UAE, last year, the number of arrivals crossed 18 million into the country, which is massive. It's a record growth historically. Going forward, we expect population growth to remain at the center stage of the economic development and diversification in both countries, however, at a slower pace. And the reason is the capacity constraint. Capacity constraint and funding challenges are going to play out parallel to the real developments that we are seeing on the ground. And with capacity constraints, I'm talking about the existing capacity in both countries. The governments are expanding the capacity significantly. Massive projects are underway, massive projects are planned, but this will take time. And we learned in this specific context that supply is usually inelastic when it comes to growth, accommodating new projects on the utilities, on the transport, logistics, and everything. And if you talk about the historical representation of the non-oil sector and tourism, tourism is going to grow. In Saudi Arabia right now, I think it's 11% of the GDP. It will grow to 15% of the GDP in 5 years' time, and this is attainable. The main challenge is the pace of execution on the project front. And this brings me to another point, which is the total construction and infrastructure activities in the region. We're talking about a total project award of around $485 billion. 51% of this is in Saudi Arabia. Saudi and UAE together account for 85% of the total projects backlog in the region. This massive backlog was accumulated over the last 3 years only. And hence, we need to put a realistic assumption as to the pace of execution given the funding challenges. And on the funding side, we will talk about oil prices. Our in-house view in EFGRMS, we're not very inspired by the outlook for oil prices given the risk of oversupply outside OPEC and given the subdued growth in China, the trade tensions, and everything that is happening right now could actually mean that the downside risk on oil prices is a bit understated. And this will restrict the ability of some countries to maneuver from a pure fiscal standpoint. And if you look at who's exposed to this, I think from a pure funding, pure fiscal standpoint, Saudi Arabia and Kuwait are the highest exposed, given that both countries are running a budget break-even higher than $80. In the case of Saudi, it's close to $90. As we speak, the budget deficit is around 2.3%. Lower oil prices will also pressure the fiscal position as well. Also, the cost of growth in terms of the current account, there is always a cost of growth in terms of the savings, the typical current account balance that gets pressured by oil prices and also by the imports and remittances and everything that is related to growth. Growth has a cost, and this has to be modeled. And I'm talking here about a pure fiscal stance. Of course, if you talk about the external reserves, this is very massive, and it's big enough to ensure the economic stability in both countries. Outside of Saudi and the UAE, we have, at EFGRMS, we have a bet on Kuwait because we are expecting that the new economic program that will be announced will be a game changer for the country that has long underinvested in infrastructure. And I think this will be a very positive news for the capital markets in general. A lot of opportunities will be there. As far as the other countries, the UAE, Oman, and Qatar have very low budget break-evens. We're talking about 50, 55 on average, and hence the fiscal position is very strong to maneuver any oil price shocks. The top-down funding model needs to be revisited. We are looking forward to see more bottom-up funding model in terms of the growth in private credit, development of the debt capital market, the same way countries have developed the equity side of the equation. This is very important for the efficient utilization of savings and domestic liquidity, given the global challenges that we are seeing, and given the fact that the external reserves are needed pretty much to support currency pegs and also support domestic programs. I don't want to take more time than what is allocated for me. On this, I will conclude my talk. Thank you very much for the attendance, and I wish you all the best in the rest of your program. Thank you very much.
Thank you very much, Ahmed Shamsuddin, for that deep dive into the Middle East's economic potential. We now turn to the evolution of capital flows, a transforming global economy. This sprint builds on the macroeconomics and the regional insights we've discussed, and will examine how sectors are adapting to new economic realities. Please welcome Mr. Raman Subramanian, Managing Director and Global Head of Solutions Research at MSCI.
Good morning, esteemed members of the audience, friends and colleagues. Today, it's my privilege to be here at the Saudi Capital Market Forum to talk about the evolution of capital flows, which have been transformed with the change in the global economy. Over the next 10 minutes, I'm going to embark on a journey where I'll take you from the birth of the global benchmark and the transforming forces of technology, sustainability, and innovation. We look at how global equity portfolio has transformed and its profound impact on countries, sectors, and factors. So about 55 years ago, MSCI launched a global benchmark. This global benchmark today, the All-Country World IMR Index, spans 23 developed market and 24 emerging market, covering 99% of the global opportunity set. It's more about the numbers. It's about providing a transparent methodology which has acted as a guidepost for investors globally. Consider this. Right after the financial crisis, the market capitalization of this benchmark was roughly about $28.5 trillion. Today, the market capitalization represented by this index is close to $87 trillion. This dramatic increase in the market cap at the benchmark also reflects the profound changes in the way the capital has been allocated across different regions and countries. So let's start with countries. The weight of US right after the financial crisis was just over 40%. Today, in the benchmark, the weight of US is around 65%. This shows the changes in the way the people have allocated to the market, especially in the US, and the profound growth in the performance of that market. Now, who are the losers because of increase in the weight of the US within the global benchmark? Developed ex-US has lost weight from about 45% to around 24% today. The biggest loser has been Europe. The Europe's weight within the benchmark has halved from about close to 26% to about 13% today. And Japan, its weight has also receded to close to 5% today in the benchmark. But not everyone was the losers in the benchmark. When you look at just the GCC market, its weight has increased from the beginning when the market was introduced in 2014 to today. It roughly represents about 70 basis points in the benchmark. But digging deeper into the MSCI Emerging Market Index, which is a subset of the ACWI IMI Index, you see the weight of GCC has gone from about 1.5% to about 7% today. That reflects about close to about $30 billion of passive exposure by investors globally into the region. And even considering the performance of this benchmark related to emerging market index, it has provided about 200 basis points of outperformance in the last decade or so. So clearly, investors have gravitated towards market, which has provided much more resilience and newer opportunity set, and the newer IPOs which are coming in the market has been a focus for many of the global investors. Moving on to sectors, at the sector stage, we see that a profound shift has taken place in the way the sector dynamics are in the benchmark weights. Just looking at the technology, the weight of technology was close to about 12% around after the financial crisis. Now it stands around close to 25%. But if you include the AI adjacent sectors like communication services, if you add those weight into the benchmark, you can see that the weight of the whole technology-oriented industry is more than 30% today. But then who are the losers? The biggest losers has been the two bellwether sectors in the past. The first is financials. The weight of financials has dropped from about 20% to 16% today in the benchmark. But the biggest headwind has come for energy sector. The weight of energy sector has dropped more than 700 basis points, or 7% in the benchmark. It stands around 4% today in the ACWI benchmark. Clearly, the green initiatives and the move towards renewables has really impacted the way investors are allocating to the energy sector. Now, let's look at it from the angle of the factor performance, because that's the third dimension which affects how the equity markets and capital flows have evolved. When you look at the factor performance, traditional factors like value has really underperformed compared to the global benchmark. It has underperformed by about 400 basis points. But two factors, quality and momentum, has done extremely well related to global index. Quality has outperformed by more than 300 basis points, and momentum has outperformed by more than 200 basis points. In fact, last year, momentum outperformed all the other factors that drive the performance of the markets. So clearly, there is a aptitude and people have moved towards more of factor-based allocation because of the relative outperformance of some of the factors within the global benchmark. Now, because one of the biggest transformations that we observed in the global capital market is the move toward ESG and sustainable investing. Today, about $1 trillion is benchmarked to MSCI ESG and climate benchmarks. And that's a very large number compared to where it was. It is growing at a compounded annual rate of close to 17% year after year for the last 3 years. And when you look at the number of ETFs which have been launched tracking ESG and climate, we see there are about more than 500 ETFs which are available globally tracking ESG and climate indexes. And together, they get an exposure of close to $290 billion. In 2015, when you look at that number was roughly about 30 ETFs with just $2 billion. So $2 billion to $290 billion in this ESG and climate ETF. The larger major transformation which is taking place is on mega trends. There are 4 big mega trends which are happening in the marketplace, and they are impacting the economy. The one is around technology transformation. The second is around health and healthcare. The third one is around environment and resources. And finally, the fourth one is society and lifestyle. So these are creating an opportunity around theme-based investing, but it's less about chasing the money. It's more about the impact they're going to make in the benchmark for decades to come. And many of those companies which are exposed to the themes, and many of them are in the region in GCC itself, they're going to transform how the GCC index or how the ACWI IMI index, which is the global index, will be in changing over the next maybe 10 to 15 years. So in summary, I would say that the whole capital market evolution or capital flow evolution has been one of a very dynamic nature. It has impacted the way the country weights. It has also driven by what is happening in the sectors, how factors have played out, how ESG and thematic indices have increased. So as they say in life, the only thing which is constant is change. So thank you for joining me in the journey today.
Thank you very much, Mr. Raman, for those really thought-provoking insights. Our next sprint explores the transformative role of commodities in shaping the GCC's economic growth and capital markets. To lead this discussion, please join me in welcoming Mr. Russell Robertson, who is the Chief Commercial Officer at Gulf Mercantile Exchange.
Good morning. Thank you for the honor of coming to Saudi Capital Markets Forum, and to everyone here who's joining us. It's a very good event, and the hall is massive. A little intro. So my name is Russell Robertson. I'm the Chief Commercial Officer for the Gulf Mercantile Exchange. We are a Dubai headquartered business that has recently been acquired by the Saudi Tadawul Group. So our business historically has been around since 2006. And we are a joint venture between the Oman Investment Fund, Dubai Holdings, and a company called the CME Group, which is the largest derivatives exchange in the world. They have been managing derivative contracts since 1848, where the world is looking to find prices for commodities, and in those days it was things like eggs and butter. That's an important thing to think about, because why was that in Chicago? Why Chicago Board of Trade? Geography, transport systems, and very much an important fact to what we see happening here in the GCC, and particularly in Saudi. When you look at what we're doing now, in 2024, the Saudi Tadawul Group took a significant investment into our exchange with the ultimate goal to build commodity markets here in the region. Now, that sounds like something that you all probably think would exist, but Saudi is one of the only G20 countries not to have its own commodity market. So this is something that we'll be looking to do. It's a very significant part of strategy. Pillar 3 is called Global Commodities as part of the SDG international strategy. Within that, we look at things like how do we create valuations of MENA commodities within the region? How do we create a trading venue with international access? These are all parts of SDG's Pillar 3 strategy. Aside to that, when you think about Vision 2030, the strategy there, building advanced, internationally direct, accessible financial capital markets. Again, something very key to what we'll be working on here as part of the GME. So, our history is oil. We are an oil derivative market. Oil markets have been around, obviously, for a long time. It's nothing that's unusual to anyone here in this room. The other side of that is what we call the derivative market, or the secondary market. And this is where we talk about the concept of a futures transaction. Now, in the region, futures are not unknown. However, most people look at equities as a particular index and how they trade secondary to their cash stocks and things like that. However, we look at commodities. Commodities are huge amounts of flow moving around the world, imports and exports between producers and end users for every different asset class you can think of. Our expertise has been in oil, and this has been a very important thing to think about. So in 2006, when we were started between the Oman Investment Fund and the CME Group ultimately, it seemed crazy to think, but even in those days, if you bought oil from a producer in the Middle East, you didn't actually know what you paid for that until it hit your boat, maybe 45, maybe 60 days later. So the concept of a Middle East exchange offering a price that you can manage your price volatility in the future was very, very relevant. And it's actually a very trailblazing thing. Nowadays, that's a very obvious concept, and we all know that we can look on the screen just outside, there's a direct FN. You can see the price of commodities, you can see the price of equities. So a futures contract is ultimately a buyer and a seller looking to set the price of something at a place in a future date. So with that expertise of creating that, we've now built what's called a benchmark. A benchmark is where Middle East national oil companies utilize the price that we create on our exchange every day by bringing together all of the world's biggest oil traders into one place. Now that price, you will all know that price, it's called the official selling price of oil. You see it every month when Aramco announce their pricing. They use our price along with Oman, Dubai, Bahrain, and Kuwait. They take the GME price every day to manage the price of their exports to the east of Suez, which is ultimately Asia, and most often is China too. But that is a key part of what we do. So when we think about that and how we bring these marketplaces together, that creates significant additional value to the producers. But it also creates an additional layer of protection and trust and confidence to the end user. So someone who buys oil is ultimately a feedstock to a refinery, and then that leads to production of things like gasoline and diesel, which also has a price that these people have to manage. So that process is called risk management, and this is where derivatives really do come into play. If you think back to 1848, when the farmers were looking at how do they manage the price of the wheat that's going to come out the ground in 6 months, it's exactly the same principle. So now we think about Saudi. What is the potential opportunity? G20 nations, no commodities market, yet one of the richest resource countries in the world. So with Vision 2030, moving away from hydrocarbons, the current target is 50% by 2030. Last year, Saudi's already reached 19%. It's a huge change already. But how do we get Saudi to have local pricing? We call it pricing power. Power of the price owned by you for your commodities at the point of production or even the point of consumption. So there's many different things we're looking at the moment, particularly in ferrous metals. There's huge amounts of imports and exports, very similar to the oil markets coming between China and India, South America, back into Riyadh. And if you think of the GCC and Saudi in general, this goes back to the geography question we talked about earlier, and why Chicago? The railroads. Why the GCC? It's a huge center point for the transition of movement of products, assets, and commodities. So why is there not a price for the region? So this is what we are focusing very much on over the next year or two to try and create that regional pricing power and develop products which have real-world solutions. So this is not an easy task. The futurization of these products is difficult. It requires collaboration amongst corporates, producers, consumers. It also requires regulatory markets. It requires trust, and it requires access and technology innovation. These are all things we've done before, and this is all things that we believe Saudi has a great opportunity to now to build this GCC region. In the oil markets, 51% growth just this year in derivative markets, just in the oil space. That's 4 products that we're talking about, but that's still a small number versus international growth in other products. So when we look at something like Chinese markets, they're trading 35 million contracts a month. That's a huge amount of volume, and there's no reason why Saudi or the GCC should be pricing their assets in London or in Chicago, you know, or even Asia for that matter when it comes to refined products. These prices should be created here. And that just needs a commodities hub based in the region where buyers and sellers come to transact at a price for a commodity at a particular point and place in the region. We strongly believe that the ability is here. STG had taken a significant investment in us to do so for Pillar 3, global commodities, and enhancing the capital markets here in the region. So very interesting and a lot to look at. There's ferrous metals, commodity markets, there's huge amounts of wheat and soybean oils, steel, iron ore, aluminium, the numbers go on. And all of these can create their own individual markets that all require very specific contract specification depending on the product that you're buying and selling. So ultimately, this is something that we'll be looking at. And moving into 2030, it's very much a vision that we share. You can see it when you come into country. The enthusiasm is fantastic, and we hope to ultimately work with you all together, and we invite you to come on the journey to 2030 and to help us build these markets and become and be our partners and collaborate on how we can create this commodity infrastructure here in the region. Thank you.
That was Mr. Russell Robinson, who's the Chief Commercial Officer at Gulf Mercantile Exchange. Thank you very much for those words. Our next sprint explores the transformative role of commodities in shaping the GCC's economic growth and capital markets. To lead this discussion, we now move on to our next session. I was on the wrong page, which will be moderated by Mr. Peter Niklavich, Institutional Client Relations Head at the Saudi Exchange. This rapid-fire Q&A session features economists and financial leaders from globally leading entities who will quickly offer their expertise on navigating the new economic frontiers. And just as we are setting up the stage, which I believe we are almost there. If you could please join me in welcoming Mr. Peter Niklavich to the stage. Thank you.
Assalamu alaikum, marhaba, good morning everybody. The panel has been, or the sprint has been already introduced, but I guess just in the briefest of nutshell, 4 main topics: economics, trends, IPOs, and capital flows. The first speaker for the sprint, we have Mrs. Natasha Sanders, co-head of ECM origination EMEA at Morgan Stanley. Natasha, please.
Hello. Thank you.
So Natasha, we're going to cover a couple of themes today, so around global economic trends and their impact on MENA, and any kind of specific MENA trends that you'd like to reference. So straight to it. Do you think there are any new economic policies from the US, which have come out, which will impact global markets in 2025?
So yes, policy will definitely impact global markets, mainly because it will potentially impact the growth across the different regions in the medium term. However, if you look at the short term, the most immediate impact is this uncertainty delaying the interest rate cutting cycle. And I think that's something corporates and investors need to be able to navigate during this year.
Okay, you mentioned interest rates. Any key takeaways from the Fed messages, expectations around the dollar for this year?
So I think if you look at the January FOMC meeting, the message was clear that the Fed is confident that disinflation continues, but they were also signaling that they're not in a rush to cut. Currently, bond markets, as many of you know, is pricing one rate cut, potentially June this year. But obviously, a lot will depend on how inflation develops over the coming months.
Okay, and volatility. Biggest implication of recent volatility in the dollar, would you say?
Implication of dollar volatility, it's positive for oil economies. It's been more challenging for the emerging markets. But I think as we see dollar weakened over the year, potentially, from Saudi point of view, given big share and big growth in non-oil sectors, it still will be well supported.
Okay, and now moving maybe to sort of MENA-specific trends, if I can. Do you see any kind of direct correlation between the short-term growth short-term growth in Saudi Arabia and capital inflows?
So we actually see economy being very resilient, and if you look at non-oil and all commodities sectors, the growth has been very steady and actually very consistent. So we don't see as much volatility. I think it's also important to highlight that the effective use of policy tools means that currently there's less sensitivity to oil prices compared to what we've seen in the past.
Okay.
And then if you looking through that, how it's reflected in investor behavior, you definitely see that confidence reflected in continued FDI inflows across different sectors, but also if you look at what I follow more closely, public markets, which is very liquid asset class, investors can move the capital freely and easily. We have seen continued inflows every year. Last year we've seen from QFI over $6 billion. We believe it will continue this year as well. So that trend is very well supported. On equities also well supported by ample capacity for the index funds to increase their positioning.
Okay, we've talked about the oil economy, oil prices. What would you say the biggest measure of economic diversification?
A few factors. Share of private non-oil sectors has grown to 50% of GDP compared to 20 years ago, so that's a huge jump. We have also seen increased diversification of labor force, the diversification of funding with increase in borrowing. But also if you look at capital markets, you see more sectors represented in the IPOs and more companies being able to raise capital privately from foreign sources like private equities, growth funds, infrastructure funds. So that's all the proof that Vision 2030 is working and delivering results.
Okay, and on the potential risk side of things, any particular kind of global risks that could hit the Saudi market hardest? Is it geopolitics? Is it oil price? What do you think?
I still think we're watching interest rates because I think oil is well supported here, so it's really potentially high interest rates for longer may impact slightly consumer cycle, but again, given the strong fundamentals, we're actually quite positive on the outlook.
Natasha, thank you.
Thank you.
Thank you. So I'd like to welcome the second speaker, the second part of the sprint, Mr. Charles-Henri Gauthier, Managing Director at Lazard.
Hello there.
Great. Charles-Henri, so if we start maybe from an ECM perspective, ECM trends. Okay, so drawing on your vast experience advising over hundreds of equity transactions, for those that maybe don't know, why is Saudi Arabia seeing a surge in IPO activity?
I think it's really the decisive action taken by the government here, quite frankly, to align not only market regulations on international practice, which made global investors very comfortable deploying money in the region, but also all the technicalities of market functions that were there again aligned with best world practice. And then, because you need to start with one transaction, the government there again led the way with the emblematic, still unmatched IPO of Aramco, which demonstrated to the world the depth and liquidity of the market. And now, with the entrance of the kingdom and the markets of the kingdom into the global indices, MSCI, Russell, there again, it just provides more and more liquidity, more comfort to global investors that they can deploy money, trade in and out of securities in the kingdom, and it's just a virtuous circle that's established itself.
Okay. And in terms of market volatility, is it the new norm?
Yeah, so that's a funny question because obviously we have all watched and followed the results of tariffs announcements a fortnight ago. It did have an impact on what we look as market professional, which is the VIX, what people refer to as the fear gauge on Wall Street. That measure on Monday 2 weeks ago only reached 18%, which is way below historical averages. And actually, I checked on Friday, and it was back down to 15, which is even lower. That being said, markets hate uncertainty, as we all know. And when you look at the secondary derivative of that VIX index, the VVIX, which is the expectations of how much the VIX is going to surge, that is actually way above historical averages.
Right.
So what it tells you is that while historically, when we look at spikes in volatility, it's usually induced by major financial crises, recessions. Here, it's almost volatility by design, which is somewhat awkward. Not in the figures of volatility yet, but certainly in the minds of investors who are expecting a surge in volatility.
Okay, interesting. Maybe something a little bit more ECM focused, looking at listed or potential issuers. What would you say the most exciting equity opportunities in the kingdom are?
Yeah, sure. Just to come back maybe with a few figures, I think it's critical to recognize the importance now of the region in world capital markets. If you look at EMEA, the Middle East represented in 23 about 13 to 14% of the overall volume. Last year, IPOs were 24% for the region. So it's just increasing, and the trend is set to continue. Just for the kingdom, we're talking of just shy of $4 billion worth of dollars being raised in IPOs, which is a third of the 23% of the overall EMEA region volumes. So very important figures here that we're talking about. Now, I don't want to single out a sector or a company. I think that people, if they want to do stock picking, need to look at the very ambitious Vision 2030 program to identify which sectors are going to be the most beneficiaries of the trend. But what I would highlight are two key trends in my view. The first one is diversification, sector diversification. It's not anymore about oil and gas. It's about a very large range of sectors. Actually, the first sector last year in terms of IPOs in the kingdom, there again, was healthcare, not oil and gas by any means.
Okay, healthcare.
And then, you know, fintech, the IR has been on the road with its IPO, looks like a resounding success. So, you know, as the economy is expanding, it's broadening and it's diversifying. The second trend I would highlight is product diversification. There again, I've been talking a lot about IPOs, but the largest transaction out of the kingdom was a fully marketed offering, again from Aramco. But that, in my view, are the two things to watch for this year. Product diversification, sector diversification.
Okay. And maybe probably the final question, just in terms of time. What would you say the single most important thing a potential issuer looking to attract foreign investors should consider ahead of a listing?
It's all about confidence. So make sure that your risk monitoring, reporting systems are all in place, engage early with investors, and build that trust over time.
Merci beaucoup.
Merci à vous.
Thank you,
Thank you.
Thank you. Thank you. So our third speaker will be Mr. Faisal Al-Azma, Head of Samir Equity Research at Goldman Sachs. Faisal. Faisal, thank you. So again, getting straight to it, a little bit maybe macro to begin with. The 2025 outlook, what are Goldman Sachs expectations in terms of rate cuts for 2025?
So obviously, if you've looked at last year, we've had a few. When you think about 2025, Goldman expects a rate cut in the second quarter of this year and another one in the fourth quarter of this year. And then as we look at 2026, we expect another cut next year as well, in the second quarter. Okay.
And will oil prices continue to play the same pivotal role in MENA's performance?
So if you look at generally GCC economic diversification, it is investment heavy. And so when you think about the investments that are likely or required to be undertaken, that will require quite a lot of funding, which means oil will continue to play an important role. Now, having said that, if you look at where we are today versus where we were, you've had structural reforms, you've had meaningful amount of oil or revenue diversification. So that reduces the sensitivity to oil prices for sure, versus where we were, say, 5 years ago.
Okay, compared to 5 years ago. And what do you see that the biggest risks are for the MENA economies this year?
When you think about if you take a step back and you say, okay, what are the key risks in terms of how that impacts whether the economies or the equity markets? I would say from a macro perspective, oil prices, and then you have the rate cycle. And then when you think about the politics, is also quite an important factor. So you are seeing, rising risk around trade issues and tariffs. So generally, we are an export-dependent economies, so that could have some form of a risk factor as well.
Okay. And what is the single most significant way fiscal policy in the region may or will impact equity markets?
So if you think about earnings expectations, particularly when it comes to the non-oil and private sector in the region, it is dependent on one way or another on government spending and effectively economic activity or fiscal spending. As I just mentioned, obviously lower oil prices do result in one way or another in slower activity. And so that could result in earnings revisions. Earnings revisions tend to impact valuations across different sectors, which kind of explains the historical correlation that exists between oil prices and market performance.
Okay, you mentioned different sectors. Which sector in MENA, or sectors in MENA, will lead growth in 2025? Crystal ball, house view?
So our kind of EM strategist team is actually quite positive on the region. We've published a number of year-ahead reports. So particularly Saudi, we are overweight. We're also constructive on a few other GCC markets. When we look at overall EPS growth for the year, we're modeling around 14%, largely coming from the financial space and the material space. We also see attractive opportunities in the real estate sector, particularly in the UAE. Also, the energy space will continue to play quite a big role when it comes to growth, particularly regulated energy names, not just in Saudi, but also broader GCC.
Okay, so you've named a couple of sectors there already. So in terms of the GCC CapEx supercycle, if we can just touch on that a little bit, do you see the GCC CapEx supercycle continuing well beyond 2030? It's sort of a yes or no question, but I'll allow you with time, just maybe a sentence or two about that.
So obviously we've written extensively on the GCC CapEx wave series. If I think about the next 5 years, it's going to be investment heavy, and that's not just the giga projects that you hear about, but it's also other sectors. If you think beyond 2030, you have projects with hard deadlines. You have the World Cup, but I think also if you think about 2040, you have a lot of spending that will take place on decarbonization, and that will require scaling up in technology and effectively heavy investment in renewables.
Okay. You touched on a little bit of it, but maybe we can expand it even more. So 2-3 sectors that you think will reap the most benefits from the super cycle?
So if you think about the qualitative themes that are likely to shape our performance, we think the CapEx super cycle is important, and then you have all the socioeconomic reforms.
Yep.
And within that, we think the enablers are quite important. So you have the financial space that's going to enable a lot of this. You have a lot of names when it comes to the contracting and the drilling space that will enable a lot of this. And so within that, we do like the financial space. We have a number of buy-rated names we recently initiated on that sector. We also have a number of energy names that are likely to realize significant growth and be part of that CapEx super cycle.
Okay, and then again, I've got to ask on the other side, are there any constraints around the super cycle?
I think when we speak to investors, the focus in many cases was about liquidity in certain cases, but I think it's not just liquidity; it's just capacity in total. It's not just Saudi; it's also the UAE. It's Qatar. Every other country has significant investments that they're undertaking over the next 5 years. So you have labor constraints, you have construction constraints. So as you think about all of that, that could effectively limit or result in some delays in certain periods.
Okay. Thank you.
Thank you very much.
Thank you so much. Thank you, Faisal.
Thank you.
Michael. And if we bring on the final speaker for today's sprint, or sprint number 5, is Mr. Shak Iqbal, Head of Samia Equity Sales at JP Morgan. Shak. Shak, the focus for the next, few minutes with you is going to be more around, capital flows, capital trends. So let's get straight to it. Who are the key investors driving Saudi capital market inflows?
Thanks, Peter. That's an interesting question, because for many years, we've all awaited the arrival of global emerging market funds. Some of my colleagues talked about index inclusion, and that's been part of the driver that's attracted capital here. But interestingly, if you look at trends last year, GEM funds lost $42 billion in assets, whereas Saudi Arabia attracted $9 billion of inflows. So while we started to see the structural underweight change from GEM funds, incrementally, we've also started to see a very different type of investor emerge. Obviously, you have the growth of regional asset managers. That's been one driver. The growth of the domestic asset management industry. That's been another driver. But if you look at foreign investors, even the type of equity investor has changed in that you have the likes of equity long-short funds, your hedge funds. You have index ARB funds that started investing in regional markets pre-MSCI, pre-FTSE inclusion, but continue to traffic in Saudi. You have ECM-focused funds, obviously those that are very focused on IPOs and transactions around ABBs. And then you've really seen the rise of quant funds. Quant funds have various strategies, but effectively drive a lot of volume in markets, and they've been the biggest entrant. And I think part of that has to go hand in hand with the development on the technology side that's happened in Saudi, the development of legislation around the exchange, et cetera, that's enabled new types of investors to enter the market.
Okay. I can concur, speaking to a lot of those clients as well from the exchange's perspective. But in one sentence, why should global investors focus, prioritize the kingdom?
Well, we've all talked about top-down structural growth. a strong young demographic that drives consumption, and of course a pegged currency.
IPOs. Charles-Henri mentioned this a little bit earlier, but if we focus on that just a little bit more. MENA IPOs outperforming global peers? Yes, no, theoretically, but you've got time to take a couple of sentences if you wish.
So I'll skip the yes-no part of it and go with the sometimes. And I think historically what we've seen over the last few years is that state-owned enterprises, government-backed IPOs have historically done very well.
Yep.
I think if you look at the private sector, et cetera, where the pipeline is growing and you're seeing more transactions, I think investors are a bit more discerning around valuations, a bit more around deal sizing, around fund flows as well. So I think it's a bit of a mixed bag, but that's healthy for the market as well. You can't have an expectation that all IPOs go up all the time. And I think we're going through that phase. And also, as my colleague mentioned, the amount of ECM activity we're seeing in the MENA region and in Saudi Arabia dwarfs what we're seeing in other parts of EM and even globally.
Okay. I mean, I think I know the answer to the question, but why do you think international investors are showing greater interest? Are they showing greater interest in MENA IPOs?
No, absolutely. I mean, you'd like to think everyone's coming here because these IPOs tend to perform, which they do, as I mentioned, although there is some differentiation there. But I think it's also the fact that you basically have structural underweight positions for global investors in the region. And so when you look at the ability to express that and to close that underweight, ECM activity and IPOs are the best way to do so. And also what we're seeing on the IPO side is that you're actually seeing a representation of new economy companies. You're seeing tech companies list. You're seeing consumer names that we haven't seen before, healthcare names, real estate. So for someone who's actually trying to close that structural underweight or looking for idiosyncratic opportunities which were not previously available in the market, the IPOs is a great way to get that exposure. And I think we'll continue to see that, especially as we see new sectors represented in the IPO pipeline.
Is there anything that the government can do to support MENA, Saudi IPOs, MENA IPOs?
Yeah, absolutely. I think the government's led from the top in MENA and particularly Saudi as well. So obviously the thing that needs to continue is the continuation of listing state-owned enterprises and continue to privatize a lot of sectors, which we've seen. That can be in the form of new IPOs, that can be in the form of follow-ons as well. And obviously at reasonable valuations so that you can get greater participation and performance as well, which we've generally seen from government entities in the region. And on the flip side, I think it goes back to what one of my colleagues just mentioned as well, is the continuous development of legislation as well. And that comes in twofold. One, it has to do more with access to investors and the ability of investors to be able to participate in different types of transactions and really developing the types of transaction you can do in ECM as well. Beyond just IPOs and ABBs, you can have rights issues, you can have share buybacks, et cetera. So continue to develop the capital market on that front. Okay. And then also on the technology side as well. You'd think that technology and IPOs and ECM don't go along together, but they actually do, because a lot of the way investors can access IPOs, that they can trade them post, market making activity. You can talk about stabilization agents, as we've seen in other markets globally. All of that comes to play as part of the ECM ecosystem.
Yeah. So on to key questions in the eyes of maybe global investors for MENA. What would you say the number one or two investor concerns are when it comes to MENA transactions, MENA markets?
MENA markets. I mean, the cliche answer is obviously always oil, but I think it's beyond that right now. One of my colleagues also alluded to rates. It's really, I think, the implication of geopolitical trends, and not so much in MENA, but on the other side of the pond, more so in the US and globally. That'll obviously have an implication on global trade. It'll have an implication on energy prices and also on global economic growth. Yep. And I think that drives risk appetite as well for a lot of investors. I think getting a bit more micro on the MENA side of things, a lot of investors are also focused on earnings realization. And what I really mean by that is when we look at valuations in the region, sometimes some certain sectors trade at historically high multiples versus their averages. Sometimes they trade higher than global peers. But as long as we're getting earnings delivery from corporates, that's fine. The biggest concern is that you may have that earnings momentum slow down in some sectors, but that will then drive volatility and performance as well.
Okay, right. And are there any particular sectors, maybe 3 sectors in MENA, which you think are gaining the most traction from global investors?
I think going back to my point on why one should look at Saudi and MENA, right? So if you want to play the consumer space, then obviously there's a lot of new opportunities in the new economy stocks within tech and consumer discretionary. Travel and tourism is obviously a big top-down drive in this country. And I think investors are trying to get more and more exposure into that through the public equity markets. And then lastly, of course, if you really go top down, it's the giga projects, right? To the extent that you can get access to various part of the giga projects through the public markets, I think there's a lot of investor appetite around that as well.
Okay. And final question from me. What do you think that MENA growth will remain stable into 2025?
It's a tough question. I think what I can say is that the top-down drive that we've talked about will remain there. The private sector participation on the back will remain. I don't think the consumption story in MENA is going to change as well. I think what we need to be more wary of is obviously exogenous factors, potential exogenous shocks on the political side, global trade, tariffs, energy prices. That's what we may have to import as potential sources of volatility and risk. But as far as the domestic drive and the bottoms up from here, I think those trends will continue.
Okay, perfect. Ladies and gentlemen, Shaq, thank you for your attention. Shukran. I hope it's been useful, and masalama. Thank you.
Thank you.
Thank you very much, Peter, and the esteemed four panelists for sharing such valuable insights. We now move on to our final sprint, which explores financial strategies for driving green growth and structuring large-scale renewable energy and infrastructure projects, highlighting the role of the capital markets in supporting the Kingdom's energy transformation. Please join me in welcoming Mr. Abdelhamid Al-Mahedib. He is the Chief Financial Officer at Aqua Power.
السلام عليكم جميعا صبحكم الله بالخير. Maybe I think I have around 15 minutes, so I will try to make it a bit of interesting, sharing with you a few stories and few facts on the journey that we have been taking as Aqua Power in the last 20 years. So actually we have started back when it comes to the energy transition story. We came when Vision 2030 was announced back in 2016. At that time, Saudi had zero generation when it comes to gigawatt capacity on the renewable side. And there was a big ambition to have this green desert transformation into the kingdom, where one of the big pillars of the Vision 2030 was economy diversification, but also a big part of it is the energy transition and moving to sustainable energy. And there was a big ambition there where we said, or the vision said, that 50% of the total capacity in Saudi has to be coming from renewables, where the other 50% has to come from clean conventional power plants. And that was a big ambition at that time, given where we are at when it comes to the diversification of the power generation on 2016. Just to put that into perspective, when we said 50% has to come from renewable at that time, you're talking about 60 gigawatt. That is almost double the installed capacity of renewables at a country like UK at that time. So it was a big ambitious. We were actually very proud as Aqua Power to take the first step into that energy transition, and we did Sikaka, which used to be the first 300 megawatt of PV, which came operational in 2020. And this was really the anchor step when it comes to the energy transition moment in Saudi Arabia. Thereafter, I think fast forward, we have done multiple projects. We're talking about the whole green shoring that His Excellency Khalid Al-Falih talked about it multiple times in this forum. And we did the green hydrogen project that is actually moving close to 4.2 gigawatt of power, green power, into transforming that into green hydrogen and finally into green ammonia for shipping from NEOM. This is a project that not on paper anymore. We have achieved the financial close 2 years ago, or let's say it's last year, and today is around 70% progress when it comes to the execution. Similarly, when we come about sustainability and having a clear setup for a destination that has a zero emission, the Red Sea, we take the pride that doing the full infrastructure of that specific city. Today, as we speak, alhamdulillah, we as Aqua have already delivered 20 gigawatt of renewable energy in Saudi between project under operation and project under construction. At the same time, we are in talks to complete another 15 gigawatt, which is what we call it in advanced development. So that, if you put it into perspective, this is around 35 giga, almost 50% of the original target of Saudi Arabia. Now, when you talk about the ambitious, and as we are getting close to the ambitious, just like any other KPI, where the moment you get close to it, you know, it's just step up. And the same thing happening to the energy renewable targets. So it's not anymore 60 gigawatts that we are targeting for Vision 2030. Actually, that number has gone from 60 gigawatt to 130 gigawatt based on demand at that time, but that is the new ambition. So almost more than double of what has been targeted earlier. I remember myself actually at that time, back in 2016, when they told us, and giving our experience in the market internationally, because Aquapower already operating in 13 countries, I said, this is a dream. You cannot get to 60 gigawatt by 2030. But alhamdulillah, I think with the support of multiple stakeholders, including His Royal Highness Mr. Abdulaziz bin Salman and the Ministry of Energy, that dream is coming to reality. And now the number is even going higher than that, to 130 gigawatt. This is definitely one part of it, and it's not only for the generation of Saudi, but also for the green shoring objectives that we are also working in as Aquapower and Power Export as well. I would like to move to the financing part of it, and this is also a big journey for such a large infrastructure, where the minute you start thinking about an infrastructure of the renewables and also water desalination, a big part of it comes from financing. If you just count just 2 years of financing, we have been able to secure almost 21 project closure, equivalent to 95 billion Saudi riyal. That's the quantum of financing that is required for just a simple 2 years. And if you just want to put this into perspective, the federal budget of a country like UAE is less than that. If you take the average for the last 5 years of borrowing of the Saudi government, this number is almost 50% of that number. So it's a massive financing and capital-intensive requirement for such an energy transition targets that we are targeting within the kingdom. We have been able actually to succeed in multiple fronts, not only bringing project financing, but also targeting other KPIs within the Vision 2030. So when you talk about bringing an external funding together with the FDI, we have been able to bring in around 18 billion Saudi riyal between FDIs and project financing coming through different level of financing, whether it is coming from purely commercial financing, but also an ECA cover projects financing as well. Last year, we have secured 2.2 billion riyal of ECA funding from Uli Hermes, coming fully covered by international finance. And as we speak today, we have around 5 billion riyal of ECA from Asian coverage that will hopefully close in the next 2 months. I think this also meets the full ecosystem targets, where we have mentioned earlier that to meet such a massive target of energy transition, you need to participate and bring in not only the local Saudi institutions, but also the international financing and FDIs. There is opportunities for more, and definitely today we are working with a lot of multiple ECAs from Japan, China, and others for the new projects coming up in the market. Our participation with the locals has been also very engaging, not only with the existing commercial banks and SIDF and others, but also, alhamdulillah, we have been able to successfully build up the relationship with the newly established institutions. For example, in the new green hydrogen, we have been able to bring in the new program of Sharik, together with also the new established fund Infra. We have been also working very strongly with the Saudi Exim, which was also established a few years ago. Alhamdulillah, we have secured with them a project for the first 100% green water coming up from Dubai. When I say green water, I mean a project of water desalination that depends 100% from green energy. So it's a fully sustainable project coming from green sources. That was backed by Saudi Exim, and now we are in talks with them for additional projects. So we have been able to have a hybrid and co-partnership not only with the international market, but also with the local Saudi development institutions. When it comes to, if you put all that together and you think about it, how we're going for a growth perspective, alhamdulillah, I think since IPO, we have been able to grow our bottom line by around 48% for the last 3 years, excluding 2024, which we are planning to announce, inshallah, next week. We have been able to upfront or double up our equity investment in the last 3 years. So I remember at the time of the IPO, we have put a target of investing $1.2 billion every year as an equity investment. Alhamdulillah, we have increased that to around 2.1 to 2.4 billion dollar, and we're going to continue to do that in the next few years. We have a big ambitions. We want to triple our capacity under management by 2030. That means more or less is actually our target is to have $250 billion assets under management by 2030. And if you just want to put this into a perspective of peers in the market, we are talking about ACWA Power being one of the top 3 global energy companies when it comes to renewable energy worldwide. We will continue to be the world's largest water desalination company, and we will be one of the top 3 companies when it comes to the green hydrogen export. The pipeline is just massive, and you cannot imagine how big is the pipeline. I remember a few years ago, we have 10 to 20 projects and an active bids in development. Today, we have around 72 active bids as we speak. When it comes to the execution, you cannot believe it. Actually, we have 25 gigawatt of power under construction as we speak today. This is equivalent to 10 years of construction of when ACWA Power, at 2012. Just to give you a perspective of this 25 gigawatt, it's almost equivalent to 100 billion Saudi riyal. And basically, we are building a capacity that is enough for countries like Morocco or like Kuwait as we speak today. So we have seen a lot of announcements when it comes to the exchange, and a lot of people ask me that why these numbers are not translating into your financials. In reality, there is a massive infrastructure being under construction as we speak today that will come into operation in stages in the next few years. So that's how big is the pipeline from a growth perspective, which is the project under development, but also on the execution, which is 25 gigawatt, equivalent to 100 billion Saudi riyal under construction. When it comes to operation, alhamdulillah, we have been able to deliver an excellent track record when it comes to reliability of supply. Last summer, alhamdulillah, our power availability was around 97%, and our water availability was around 98.5%. So we have been able to deliver consistently when it comes to operating our fleet within the different countries that we are operating in. We had a big part of the innovation, and the innovation does not come only from finance, but also from the technologies that we are evolving in. And I will give you a few examples there. When it comes to water desalination, you need, the biggest cost of operating a water desalination plant is actually the electricity. And in the last 1 decade, we have been able to reduce the water electricity consumption per meter cube by 87%. And just to give you a perspective, 10 years ago, for the same 1 meter cube of water, we are using 87% less power. And this is not only supporting the sustainability, but also the affordability of this water capacity that we have been installing in the market. When it comes to the innovation on the solar, in less than a decade, we've been able to reduce the electricity cost by 82%. This is purely from the generation side. So what used to be costing 5.8 to 6 cents per kilowatt hour, today is costing actually 1.6 cents. And just before COVID, it cost 1 cent per kilowatt hour. So you can imagine how much innovation has came into the power generation as well, and how affordable today the solar for a country like the Saudi. it's not a move just purely because of the sustainability, but also from a cost affordability. Today, Saudi is proud to have the most competitive power generation for both the wind turbines and the power and the solar systems. When it comes to the CSP, which is another technology for the solar, it's called concentrated solar power. We have been able also to deliver around 60% reduction on the price. So what used to cost double digits today is costing 7 cents per kilowatt hour. And basically the benefit of the CSP compared to the typical photovoltaic, it's giving you generation 24/7 because you have installed a big capacity of storage capacity that give you the solar power from the day and the night time. Putting all that into a perspective, and we are actually going for a capital raise, inshallah, right after Ramadan. We are targeting 7.1 billion Saudi riyal to raise. Today, with this remarkable track record that we have been able to deliver, and also with the strong and visible pipeline of growth, we are very confident that this capital raise will be successful for Aquapower and for all stakeholders. With that, keeping in mind the full plan for this capital raise is already deployed in a visible pipeline. We have a target to anchor with PIF and the Ministry of Energy to deliver 70% of the renewables in Saudi. We have kept our leadership position in the last 20 years, and we are targeting to continue with that as we move forward. Thank you very much.
Thank you all for the absolutely fascinating conversation. Ladies and gentlemen, before we start track 2, please stay with us for a special performance by the Saudi Orchestra. Assalamu alaikum wa rahmatullahi wa barakatuh. Ladies and gentlemen, distinguished guests, before we start track 2, please stay with us for a special performance by Toref Orchestra.
الإسلام سيرة الإسلام سيرة الإسلام لا تشبه سيرة روحي وما ملكت يداي فداه وطني الحبيب وهل أحب سواه وطني الذي قد عشت تحت سمائه وهو الذي قد عشت فوق ثراه منذ الطفولة قد عشقت ربوعه إني أحب سهوله ورداه وطني الحبيب وطني الحبيب وهل أحب سواه وطني الحبيب وطني الحبيب وهل أحب سواه أحب سهول الشمال بها ينابع ماء تضاهي الرقى أحب زهور جنوب التي بها كل تل على وثقى وفي الشرق نفض لنا ثروة بها موطني قد سقى واستقى وفي الغرب بيت الإله الحرام ومثوى الرسول رموز التقى وفي قلبه تجدون الرياض كقلب لأعضائه منتقى عشقتك يا موطني فطرة ألست جديرا بأن تعشق بلى بلى
بلى والذي أنشأ الراسيات ومن أمر الشمس أن تشرق
سوف أبي عن بلادي سأرد الدين لن أنساه ما مر الزمان بديرة عالي السحاب نسكن في شم جبالها أطهر ثرى وأغلى تراب تفخر بفعال رجالها
يا بلادي واصلي
والله معاك
واصلي
واحنا وراك
واصلي
والله يحميك يحميك إله العالمين إله العالمين ديرتي كل فخر
كل وطن
كل فخر حدثينا 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 حدثينا
Ladies and gentlemen, that was the Toref Orchestra. Thank you so much for the performance of our national anthem and the specially curated Saudi medley that'll help us celebrate the upcoming Saudi Founding Day on February 22nd. Their music beautifully reflects our rich heritage and captures the vibrant culture of our nation. And now please join me in welcoming Ms. Naifa Ibrahim, co-founder of Atrium Art, to share an overview of her company and to announce a very special program in collaboration with STG.
بسم الله الرحمن الرحيم. Assalamu alaikum wa rahmatullahi wa barakatuh. Your Highnesses, Your Excellencies, and esteemed guests. It is an honor to stand before you today at the Capital Markets Forum, where business leaders, visionaries, and creatives come together to shape the future of Saudi Arabia's evolving landscape. I am Naifa Ibrahim, co-founder of Atrium, a 100% homegrown company dedicated to supporting and elevating the arts through strategic collaborations with both the public and private sectors. At Atrium, we specialize in curated exhibitions, art consultancy, and artist management, working closely with organizations to integrate visionary art that transforms spaces into immersive environments that inspire and engage. We believe that Atrium is more than an expression. It is a catalyst for creativity, a pillar of identity, and a bridge for dialogue. Last year, Atrium and Saudi Tadawul Group signed an MOU to drive initiatives that support the creative sector and expand Saudi Arabia's art ecosystem. We are proud that STG recognizes art not just as an aesthetic, but as a tool for engagement, storytelling, and innovation. Today, I am honored to announce the launch of our first digital art program, empowered by Saudi Tadawul Group. This initiative marks a milestone for both the art and business sectors, merging creativity and technology to explore new opportunities in digital art. This program is designed to empower emerging Saudi artists, equipping them with the skills and platform to thrive in the digital art space. Digital art is reshaping how businesses and institutions engage with creativity, from corporate environments to public installations. Through this program, we are pioneering new ways for businesses and communities to collaborate using digital art to elevate spaces through creativity and innovation. Today, you will witness a glimpse of this program through the screen in front of you, showcasing its potential, through the masterpiece displayed here today, and through the giveaways designed to reflect its essence. This is just the beginning. We look forward to shaping the future of art together. Thank you for your support.
We would continue to elevate the Saudi Capital Market Forum because of the success and the demand required by our client.
This is a very young country that has promised a transformation and is now showing it.
This country, with its leadership, this capital, with its vibrant financial sector that is already strong and going to get stronger, is going to play a big part of bringing global capital into the region.
I think while we're very proud of what we've accomplished, I think we've just gotten started.
It is a privilege to welcome you all in the first international edition of the Capital Market Forum here in the vibrant city of Hong Kong.
In Hong Kong, CMF will take the growing connectivity between our two regions to the next level.
We will continue to work together in the months and years ahead to foster our ties. In fact, I'm delighted to announce that we will be partnering with the London Stock Exchange Group to bring the Capital Markets Forum to London in 2026.
On the global stage, I think Saudi has just done a tremendous job of bringing more and more capabilities into the country to make it so that they are a truly global player in the capital markets.
We move on to track 2, the capital horizons, the Middle East as the new capital market nexus, beginning with an opening address by the chairperson of the Saudi Tadawul Group. Please join me in welcoming Mrs. Sara Al-Sihemi.
Good morning, Your Highnesses, Your Excellencies, distinguished guests, and participants. It's an honor to welcome you all to the Capital Market Forum in its 4th edition, organized under the patronage of His Excellency Mohammed Al-Jad'an, Minister of Finance and Chairman of the Financial Sector Development Program Committee. We are privileged to extend a warm welcome to our esteemed guests and are equally pleased to introduce new international experts to our forum. This event continues to serve as a vital platform for convening the world's foremost financial leaders and decision makers as we collaboratively shape the future trajectory of capital markets on a global scale. CMF continues to bridge East and West, where Saudi Arabia's dynamic capital market converges with global finance and transformative initiatives begin to flourish. It is a premier platform that fosters collaboration and dialogue, positioning itself as the largest capital market event globally. The forum reflects our commitment to strengthening the Saudi capital markets as one of the most dynamic global financial hubs and provides a valuable space for markets participants to exchange insights and expertise. Over the past 3 years, CMF has seen exceptional success, with more than 25,000 meeting requests, over 10,000 attendees, and more than 4,000 investors. CMF serves as a key enabler in reinforcing the Saudi capital markets' position among the world's leading financial markets, in line with the Saudi Vision 2030 and the Financial Sector Development Program. At Saudi Tadawul Group, we are focused on key strategic goals: growing and diversifying our offerings, developing an integrated and connected market, and ensuring a capable and agile infrastructure. Today, the Saudi Exchange is constantly ranked amongst the top 10 globally by market capitalization and has ranked as #1 exchange globally for listings growth, representing a milestone in our efforts towards becoming one of the world's leading financial markets. 2024 was a milestone year for the group and its subsidiaries, with over 50 listings across main market and Numu, greater interest from international investors than ever before, with nearly 4,200 QFIs who account for 25% of our total ECM trades, and a more diverse range of sectors which are truly reflective of the broader national transformation agenda. A strong capital market extends beyond equities. We are making significant strides in our diversification strategy. With over 45,000 investors, our fixed income market is poised to further momentum in 2025, especially in sustainable finance. We are also strengthening our presence in data and innovation and commodity markets through acquisition of Direct FN and a stake in Gulf Mercantile Group. These strategic steps align with our diversification strategy, broadening opportunities and reinforcing our position across multiple financial segments. As we continue to unlock our full potential, CMF presents an ideal platform to explore some key themes. How do we form capital markets that are truly responsive to the needs of rapidly changing global economy? How do we ensure resilience and connectivity with an evolving ecosystem? Through this year's theme, Power Connections, we can delve deeper into these areas with insights from global thought leaders in the financial sector. Moreover, CMF is an opportunity to forge meaningful partnership and spotlight on potential venues through which we can leverage synergies for a long-lasting impact. In closing, I would like to express my heartfelt gratitude to our speakers, partners, and sponsors. Your contributions are as important as ever in making this forum a success. To our participants, thank you for being part of this journey. I'm confident we will uncover insights, forge new collaborations, and leave inspired on what lies ahead.
Thank you, and I wish all of us an insightful and engaging forum.
Thank you very much, Ms. Sara Suhaimi, for such inspirational words. Now on to our first panel discussion in track 2. This panel will be moderated by Mr. Konstantin Kotzias. He's the European Director at Bloomberg. He'll be joined by His Excellency Engineer Khalid Al-Faleh, who's the Minister of Investment in Saudi Arabia, and Baroness Gustafsson of Chairperson OBE, Minister of Investment of the United Kingdom. They'll discuss how key global markets are shaping investment strategies amid global changes. I don't know if I should welcome them yet or if we should just have someone clear the broken glass. I think that'll probably be best before I welcome the guests onto the stage. Let's just take 2 minutes before we welcome them on stage so we can clear the broken glass, please. Okay. So we'll try that again. We have Mr. Konstantin Kotzias, who'll be leading this panel. He'll be accompanied with His Excellency Engineer Khalid Al-Faleh, Minister of Investment of Saudi Arabia, and finally, Baroness Gustafsson of Chairperson OBE, Minister of Investment in the United Kingdom. Thank you.
Well, Your Excellencies, distinguished guests, ladies and gentlemen, fantastic to be back here. Been coming to this and other conferences in the Kingdom for some time here, and this really does have a great vibe to it. I'm Konstantin Kotzias, you just heard, European Director from Bloomberg, and welcome again to today's panel discussion, Capital Crossroads, Connecting Global Investment Hubs. We all know, just have to look at the news, that the global investment landscape is shifting. Geopolitical changes, technological advancements, and evolving trade relationships, all reshaping how and where capital moves. Financial hubs as the transition mechanism, both in the United States, United Kingdom, Saudi Arabia, key in that role, directing those flows and shaping the investment strategies for long-term growth. So to help us explore those dynamics and go deeper on those topics, absolutely delighted and honored to be joined by two distinguished leaders, really important portfolios when we think about those questions. His Excellency Khalid Al-Faleh, Minister of Investment of Saudi Arabia, welcome, Excellency, and Baroness Gustafsson of Chesterton, OBE, and Minister for Investment for the United Kingdom. So both of the top investment ministers right here on stage, and they will share their perspectives on how global capital flows are evolving, their strategies needed to manage those risks and rewards, and what it takes, I think this is fundamentally important, what it takes to build those resilient investment portfolios in today's financial landscape. So with that, let's begin. Let me start, if I may, with just a sort of scene setter, the investment landscape. Excellency, let me start with you, if I may. Given the pace at which geopolitics and global trade relationships are evolving, How is Saudi Arabia navigating those challenges to enhance its position as a pivotal market? And with Minister Gustafsson here, how does the UK fit into that broader picture?
Well, thank you, Constantine, and let me also extend thanks and appreciations and compliments to our hosts, Tadawul, Saras Haimi, thank you very much, Khalid Al-Hassan. A great forum, and I think we see from the list of attendees that have converged on Riyadh the magnet that our capital markets have become, which is, I think, consistent with the magnet that Saudi Arabia has become. I also just want to welcome Her Excellency Baroness Gustafsson. I had the pleasure of meeting her yesterday. We had a great day together, and had the opportunity to congratulate her on her newly assumed position for the first time in government. And as a partner of the UK, I think we are blessed in the investment community to have a Minister of Investment in the United Kingdom, in a government that's going to be with us for the next 5 years, who actually comes from business, who's an investor, and not just any investor, but she's an entrepreneur, and not just any entrepreneur, but a tech entrepreneur who has created a fantastic startup in technology, cybersecurity, and digital space, and knows exactly what investors need and want, and what role governments need to play to make them succeed. So I think that's very much consistent with the themes that we are pushing Saudi Arabia towards as we diversify and as we get the Saudi economy moving into a more sophisticated, tech-centric economy. In terms of how we're navigating the complexities of the world, I think, first of all, this is a business and economic gathering, but one cannot talk about business without knowing the framework that we live on and the platform on which is the political stability and the positioning of the country. And alhamdulillah, the kingdom today is well known as being a connector of East and West, North of South. We have great relationships with all countries of the world, more or less, and all you have to do is look at who are the heads of states who have been in the kingdom recent times to just figure out how strong our relationships were. And we were proud, by the way, Baroness, to host the Honourable Prime Minister of the UK a couple of months ago, and to see quite a few ministers and secretaries from the UK, including yourself, since then. But as I said, this is a business and economic gathering, and capital market is the center and the theme of the forum, but the capital markets really is a reflection of the broader economy. So to answer your question, if you look at the relationships at the macro level that the kingdom has globally, they're quite balanced, they're quite diverse. Our trade, we're one of the largest trading nations in the world, and our trade balance is quite diversified, with India and China playing a key role in both imports from Saudi Arabia as well as exporting their commodities and products. But we continue to trade in a very strong way on goods and services with Western nations as well as other developing countries in the south. If you look at investment of the top of the G20 investors in the Kingdom of Saudi Arabia, 6 of the top 10 are from the East, and the other 4 are Western countries. So the kingdom is quite, licenses and number of investors are here are the same way. If you look at capital flows, also we're seeing great appetite from investors from Asia, in particular to invest in Saudi Arabia. And the interesting thing is, even when Western countries or companies or asset managers lead certain arrangements and capital raises for the kingdom, we see great participation from countries of the East. As an example, BlackRock, I believe, raised 1.2 billion infrastructure fund for the kingdom. The leading LPs with them were CIC of China and the Hong Kong Monetary Authority. Also, the Aramco pipeline deal that was done 3 years ago, there was significant participation from across the world. So the kingdom, in many ways, is a connector, as I mentioned, of owners of capital, of investors from East and West, and hopefully we play a significant role, not to, in terms of bringing investors, bringing companies together, creating a platform for global cooperation and collaboration, which is very much central to how we want to lead going forward, to minimize the fragmentation and tension that seems to have emerged the last few years.
Well, thank you very much indeed for that, Excellency. Let me turn to you, Baroness Gustafsson, and let me echo also His Excellency's comments. Great to have somebody with a business background, an entrepreneurial background. The energy you've brought to the portfolio is noticeable immediately, just as a business person and as a Brit. So thank you for everything that you're doing. The UK has been a long-term hub for global investment. Growth is at the heart of Prime Minister Starmer's mission-driven government. How are we seeking to maintain Britain's position and attractiveness to global investors today, particularly in this changing competitive landscape that His Excellency's just talked about?
Yeah, thank you very much, and thank you also for the warm welcome. I feel like I'm very much amongst friends, and I think that's really a credit to the historic relationship that exists between our two nations. But when I think about the UK in terms of investment, I'll probably answer this as I would with my sort of business brain. And I think to sort of drive investment success, you have to have a bold, ambitious strategy, and you have to write that down. You have to be quite clear about what it is that you want to accomplish and make that available to investors. And we've done that with our modern industrial strategy, laying out those sort of key sectors that we think are going to be really contributing to the growth of the UK, so that the investors can align alongside that and make sure they're supporting that. The other aspect that you need is that capability. So that exists in both terms of the sort of the innovation capability. So we've got some of the best sort of academic institutions in the world with sort of world-class expertise that are going out solving these really complicated world problems. But then also the infrastructure. We have the London Stock Exchange, similar to here, having the facilities available to join investors with opportunities, I think is essential, and the UK does a really good job around that. But it's not enough to sort of do it. You need to be out there talking about it. And we've done things like the International Investment Summit that we held recently. In fact, it was my second day on the job. And we talked about the fact that at that event, we brought together investors, many of whom are in the room today, alongside with those opportunities in London. And on that day, I think we communicated that we raised 63 billion of investment into the UK, which is not bad for the second day on the job. So.
Congratulations.
Thank you very much.
And you're going to take credit for all of the 63 billion. I was at that summit. It was a real success, and thank you for that. So that's set the scene. Let's look forward a little bit, turning back to you, Excellency. You were part of that previous, what I would call that previous era of Saudi finance. Big themes for investors were project finance, natural resources. Looking forward, you've just touched on that a little bit with your tech aspiration and the pivot. For the financiers and owners of capital in the audience, what are the themes they should be really looking at in the kingdom today?
Constantine, being part of the previous era, I feel like the Sphinx, you know. I'm glad I still have my nose, though. But you're right in a sense that there has been a significant shift in the kingdom. I think Vision 2030 was a significant turn in the structure of the Kingdom of Saudi Arabia, economically, socially, and that is reflected also in the capital markets and capital flows within the kingdom and into the kingdom. So in the old days, and again, if we go back and anchor the discussion into the base economy of Saudi Arabia and what it looked like back then, it was very much an oil-centric economy. So a lot of the investments, a lot of the capital raises were for oil and gas, for refineries, for petrochemical plants, and for serving the consumption and the needs of Saudi Arabia. And the government was the big investor, of course. A lot of the infrastructure was financed or enabled by government entities, either directly or indirectly through SOEs. Vision 2030 created a massive shift in the base economy, where we are seeing phenomenal growth in non-oil sectors. And if you look at the last 7-8 years, there have been the normal cyclicality, ups and downs in the oil markets, both in terms of prices, but also in terms of Saudi production, which of course reflects directly into the revenues of the government and balance of pay. But the other sectors and the growth of the non-oil economy has been solid and consistent, 4 to 6% consistent growth of the non-oil economy throughout this period. Sectors that hardly existed are growing at double-digit year on year for the period since Vision 2030, despite COVID and despite macro volatility globally, as I mentioned. Look at tourism, you look at tech, you look at logistics and transportation. All of these are sectors that are drawing a lot of investments, and that is reflected in the capital markets, which is the subject of our gathering today. If you think of how many listings have taken place over the last 2 or 3 years, 40 to 50 IPOs for equity listings. And these are, when it's energy, it's not oil and gas energy. It's the likes of aqua power, which has become a global phenomena. You look at healthcare and you see the emergence of regional champions like Al Habib and others who will in a short time become global champions. And the list goes on of the companies and the enterprises that have emerged. So having said that, there is still a significant need for this forum and for the capital markets governed by CMA, but really the motor for it and the driver is Tadawul, because that's the platform of which everybody works, to continue to reflect what is happening in the base economy, which is diversification and rebalancing of our capital markets. So our great success on the equity side, which has propelled Tadawul to be a top 10 exchange, need to be reflected in diversification and rebalancing of opportunities for investors and owners of capital. Debt capital markets in Saudi Arabia are minuscule compared to our potential. I believe we're less than 4% of GDP. And the G20 average is above 40%. So we have a target within the financial sector development program to grow our debt capital market by an order of magnitude. So there is a call for action by our corporates, by our mid-markets to come forward and prepare for raising capital through bonds and sukuks and the debt capital market of Saudi Arabia. Many of them have been doing this in places like London. And London has been accommodating and very open for Saudi entities. And in our roundtable meeting at the ministry yesterday, you heard some of the capital raises by some of the Saudi corporates. But that needs to happen here. There is no reason why those global capital raises needs to happen in Riyadh, just like we have done the Aramco IPO and many other successful IPO. Our insurance industry is quite concentrated in motor insurance and health insurance. But if you think of life insurance, property, general and specialty insurance, there is a great potential for that. Again, I believe we're only 2% of GDP. Yeah. We think we can go to 7-8% of GDP in gross written premiums, and that is going to also spill over in the capital market. Much of those premiums will be reinvested in the Tadawul exchange. So these are just some opportunities that are ripe for harvesting by the great people who are attending this conference, people who own capital, but also people who need capital. And I think since we're here with the Minister of Investment of the UK, we have a great example to emulate. The UK today, much of the capital that's available in the UK is not necessarily originating in the UK, and not necessarily, a lot of it, of course, is, and a lot of it goes to the UK, but a lot of it is global. So the objective, as the kingdom becomes the global leader in business and finance, and our economy leapfrogs and diversify from an oil-centric economy to a diversified economy, the financial services ecosystem in the UK here, anchored by the Tadawul Exchange, also need to be a global hub. We need to channel global capital into the opportunities, not just in the kingdom, but in the region. Yeah. So our regional headquarter program, which here within CAFT Business Center has already attracted about 600 global companies, and many of them will require professional services, many of them will require financial services, and many of them, as they design their regional growth plans, they will be needing to raise capital. We don't want them to go and raise that capital internationally. We want them to do it here, in Riyadh, aided and enabled by the great Saudi enterprises, but also by partnerships from around the world.
Well, thank you for that and articulating the range of those opportunities. I would absolutely agree on the quality of the opportunity around the evolution of debt capital markets, and I think you're most certainly on the right track there. Baroness, you touched on, let me just pick up on that industrial strategy roadmap. You mentioned the importance of writing it down, and it's an exhaustive piece of work. If you had to pick out some of those key sectors identified in the plan, again, all around sustainable and inclusive growth and how the UK is setting itself up for success, which ones would you sort of potentially highlight?
Yeah, I think I probably would look to the sort of clean energy piece. And I sort of, like when I see things like Vision 2030, the inspiration that you receive from having these at times seeming like very big goals, but you are able to sort of coalesce investment and action. And before you know it, those ambitious plans suddenly start becoming the plans that you're actually executing in your away. And I think we did that in the UK a little bit around the sort of green energy and sort of talking about the fact we wanted to become, carbon neutral by 2050 and a green energy superpower by 2035. And setting these seemingly ambitious goals helps bring together investors and investments into whether it's sort of offshore wind farms or whether some great work happening in Teesside around sort of carbon capture and sort of hydrogen, many of which would not be happening without some of the investors here in this room. And these are really helping us sort of really motivate investment, but also transforming our own economy and thinking about like how we solve problems of the future. Another interesting sector as well that I will touch on as well of the creative industries. And we heard about that in the keynote speech and hearing about what is happening here within Saudi. But that creative sector is a really interesting one, and it contributes 46 billion of our exports. And it's those exports, it's those trading relationships as well that helps bring a solid and sort of stable economy, but also helps provide future opportunities. And I think that sort of creative sector is a great way to sort of build those bonds and deepen sort of trading relationships. But overall, I think regardless of the sector, and all our 6 key ones are in that industrial strategy, which I will point to, I think it's all about how we bring together strategic investment into those sectors. And another key part is making sure we have the regulatory stability, articulating our aspirations and how we will be working with regulators to make sure that they're keeping those industries safe, but also taking a pragmatic approach to understanding the growth opportunities and regulating for that. And then building on those international trading relationships and making sure that we have these strong connections and ties that are mutually beneficial to both the receiving and the offering nations, and building on those to have the greater connections.
Your point on policy and regulation is a nice segue into the next point. It's been interesting to see the new government take that strong view that regulators need to be mindful of growth, and we've seen a lot of activity back home around that, so thanks for highlighting that. That's a great segue into the enablers, the policy and regulatory framework. Let me come back to you, Excellency. You talked about fixed income, you talked about some of the areas where you wanted to see broader, deeper financial and capital markets and the quality of that opportunity. What are you doing here in the Kingdom to reform the regulatory environment within financial markets? And what do you think you can do more broadly to harmonise with some of the international norms that investors in this room will be used to encourage that flow that you just talked about around those themes?
Well, let me just pick up on what Baroness Gustafsson said, and that, continuing my previous answer, is that part of our diversification and development of our economy is to do some of the things she touched on. Green investing is a very strong theme within Saudi Arabia without calling it as such. And I mentioned how we're pivoting sharply from being an oil-centric economy, and I mentioned Aqua as an example of the success. So there is tremendous investments not only in renewables and green energy, but every assets that is being invested in Saudi Arabia has sustainability at the heart of it, whether it's in efficiency, water conservation, recycling. The circular carbon economy is part and parcel, and that is, of course, going to attract a lot of capital into Saudi Arabia, because we know there are trillions of dollars out there in dry powder, so to speak, that has green affiliations with it, that is looking for those investments. And also, of course, technology is a big theme in Saudi Arabia. We just had the LEAP conference. There is a Saudi AI strategy that is strong and emerging and attracted the global players in this field, not only in the infrastructure of data centers, cloud computing, and AI, but I think importantly in the actual software and the applications that will enable all stakeholders to ride on this transformation that is going to change the world we live in and change how every entity and every company operates. So that is happening with significant investments by the kingdom, but global interest given the emerging regulations in the kingdom, the availability, of course, of power at the lowest cost, the availability of land, but importantly, which segues into your question, enabling regulations for data and technology and giving the global companies that will be investing with us in this area full control over their data to secure it for the ultimate users. In terms of the capital market itself, I think the kingdom really has proven itself. When a few years ago, after the vision, His Royal Highness initiated that we need to upgrade our capital markets and catch up, and Tadawul and CMA were mandated to integrate our capital markets and financial sector with the rest of the world. We were told we need 4 to 5 years to join the global indices, MSCI, FTSE, and the like. And we did that within 2 years. They told us it's impossible. And of course, in order to do that, you have to harmonize all of your systems, procedures, and processes. So your settlement time, your accounting standards, your disclosures, and the list goes on, had to be consistent, and we have become a significant anchor of the global emerging markets, MSCI index, and other indices. I think the next challenge for us will be to go into the developing market indices. And why not? Saudi Arabia is becoming, at our core, a developing nation, a developed nation from an emerging economy. I think going back to the green financing theme that we talked about, being able to improve disclosure and compliance of all the listed instruments in Saudi Arabia, whether equity or debt, with what global investors are used to, is very important. ESG has become an area of interest, as I mentioned, with significant capital that wants to make sure that investments that are available to them are ESG compliant. You know, we have done well, by the way. I should commend Fahad Saif, who is with us. The PIF listed or raised over $8 billion of green bonds. I believe it was raised in London. Rajhi raised some impact financing in London, but we need to do a lot here, and it needs to be ESG certified and accredited, consistent with global standards. This is an area where we will be working with the city and with the London Stock Exchange to make sure, again, we're harmonized, that some of these papers could be co-listed and co-raised between London and Saudi Arabia using harmonized standards. So I see this as a big additive to what we're already doing. But I would emphasize that every time we look at rankings of global exchanges and global regulators of leading capital markets, Saudi Arabia is already one of the top 5 in terms of its compliance with global standards, and it is indeed a best in class. Having said that, there are a few gaps that we need to fill, and the Financial Sector Development Program is putting the targets, and Tadawul and CMA are more than able to get us at par with the best in the world.
Well, thank you for that. And let me echo some of those comments on the CMA. We've worked closely with them on a range of initiatives, and you've got a very capable team there, and so thank you for that. Baroness, let me get to some of the specifics. UK Kingdom. UK's commitment to increase bilateral trade with Saudi Arabia to 30 billion. There's one of your bold aspirations by 2030. What specific initiatives, milestones can we expect to be implemented to strengthen that partnership?
Yeah, I think it's, well, we love a bold ambition, don't we? And I think it's one that isn't just a sort of paper ambition. There is genuine intent to make sure we deliver on those. And it starts in terms of the governance structure. So we have the strategic partnership with Saudi, and that is got sponsorship at the highest level. So we have the Prime Minister and engaged on that side from the UK. And then in terms of what does that look like? How does that feel in practice? I think a key aspect of this is the free trade agreement with the GCC, and that's expected to sort of increase trade by sort of 18%. So we're sort of documenting those sort of opportunities that we're going to be exploring together in there. But then it's also the people-to-people connections. And how do we bring businesses and investors together? And I think often in government we can sort of get carried away with sort of trade agreements and sort of the governments working together, but it's really about bringing businesses and investors. And I think we did a really good job at that with the Great Futures Summit that was held here in Saudi, and it was the largest UK delegation that I think has been here in over a decade, so 450 companies coming from the UK. And for many of them, it was their first time seeing, experiencing the Great Kingdom and seeing for themselves about the opportunities of sort of coming in, either sharing technology expertise or meeting people that could help them expand their own businesses within here. So I think that really goes a long way. But then also the other tactical things, like we're increasing the number of direct flights between the two nations, e-visas, making it much easier for people in Saudi to come to the UK. This is all about how do we build those people-to-people connections that ultimately will start the conversations that go on to be talking about trade that will be governed by the Free Trade Agreement with oversight from that Strategic Oversight Board.
Well, thank you for that. We're sort of running short of time, so I may ask for slightly distilled closing remarks, but I did want to touch on capital technology and the sort of future path excellency, and close with you, Baroness. You talked about some of the alternative capital sources. You mentioned debt capital markets. Talk a little bit about some of those other alternative capital sources. We hear a lot about private markets at the moment, private equity, private credit, driving that investment into infrastructure and some of those major projects in Saudi. Yeah.
Okay. Well, I think, first of all, we have to remind ourselves again that the capital needs of the kingdom are so immense that our position as a net surplus and exporter of capital is changing in a positive way, where the attractiveness of our investment environment is drawing more capital than we are exporting. Kingdom will continue to invest globally, but we're a net importer. And by the way, the US, the largest economy, the most attractive economy, is a net importer of capital. So it's nothing to be at all concerned about. And a lot of the infrastructure projects that traditionally has been financed by owners of those assets, whether government or semi-government, are going to require private capital. And relying on syndicated loans, project finance, as the only source that we have been doing, which I answered in an earlier question, needs to diversify. Yeah. So there are great stories already. I mentioned once the Aramco pipeline deal, how it got everybody in the kingdom familiar with this concept of lease and lease back to raise capital off balance sheet for the asset owner. There are endless opportunities to replicate that. We have significant PPPs that are coming up, and this is an area where the UK has played a leading global role in getting the rest of the world from the Thatcher years familiar with the concept of PPPs. And many of the companies that have moved their regional headquarters in the kingdom will be active in arranging, facilitating and supporting these PPP arrangements. That is going to require also that we recycle a lot of debt that is already sitting in the kingdom. So one thing that we need to be working on in the next months and years is getting some of the debt sitting on the balance sheets of banks, whether it's mortgages or corporate debt, to be securitized, traded, and recycled as we attract this capital. So plenty of opportunities, and I think the exciting things about it is there is a lot of capital out there that is looking for a politically stable, economically stable, currency stable, with great assets, great opportunities, great partners who are the Saudi investors and co-owners who have 60, 70, 80 years of global partnership, and a great exchange with a great regulator, the CMA, all in one place. That's difficult to find today.
With that sales pitch, how could you not want to invest in?
So it's all here.
Well, thank you for that. And let me close with you, Baroness. I mean, we heard about some of your previous roles, and I agree it's fantastic to have that business and technology experience in the government. Some of the investors in this room I was talking to you earlier on have been to the big AI summit in Paris. We can't go to a meeting without talking about its potentially disruptive nature. The UK has articulated a real desire to lead in that space. Give us with a couple of sort of closing thoughts on how you think AI will change the investment landscape.
Oh, I'm so excited about the opportunity around AI, obviously, I'll give my background. And I think, in the UK, we've pulled together the AI Opportunities Plan, and I think that it tends to be in two strands. AI will require on having all of the infrastructure available to succeed, whether that's sort of data centers, it's the energy provisioning into the data centers, it's the accessibility, it's the skills, it's the academic institutions, it's the partnerships and learning, and all of that great stuff to come and build all of these amazing AI technologies. But the part I think that sometimes we overlook, that I feel incredibly inspired by what I've seen here, is then how do you encourage the adoption of those technologies? And how do you create a culture of embracing technology? And how do we leverage government to be the main ambassadors of embracing the technologies and thinking about how we digitize the support that government offers? And how do we make technology adoption part of the everyday way of going about and interacting with government? And I think you've done so much here that I find really inspiring, that I'll definitely be bringing back, because it's not just about building the infrastructure, it's creating that culture where people embrace technology and use it as part of their day-to-day lives.
Well, we covered a lot of ground. We have plenty more questions, but we've run short of time. Thank you both for everything that you're doing on the investment portfolio. Incredible opportunity set. Enjoy the rest of the conference, and thanks for joining us. Thank you so much.
Thank you very much, Your Excellency Khalid Al-Faleh and Baroness Gustafsson, for sharing your knowledge and for sparking such an engaging dialogue. And thanks to Mr. Constantine for moderating such an insightful session. Our next session is a fireside chat moderated by Mrs. Nadine Hani, Al Arabiya Senior Business News Presenter. She'll be joined by Mr. Abdul Aziz bin Hassan, Board Commissioner at the Capital Market Authority, to discuss the evolving factors shaping the capital markets.
صباح الخير.
صباح النور.
أهلا وسهلا.
كيف حالك نادين؟
تفضل. Thank you to Muhammad. صباح الخير. Your Excellencies, distinguished guests, ladies and gentlemen, good morning. Thank you and welcome to the Saudi Capital Markets Forum for this year 2025. I'm Nadine Hani, Business News presenter for Al Arabiya and Al Arabiya Business, and it is always such a pleasure and honor to be here with you in Riyadh to moderate this fireside chat titled Redefining Capital Markets, Navigating Change in a New Economic Landscape. I think we can better describe what's happening in the world as upheaval rather than a change, whether we look at the geopolitics, at the global situation, trade, finance, all of it. So against this backdrop, we want to get your views on how Saudi Arabia is navigating these challenges and how it works on positioning the capital markets as a global leader in the world while achieving its objectives to be not only a global leader in capital markets, but also serve its diversification plans under Vision 2030. So it is my pleasure to have with us Capital Market Authority Board Commissioner, Mr. Abdulaziz bin Hassan. Good morning and thank you for joining us.
Good morning.
So we'd like to hear your thoughts.
Of course.
How is Saudi Arabia navigating those changes and how do you achieve your targets?
Of course. Thank you very much. I would like to thank Tadawul Group for hosting me. It's been actually a very interesting year. We had the final year of the U.S. Administration and a new administration coming in with a very heated, I would say, election, with all the events surrounding that election. Also, the Fed started cutting interest rates for the first time.
We don't know if they're going to continue
no,
or
I mean
not.
for 24.
For 24,
For 24, yeah. And investors globally seeked finding liquidity and growth in different markets. I would say, to sum it up, the emerging markets was the most winning in terms of gathering and grabbing these investors. And we're talking about liquidity, we're talking about growth in their economies. Emerging markets are becoming more sophisticated. The technology aspect of these markets, the infrastructure in the capital markets also helped in general. And most importantly, the regulation changes that happened in these emerging markets helped a lot to attract these foreign investors in different markets. Also, I would highlight it on also the kind of a funny settlement changes on the equity market. If you remember, before the Saudi market joining the indices, we used to trade T+0.
T+,
yeah, and one of the requirements for the indices is that you need to change it to T+2. Going forward 5-6 years later, you see in the US has changed it with Canada, Mexico, and Argentina to T+1. India's T+1, thinking of also debating that could go to T+0 as well. So it's kind of a changing market.
Are you considering changing again to
well,
be aligned?
not at the moment, not at the moment. But it's kind of an interesting, I would say, events happened in 24. Now, if we look at the Saudi market, it's been rapidly positioning itself as a global financial hub, driven by the ambitious vision of 2030. As a strategic plan for the CMA is to focus on developing the markets and developing the regulations, easing the regulations. And actually, this has happened in the last few years. To back up that with what I said, we're talking about the Saudi market has been the largest US dollar-dominated issuer in 24. That makes us the, excluding of China, the first, which is a growth of 18%.
Issuance of?
Of dollar bonds.
Dollar bonds,
yes.
Yes.
All right. Also, one of the things that on the equity market itself, the performance of the equity market comparing to 23, we saw a value traded increase of 37%. We see in the AUMs have increased almost, I would say, to 500 billion. The number of investors based in asset funds have increased by almost 50% from last year, from 23. We're talking about 1.7 million. And if we go step back a bit till 21, it was only 500,000 investors. So you can see the changes that are happening in the Saudi market in a very quick way. And that's why, and because of that is the enhancement that we did in the capital market on the regulation itself. Let me walk you through some of the numbers, Nadine, that will show exactly what I'm talking about. So we're talking about growth financial management of 1.1 trillion. Expansion of investments, as I mentioned, by 47%, close to 50. Increase in capital market, debt to capital market by 12% to 853 billion. Growth in international investments, including GCC, by 6%, almost to 500 billion. Expansion of the number of capital market financial institutions. In 23, it used to be 163. As of end of 24, it's 186. So there's a 14%, 15% almost increase in that. That shows the interest that these investors and financial service founders in the Saudi market with a lot that's going on in it. The foreign investment inflows have surged by 500%.
During which period? This is foreign
This is from
investment
2017 till now.
Okay.
It started at 71 billion. We're talking about now 425 billion Saudi riyal. So growing confidence in the market, stability, and still growth. On the public listed companies itself, if we look at the results of 24, excluding Aramco, we're talking about an increase of profitability of almost 24% compared to 23.
So 2024, the increase in profitability of the companies, excluding Aramco. Is 24%. 24%, compared to the previous year.
Compared to the previous year.
You mentioned foreign institutions. I'd like to ask you about foreign investments in the Saudi market. I don't know first if you want to share with us some further metrics.
For example, the IPO market in the kingdom in 24 was really a hot market. We approved 62 applications. 43 of them made it to the market last year. That ranked us number 9 globally in terms of IPOs. Number of IPOs, and number 7 in terms of IPOs proceeds. So you can see where is that heading. We are ranked number 1, as His Excellency Engineer Al-Farah mentioned. We are ranked number 1 in corporate governance, and we're ranked number 2 on the investors or shareholders' right protection among the G20 nations. According to the IMD ranking.
We follow the market every day, and we have been following up on the improvements and on the regulations that have helped achieve these targets, Mr. Ben Hassan. Let's break down some of the points that you mentioned. Can you tell us what is the CMA role? What is the role that you play as CMA with foreign investors, vis-a-vis forein investors? What is your plan? What are your targets to attract foreign investors into the Saudi market?
We were working continuously. I mean, if we go back again to when we first introduced the QFI back in 2015-16, it took place in 18. If you remember, the rules of the QFI and the regulation at that time was pretty much high. We had another look at it afterwards. It was reduced. We at the CMA constantly work and review our regulations and the regulatory framework to make it much easier, accessibility for international investors in terms of systems, in terms of regulations, etc. So we're working with our partners at Tadawul to make it much more easier as well.
Are there any new regulations coming on board?
We changed some of the regulations. If you remember, last October we announced the new CMA strategy for 24-26. We are seeing, or actually, I think in the next few months, you will see some new regulations on the non-residents investors in the kingdom. And later on the day, the Deputy CMA for Financial Institutions will talk about it in depth and technically on how is that going to affect positively to the Saudi market.
This is in 2025, hopefully,
This is
these changes.
2025, yes.
You emphasized earlier the importance of, or the size of the market, and we cannot only talk about the equity markets, we need to discuss the debt markets, because you mentioned also the number of issuance in Saudi Arabia. Saudi Arabia has been very active, whether on the sovereign, the GREs, or the corporate issuance. Also, what is the plan by the CMA for enhancing the debt market?
Well, the debt market has been actually, I would say, it's one of the major pillars that we have in our new strategy. There's a lot of challenges in the fixed income market and the debt market in general. But I would say, let me step back a bit and say that in tackling this debt market, there was the foundation of the Sukuk and Debt Committee, which is chaired by the CMA, with key partners as well, like the Central Bank, the FSDB, the NSDM, NSMD, and also with Tadawul Group in general, to make it more easier and access it for international investors. I would say the approach was in 3 phases. Phase 1 was the layout foundation back in 2018, where creating the yield curve by listing the government bonds, clearing out the way for the debt for the corporates, for the private sector also to be more active in that and the issuance itself, and also have more easier regulations in terms of accessibility for international investors. Phase 2 was more of an enhancement of the approach itself to the fixed income market, and we had it by amending the regulations, making it more attractive to the international and also to the local, because there was a few challenges around that. All right. So also there was an infrastructure issue, which has been solved by connecting the depository, which is IDA, to the Euroclear and Clearstream, to make it more easier for the international investors to access the Saudi market. Tadawul also have introduced the IPO system, which helps on the accessibility for the international and local investors in the market, to make it much easier in terms of access, in terms of timing, and also on the fee issue as well. Then we come on to phase 3, which is our community witnessing now, which is more amending and enhancing our regulations and the regulatory framework on achieving different aspects of that strategy. The Tadawul expected this year to launch the ATS, which is Alternative Trading System, which will help a faster accessibility for issuers and for traders on the local market, to make it more appealing for the domestic and the local as well. There was, as you recall, some zakat-related challenges that's been solved, and we're working to make it more appealing to the international environment as well.
Let's talk in detail about IPOs. Now, the IPO momentum has been amazing to an extent where, I mean, if you follow the market daily, you cannot even remember all the names of the companies listed anymore. And this is good.
Yes.
This is good. But the question is, what are you doing at CMA to ensure the sustainability of the momentum, that it stays that it is on a sustainable path, let's say, which is beneficial to both issuers and investors, because there was a trend lately of pricing at the upper end of the range for all the IPOs, multiple coverage by debt, by leverage. So let us know your thoughts on what has been done so far and the plans going forward.
Excellent. We're constantly reviewing the regulations and amending it on the ECM market in general. Now we're talking about making it more appealing to local issuers. So to give you an example, last year was the highest record year for the Saudi market that we approved 61 to 62 applications. And as I mentioned, 43 made it this year. The backlog of some of those applications and new applications that came in, we're talking about something around 50 to 55 applications so far, and we're still mid of Feb. I would say 60 to 65% of that is more of a new market. We'll be seeing some new sectors coming into to the market as well, like, for example, the aviation. So you can see the
aviation.
Aviation, yes. So
Okay.
you can see the amount of work that the leadership of the CMA is doing. Young men and women who's been working like a beehive in terms of amending the regulations, making it more appealing, but also we have to make it in a balanced approach, not just throwing out any kind of regulations just for the sake of increasing the business itself.
Our time is running out. Let me ask you some quick questions. Are you doing anything to attract international companies to list on the Saudi market and enhancing dual listings, for example?
We are actually with the Saudi exchange. We are. We're adopting the best practices globally for such listings. At the same time, Tadawul, our exchange itself, they have the guideline manual for international companies to be listed. If they're interested, they can look at that. And it's something that needs to adopt the best international practice. At the same time, use the Saudi exchange dynamic, fits the dynamics of the Saudi exchange itself.
The CMA report mentioned that 50% of the IPOs, the recent listings, were SMEs. What do you expect the number to be in 2025 if we talk about SMEs? You gave us the backlog right now. How many of them are SMEs?
As I mentioned, 65%. So we're talking about, I think, something around 32 to 35, if I recall it right, are more of SMEs. We're seeing a lot of tech companies dismultiplying in the kingdom, and these tech companies eventually they will go IPO. All right. So the Namu market. By the way, on the Namu market itself, at the beginning of this year, the market value or the market capitalization of the Namu market has been larger than some of the main markets in the region. So you can see how the platform of the Namu market, which started back in 2017, is growing very quickly. We have, I think, now over 100 companies in the Namu market. On the main market, I think it's something that's around 250, 255 companies, and that number is going to increase in 2025 itself.
Our time is running out, so for the closing remarks, I would like to hear your thoughts on whether there are any issues that I have not asked you about which are important for the audience to know, and also to tell us if you were to describe Saudi Arabia's capital markets to global audience, what would you say, and what are your goals?
Well, I think Engineer Farah, His Excellency Engineer Farah, has mentioned about the ESG and the bonds and green financing. Which we will be working on with
Let's
different...
see how long this is going to be an issue
well,
now with the
not
Trump
CMA,
administration.
it's not the CMA alone. It's more of a collective, I would say, efforts from different parties, government parties, or bodies itself. But Saudi market has been a fast-growing market, positioning itself as a world-class financial hub. The growth is there. The vision is, I would say, firing all this up to make it where we want it to be. And as most of the speakers have talked today, the chairperson and His Excellency about where we want to see the Saudi market in terms of ranking, we think, no, we don't think actually, we believe, and we're working and we're aiming to have it on the top 5 financial hubs globally.
We will be following up on your news. We wish you the best of luck, and to the audience here. And I want to thank you very much for this interesting conversation, Mr. Abdulaziz bin Hassan. Thank you so much.
Thank you very much.
Thank you.
Thank you very much, Mrs. Nandine Hani and Mr. Abdulaziz bin Hassan, for the enriching conversation. Our next panel brings together global capital market thought leaders to discuss their efforts in enhancing market resilience, advancing ESG standards, and the steps they're taking to foster international collaboration to improve global financial connectivity and transparency. Handing this over to Ms. Fatma Dawi, business news anchor at Al Arabiya, who will be joined by Engineer Khalid Al Hassan, Chief Executive Officer at Saudi Tadawul Group, Mrs. Bonnie Y. Chan, Chief Executive Officer at Hong Kong Exchanges and Clearing Limited, Mr. Roland Chai, President of NASDAQ Europe, and finally, Mrs. Nandini Sukumar, Chief Executive Officer at the World Federation of Exchanges. Welcome all.
Your Excellencies, distinguished guests, good morning and good afternoon. Welcome to our session on global capital markets enhancing resilience and connectivity. We are at a pivotal moment in the evolution of capital markets. In 2024, global markets demonstrated a resilience amid economic uncertainty. FTSE managed to score 5.7% in terms of performance, S&P 23%, and the NASDAQ 30%, Hong Kong Stock Exchange around 20%. However, challenges remain. Market fragmentation, regulatory misalignments, evolving investor expectation continue to test the strength of our financial systems. Yes, a lot has been done when it comes to ESG and making it a standard into capital markets, but we are still facing a lot of things to come. Capital markets to remain resilient and interconnected, greater regulatory coordination is needed. Today, our discussion will explore how we can strengthen cross-border collaboration, promote transparency, and build a more sustainable global financial system. I'm going to start with you, Engineer Khalid. Saudi's capital markets is in the heart of Saudi Vision 2030. What are the key milestones so far in positioning Tadawul as a pillar of economic development?
Thank you, Fatma. Allow me to welcome everyone to the Capital Market Forum in the beautiful city of Riyadh. So welcome. Of course, the Saudi Tadawul Group and the wider Saudi capital market are key to the macro level transformation the country is witnessing after Vision 2030. And both STG and the wider Saudi capital market play a key role on enabling many of these transformational initiatives. Mm-hmm. And this is done basically by expanding in our asset classes offering, expanding in our outreach activity to issuers, investors, as well as financial intermediaries. And all of this is mainly backed up by solutions around trading, clearing, and settlement, in addition to technology and data. Mm-hmm. So the economical depth of Saudi Arabia have given us a privilege in this region of having demand around issuance, having also demand locally, regionally, and globally around investments. Mm-hmm. And this is basically what the depth STG is looking always to create, whether this is, as I said, by expanding in our asset classes offering, as well as expanding on access to our investors to enable the opportunity for us driven by Vision 2030, and what can we do to enable Vision 2030
And this
success?
is my question. What is needed to be done to enhance market contribution?
Well, more asset classes, and I think if I look at it from Tadawul or Saudi Exchange developments, I would say a few years ago, not very far, we used to have one single equity market, only local and residents can participate in that. Today we have two equity markets, and it's open, local, regional, residents, as well as foreign investments. The participation of foreign investment on the equity market is almost at $100 billion today. That is a significant improvement from nothing a few years ago. And the additional asset classes that we have offered, we have derivatives markets with three products. We have a fixed income market with over 600 billion rial size, and we're working to develop that further. We have tapped into the commodity market through our recent acquisition. So all of these are components that make us a highly, strongly competing player, because as we, and I think my colleagues on the left knows also better than I do, capital markets, Fatma, today have no border lines. Any investors can access any markets.
Yes.
Any issuer can access any market. So you have to build all of the components around the stock exchange to compete.
We were
fairly.
discussing this with Boni earlier about how markets are changing and looking at opportunities and really disregarding what's happening on a geopolitical scene. And my question to you, Boni, we are talking about global challenges. What do they mean to you in 2025 and beyond?
Okay. Well, thank you, Fatima, for that question. And by the way, really happy to be back in this beautiful city of Riyadh. So 2025, before I answer that question, maybe let's dial the clock back 1 year. Okay, so 1 year ago, around this time, I think everyone was looking at 2024 and thinking that it's a very challenging year. Yeah, we were obviously, I think the world was facing a lot of challenges geopolitically. There were frictions around the world. Inflation was high in many different countries. It's a year of big elections, remember? Many countries were sort of still choosing the next leaders. And we all went into 2024 thinking that it's going to be a tough year. But I think markets, generally speaking, showed a lot of resilience, as you mentioned. Different markets actually performed quite well, including ours in Hong Kong.
And some missed the opportunity.
Yeah.
We were too scared.
But you know, if you ask me, same time last year, and I became the CEO of HKEX in March 2024, I was bracing myself, right? Because, you know, around the world, people say China is uninvestable, yeah? And before I know, as the year unfolded, we had two rallies. Hang Seng went up around 20%. And this year, we're still early in the year, mid-February, but it's gained another 15%. Now, how did we do it? I think it's really, as Engineer Khalid has mentioned, as an exchange, we need to make sure that we have a very compelling proposition to both issuers and investors. We want to make sure that we have a very fulsome suite of products, right? So from equity to bonds to ETFs to REITs, name it, we should offer whatever investors are seeking. We want to make sure that we build the infrastructure in a way where we can be as inclusive as possible to bring investors and issuers around the world to partake in our market. And in the case of Hong Kong, obviously, we have the advantage of having that connection with mainland China through what we call the Connect franchise. And therefore, you know, you ask me, 2025 will still be a year full of uncertainty. The first few weeks have been quite kind to us in
The
Hong
market
Kong.
went up a few weeks
The
in
market
Hong Kong.
is, it's doing quite well, both in terms of the performance of Hang Seng Index, but more impressively, the volume. So in the last 5 trading sessions, every day we have traded over 300 billion Hong Kong dollars. Now, to put that in context, in 2024, the ADT of the year was 132 billion. So from 132, we have now been trading at levels above 300.
Okay.
So it's I don't want to declare victory too soon.
Let's hold that idea there and
yeah.
then move to
Yeah.
Nandini. Nandini, we have equity markets and we have bank financing. Equity markets is showing more resilience than bank finance, especially at times of uncertainty. And we are living in times of uncertainty. What structural advantages do equity markets have over traditional banking system? And also, how can exchanges further strengthen the system?
Thank you. I think that's a very profound conceptual point question that you're asking there. If you look around this room, this meeting, which Tadawul has convened, this is the starting place of the role of the exchange, the role of the exchange group, and really want to congratulate Tadawul for what they're doing, because they have brought everyone, all the stakeholders together in a room over a couple of days to engage and to be that forum. So we always say that the exchange is the center of the center. It's the center of the market, and if you think about the market or financial and capital markets as the center of the economy, and from there you go outwards one further level, and that is society, right? So what the exchange is doing here, and in every case, is very fundamental, to building not only resilience, but growth. One question that people always ask, because it's attractive to stay in the private market, right? To stay with banks, it's to stay in private markets, especially when funding is easy to come by or when rates are low, is to think very clearly, first in quantitative terms. If you do a cost-benefit analysis, if you like, just any buy-side firm will tell you that using the public market, using that exchange market, if you're in this market, using Tadawul, using the market to finance, is going to be more efficient from a capital perspective than anything else. At our board meeting, and Khalid is a very outstanding member of the board, we had a conversation with one of the world's largest sovereign wealth funds. And they said that on a quantitative basis, they had taken it down to basis points. And they could prove that when they used public markets, exchange markets like Tadawul, there was no comparison in terms of funding. So as exchanges, so much I feel of what we have to do more and more is tell that story. And that's why something like this is such an incredible educational event.
CMF has become a global event.
Yes.
And I think there's many future plans that Engineer Khalid will tell us later on. Roland, let us stay in the same topics in terms of how to maneuver and manage uncertainty when it comes to capital markets. How do you see capital markets evolving?
Thank you very much, Fatima. I think referring to what Engineer Khalid had mentioned, global capital markets are being more interconnected every single day. And part of that is going to be the attraction of global risk capital to deploy liquidity across different areas, whether it's Asia, Middle East, or it's in Europe or America. So more and more we see investors in Europe, we're trying to attract offshore investors, and wherever they're coming from, it's about them being able to manage their investments in each region and also risk manage those. So we see the interconnectedness of the market also drive the ability of risk management capabilities and the ability to manage and move liquidity across different time zones. And I think that plays through economic cycles, whether it's times of bull runs or whether it's times of crisis. And we, as market operators, I think, as Nandini said, is we need to have very resilient infrastructures to be able to keep those markets open and allow that transfer of capital.
Is that when
and
cloud
risk.
technology comes in?
I think it's undeniable that cloud technology is here to stay, and in a way is a platform of innovation. I see three things: data, cloud, and AI. And artificial intelligence relies on cloud and it relies on data. So to accelerate, and I think STG and Riyadh has been incredible, the growth of the markets here, but to accelerate both in Europe, in Middle East or Asia, I think we need to be able to harness that technology and move forward.
Khaled, Roland has mentioned three keywords, and I think they're very important for capital markets to move forward and to catch up probably with investors' dreams and potential gains and everything. And here, my question to you is that what are the initiatives that Tadawul has taken to tackle any, I would say, challenge that it's facing them, to improve liquidity, to ease access to markets, and where does technology comes in when it comes to these targets?
So if I take it back to my previous answers, when we look at our setup and how do we enable things, we look at our solutions. And I said trading, clearing, and settlements, as well as data and technology. So any capital market infrastructure will have to focus into these because we are vertically integrated around trading, clearing, and settlements. So to the point Roland raised, totally agree. The next priorities for any capital market infrastructure is around technology and data. And building that capability to enable the business to grow, to enable their offering.
So that's a challenge and opportunity.
Absolutely. And I would like to look at it as an opportunity. And I think from our perspective at STG, we have started that process earlier. We invested heavily lately on data infrastructure, where our initial or kickoff products will go to the market in April. And that is a cloud-based solution that we're building that our data business around it. Of course, AI has to evolve around that because it's an important element. Technology, we are in that domain as well. We partner with the best. We acquired recently a technology company that has a technology capability as well to build our technology capacity and capability, because we would be, in the near future, very slow if we don't have these two components and these two pillars as a key pillars within our strategy.
Roland, it's clear from all the speakers at this panel that the future of global markets is moving towards seamless integration, so and real-time data sharing. In your opinion, what is the biggest challenge into achieving this?
I think there's a couple of challenges. There's standards, and also the ability, regulation can be a challenge. And I think we see that in whether we see that in emerging markets or in Europe or markets like Middle East or Asia, there is the temptation to have very complex regulation. And we see that the complexity of individual regulation in each domestic market can create complications for capital formation and investment firms who want to operate across either regionally or across borders. So I think one of the things that we like to focus on is smart regulation. When regulation works, it protects the investor, it creates seamless markets, and creates a reliability and integrity to the market. And so I think it's really important that as we evolve with technology and as we develop our markets to be seamless, we manage on the regulation front and work with our government stakeholders and our regulators to come up with the right mix that allows for efficient markets as well.
Nandini, this question is to you as an observer. Roland just mentioned the word regulatory or regulations, and I wouldn't say challenge, but I say one of the things that global markets leaders look at is how they can manage and maneuver transactions and taking into account the regulatory framework differences. What specific regulatory improvements or alignments could enhance Saudi's capital markets?
So the first thing I want to say is what distinguishes Tadawul from any other platform that might come, or indeed the exchange industry from any other, is that it is regulated. And investor protection sits in its DNA. When you go to an exchange market, you are expecting regulatory standards. The exchanges are accountable every day. So you are the safest that you will ever be in an exchange market, in addition to getting that virtuous price improvement. So looking at Saudi, it's been 5 years since I was last in Riyadh, and it's astonishing, it's striking, it's visible, the development of the market in the last 5 years. And that's because of the exchange and the exchange's dynamism in driving forward change, right? So what do investors need? They need product to trade, they need confidence in the market, and they need trust. And from a regulatory perspective, every regulator, every policymaker, every government, they need to be enabling and equipping that exchange, their exchange, for success. And the other thing I also always want to say when you see markets that are developing, especially at such a swift pace as Tadawul and the Saudi market is, people hold up competition as some sort of holy grail. And competition really should be an enabler. It should have a focus, it should have an objective. So when markets are developing, of course you need competition, etc. But what you need most of all is you need liquidity in the market, you need development of the market, you need professionalism of the ecosystem around that. And those are all regulatory levers that should be pulled.
Boni, let's discuss capital markets when it comes to regional collaboration and also fostering innovation. How do you see capital markets into these perspectives?
Okay. I would agree with Nandini's comment that competition can be very good in the sense that it will foster improvements, shall we say. And it's also, I think, one reason, or there's one term actually we always say in Chinese, which is a crossover between collaboration and competition. There is such a phrase. And if you think about, the comment which Engineer Khalid made earlier, this day and age, investors are not bound to any exchanges. They're very mobile, right? All you need to do is to, through an app, you can buy stocks in basically every single market in the world. There are a lot of very fancy, exotic products where you can even buy a fraction of stocks. And by the way, there is more asset class than just the traditional securities like crypto and all that. So I think there is actually a lot of opportunities for exchanges around the world to collaborate. And let's remember, deglobalization leads to fragmentation, which actually breaks up liquidity, and therefore, as a result, valuation is compromised. And that, to me, is not a good thing. Now, by joining hands, and we have a lot of collaboration between different regions, either cross-listing products, etc., it actually will bring more liquidity and consolidate. And that, in turn, should lift valuation, which benefits both issuers and investors. So to answer your question, I would say that exchanges should work together and, with the help of, the WFU, for example, identify more opportunities where we can really unlock more value for investors and issuers around the world through collaboration.
I agree. I think that there's this kind of notion which has to be, which is not true, that somehow competition per se is a virtue. It's only virtuous if it's achieving a goal, and that goal is, the objective for the capital market. If there isn't, the market absolutely needs to be focused from point number 1 to point 1000 on building liquidity and enabling that ecosystem.
Khaled, sustainability and ESG, these are the hot words in any global markets corridor. So my question to you, how is Tadawul integrating ESG? Any foreign investor, any investment banker, any trader, before he introduces these to his clients, the ESG stamp has to be in it, and that opens quite a lot of doors, and it ensures the investors. Where is Tadawul in it, and what's coming up when it comes to these very important
Sure. If you allow me to comment on what has been discussed, and I will answer that. I totally agree. What give advantage to traditional markets is being regulated, and that give comfort. However, I would say the biggest challenge for integration between market, it's the regulations now. It doesn't mean that the regulators are not collaborating. I think, from my opinion, the only bending issue between regulators to allow more integration between exchanges is the enforcements. How to enforce the rules. If the rules are not standardized, which is, in my opinion, it's doable at the level of 50–60%, but not doable at 100%. Each market has its unique setup. So that is a challenge, especially for issuers on the cross-listing, etc. So that is something hopefully will happen in the coming future. As far as the sustainability and ESG, of course, the trend, as you, Fatma, said, demand from investors is rising year over year on sustainable investments, ESG standards, and applicability. So what the Saudi Exchange has been doing are multiple folds. One, making sure to increase the adaptation of Saudi corporates listed on the ESG standards, sustainability disclosure, and that has been progressed well in the Saudi market. I think the investor relation role on explaining to investors how the companies, the Saudi corporates listed in Tadawul, are in line with ESG standards. The exchange also is working on an upgraded FSAH system, which is our disclosure system, that help and make it easy for Saudi corporates to disclose based on ESG standards with the given guidelines. And I would lastly mention the effort STG has done alongside PIF in creating the regional voluntary carbon market, which is a vehicle for corporates, not only Saudi corporates, but even regional and global corporates, to use that exchange to offset carbon emission, which help their sustainability and ESG standards. So hopefully all of these efforts would help bring Saudi more and more competitive on ESG and sustainability investment.
Another hot term, AI. So AI and global markets. Where do they meet? Why is there a fear yet and not embraced fully? And where is this taking us? Because this is the future. It's entered every single sector, and at the top of it now, global markets. So my question to you, Roland, how are you embracing it so far? And how do you see that changing the future of global markets?
I think when you look at technology and technologies like cloud, high-frequency trading, electronic trading, and connectivity, they come in waves of innovation and disruption. And when we see it, we definitely think artificial intelligence can be very disruptive, both to the financial economy and the real economy. And we need to understand how our customers, how our clients, and how the wider economy is using it. I think go back to what Nandini said is the core of the exchange is to provide integrity and a safe, resilient place for capital formation. That has to be true to our purpose. Now, how do we use artificial intelligence and be able to provide a marketplace for customers to use that artificial intelligence? I think that's the challenge of how we embrace it. But we need to make sure that as we do, the foundations on which we base that, we have to keep to our core values, which is providing safe, resilient markets with investor protection.
Bonnie, same question.
Well, I think while we're doing that, while Roland is busy doing that, I would say that, for the companies which are developing the AI, they need capital, a lot of it. And that's exactly the reason why we've seen the current rally in Hong Kong with the unveiling
Is that
of
DeepSeek?
DeepSeek. I think all of a sudden the world is waking up to the fact that, not only is the development of this AI not just sort of, frontier technology, it can actually be put into application and fuel the growth of the real economy. And therefore, investors are now really eager to take a piece of that action. And so I think, there's quite a lot of different perspectives to think about, in this AI
So
topic.
we'll see competition between ChatGPT and
100%.
You
We asked them the same questions in different platforms.
Competition is good.
Yes.
Okay, I'm going to give you the closing remarks, Engineer Khaled, since you are our host. I've been with CMF since day one, and I've seen the huge improvement over the years. It has become, without a doubt, a global destination. So my question to you, what's next for CMF?
Thank you, Fatma. I think for us, CMF have developed over the last few years, bringing together the right discussion, the right meetings between investors and corporates. I'm happy to inform you about this version of events have scheduled more than 600 physical meetings between investors and issuers around the world in the next couple of days, which will take place physically, an investment discussion. And that is what CMF is about. As far as taking CMF global, I'm happy to announce 2 global events by CMF. May will be conducted in Hong Kong, and October will be conducted in New York, inshallah. And that is our plan for CMF.
So I guess we are heading to Hong Kong in May.
Thank you. Thank you very much.
Yeah. Bonnie will be our host over there, and NASDAQ will be our partner in New York, and that is what CMF is all about, bringing exchanges in the middle of issuers and investors.
Khaled, Bonnie, Roland, Nandini, thank you so much for this exciting discussion over global markets. Thank you very much.
Thank you.
Thank you.
Well, thank you, Ms. Fatma, and the panelists for such an engaging conversation. Really exciting to learn about CMF's growing global presence. Mark your calendars for the upcoming CMF in Hong Kong that takes place in May later on this year, followed by CMF in New York coming up in October 2025. We move on to our next panel of the day with a more focused view on the GCC markets and their roles in attracting more foreign investments into their respective markets. This session will be moderated by Mr. Faris Al-Ghannam. He is the Chief Executive Officer at HSBC Saudi Arabia. On his panel, we have Mr. Mohammed Al-Rameh, Chief Executive Officer of the Saudi Exchange. We also have Sheikh Khalifa Al-Khalifa, Chief Executive Officer at the Bahrain Borsa, as well as Mr. Haytham Al-Selmi, Chief Executive Officer at Muscat Stock Exchange. And finally, Mr. Abdul Aziz Al-Imadi, Acting Chief Executive Officer at Qatar Stock Exchange. Welcome all.
Bismillah, assalamu alaikum, ahlan, ladies and gentlemen. I'm Faris Al-Ghannam, and I'll be your moderator for this fantastic session that will start shortly. It's my pleasure to introduce my friends and colleagues. I'll go alphabetically. Sheikh Khalifa Al-Khalifa from the Bahrain Bourse, Haytham Al-Salmi, Muscat Stock Exchange, Abdulaziz Al-Amadi, Qatar Stock Exchange, and of course, Mohammed Al-Rumayh, Saudi Exchange. We will have around 30 minutes. We will talk about each of the exchanges, but we'll also speak about the GCC as a bulk, as a capital market. And maybe for me, I'll start with highlighting some high-level figures that the stage knows better than I do, but putting it in context. The GCC as a bulk today in capital market is almost $4 trillion of market cap, of which, by the way, more than 3 trillion is on the stage today. More remarkably, the ECM market in the GCC, and specifically the IPO market, have been on a very strong momentum in the last few years. In the EMEA region, for every 2 IPOs in the last 3 years, 1 of them has been in the GCC. And that reflects not only the fantastic level where the GCC exchanges have reached, but also it's an indicator of the very promising future that the GCC exchanges have. So this is a story, gentlemen, you are very familiar with, you know better than most of us, but I can reflect before we start on the question on the fact that this story is being more and more and better understood by global investors. We see it in HSBC, in our several conferences and interaction with investors globally, but you also see it in your own roadshows and discussions, and I hope to hear your reflection on that today. Let me start with you, Mohammed, if I may. So the year 2024 has been a year of a lot of achievement for the Saudi Exchange. Several strategic initiatives were launched during the year. Can I ask you, please, for the audience to reflect on that, to give your perspective on how did 2024 go?
Certainly. Assalamu alaikum wa rahmatullahi wa barakatuh, and good afternoon, everyone. And thank you for attending Saudi Capital Market Forum. 2024 was a great year for us. I mean, in exchanges world, we look at many numbers, many metrics, but there are 2 main metrics that we really focus on. One is the liquidity. And if you look at the liquidity in 2024, went up around 40% compared to 2023. And most of it came from the foreign investor who grew their trading activity by around 80%. Subcategory from that is the HFTs. And another thing that we are focusing on is the listing. And also 2024 was a great year for us. So we did more than 55 listings, around 45 in the equity market, 13 on the main market, which is doubled compared to 2023, the rest in the parallel market. But what's interesting that it put us as #1, not just in the region, but globally, as the fastest growing exchange in the world. And we're optimistic. And what was great about those listings, it's well diversified from different sizes, great stories, and it provides even new opportunities for our investors, whether local or international. We've witnessed many achievements. We celebrated a listing for 100 securities and also introduced the capital management system, which is one of the great tools that we invented. And the beauty of this tool is, one, it made it easier for investors to participate in any IPO. So instead of having 3 receiving banks, now you have 15, which are the members of the exchange.
It gives people more access.
Exactly. And that reflected on the subscription. So the subscription, for example, in Nemo grew by 50%. and also made it easier for the lead manager to consolidate in a faster time, and that impacted also the time to market. So when you close the book till the listing, now it's shortened by 50%. And what's great about those things is even cheaper for the issuer.
Yeah.
Those three main goals of the system has helped us and will help us in increasing the listing, because now you are more efficient in allocating capital. So you close it from one IPO, you can move to another IPO, it gets listed immediately, then you can exit and enter another listing. So all those factors have fueled the growth in our listings, and also we're expanding it to other securities in our market. Maybe we can talk about it later, but we are very optimistic. And I think there are more to come. The average subscription in the main market was 1,000 plus, in the parallel market 400 plus. The performance in the second market was outstanding for most of the companies. So 2024 was a great year for us, and I expect 2025 to continue the momentum, if not bigger and better.
That's really amazing, and I agree with you. A lot of these initiatives are long-term in nature, which I think will continue its impact in 25 and beyond. And maybe we'll talk about that also further in this panel. Abdulaziz, I'll move to you, if I may. So for all the GCC, all of the GCC countries, actually, there have been a lot of transformational plans and different visions launched. And for many of them, the capital market is at the core of enabling these visions. That, of course, includes the Qatar National Vision 2030. So do you mind giving us an overview on how the capital market, how Qatar Stock Exchange fits into that, and how the year 24 has been, I mean, what progress has been made towards these objectives?
Thank you, Faris, for this question. And let me start with thanks to Tadawul and to invite us in this great panel. I'm really honored to be part with my colleagues and other GCC exchange. 2030 Qatar Vision, it's last November or November 23, it has been issued a third financial strategy, which is it has a 4 pillar. One of those 4 pillars, which is to develop the capital market in terms of the insurance, finance, and fintech, and the capital market itself. And the capital market itself, it has a clear KPIs. That it's really pressure all of us in the capital market as a stakeholder in order to work to achieve that KPIs by 2030. And that KPIs should take the market match double than today in terms of the liquidity, in terms of number of listed, in terms of the asset management business, in terms of the technology, in terms of the type of assets, and all of that. It's aligned to be help the third financial, or to help the national vision to be achieved. Now, in terms of what we have been done in 2024. Yes, of course, we are not, I wish we are like Saudis. We have a lot of the IPOs or listing, but we did a lot of development in terms of the infrastructure. So the whole infrastructure has been renewed. So we went with LSEC, with a new technology, and now we are in the middle of the journey to come up with the new system for the back office, which is post-trade. That needs a lot of enhancement in order to bring the best services for the institutions. And you need to be linked and well linked to the other exchanges. Now we are talking with Tadawul in order to activate our MOU. It has been signed in first quarter 22. So for dual listing, for example. But without that technology, the dual listing will not going to be that much active.
So the technology will enable you to execute a lot of these initiatives.
Exactly. So, and also, it has been, the market maker, for example, it has been become very permanent today with a 1 billion and sponsored by QIA. Short selling, lending and borrowing, it's become very, very systematic now. Yes, there is not yet that much demand, but in terms of the rules, regulations, system, it has been launched successfully. In terms of the rules regulation, we did a lot of efforts in terms to develop the regulation. This is the most important for us in order to enable the investors to invest in our exchanges easily, smoothly. You know, today, the investors, every day, they are coming with more challenge requirement. If we are not caught up with all of those requirements internationally, no way we can reach.
Of course.
Specifically, we are part of the emerging market today, so there is no excuse for GCC overall in order to not become. Today morning sessions, it has been comment on very, very excellent things has been achieved in GCC. Either number of IPOs, as you just mentioned, either number of investors, FDI into the GCC overall. So last November, as I mentioned to you for us earlier, which is, I was in New York, and we were discussed with a couple of investment banks, and they will start looking to the Middle East separately than GCC. And they start to categorize GCC separately, and that is meaning, might be in the very near future, the international indices, they will gonna have a different type of requirement for GCC, right? So I meant to say the opportunity is here. There's a lot of infrastructure has been developed in Qatar. Yes, there's not much IPOs, but I think within next years, we will gonna see a good number of IPOs. And that, by the way, we are getting benefit of what is happening in Saudi.
Of course.
Right? A lot of primary market today, it's become very, very mature, and they are really, the perception has become totally changed. We were talking last 10, sorry, I take time, but please. We were talking to the business owners last, let's say, 5 to 6 years, and today it's totally different perception in those owners. So willingness and appetite to the capital market, it's really amazing in the primary market.
That's very powerful, Abdulaziz, and I'll second your point around how investors look at it as a bulk. We see that actually in our own GCC conference, HSBC GCC conference, which we do annually with all the exchanges. Increasingly, international investors are looking at it as a bulk, and once they get more familiar with one exchange, liquidity naturally flows to the rest of the region. Shukran, Abdulaziz. I'll move to you, Haytham, if I may. So also last year was a year of progress for the Muscat Stock Exchange, the capital market incentives program, and a lot of the primary market activities. Your perspective, please, for our audience.
Thank you, Tadawul, for bringing us here. And, we have been very actively trying to move Oman's market, toward the EM category. To do so, we have put a plan, a strategic plan, that has been cascaded from Oman Vision 2040. And what we have seen that Oman Vision 2040 has 3 main pillars that will bring value to MSX. The first one is, the diversification of the economy, and that will move the government to go out from the legacy of oil dependency toward more sustainable, diversified economy. So getting out of such investments will mean divestment. Divestment, we want to be the first route for that. Second thing is, bringing FDI to the country, and we understand that the money is covered in terms of investments, and they want a resilient, well-structured place to join. And it's usually capital markets. The third thing is the partnership with the private sector. Again, that's through partnership, and it has to be through capital market as a well-structured place with governance and everything. So with those 3 main pillars, we understand that the first route will be divestment through MSX. We started a strategy of ticking the boxes of all the required market infrastructure to make our market accessible, attractive. We understand we have a very good listed companies in terms of dividend yield, performance, in terms of stability, and we want to put those companies on the radar. So last year was a very active in terms of liquidity boosters and market cap appreciation. So we had 2 listings. One of them was the largest IPO ever in Oman, brought to the market $8 billion and it is the largest company listed currently. And it's a very unique business in terms of their business model in the oil and field. It's their exploration and production of oil.
And good participation from international investors.
Yes, indeed. Along with that, it offers currently with the market price almost 10% dividend yield. That itself brought to the table an increase in the market cap of almost 11%, from almost $63 billion to $71 billion, almost close to 72. It brought activity in the market by almost 11%. The engagement in terms of new practices related to investor relations, related to dividend yield policies. They have a clear policy that they will distribute semi-annually dividends. So all of those has been a good booster to our market cap. So talking about MSCI, so we require to have 3 companies, meeting some, those. So we have brought now OQEP, and now OQEP has met one of those. It's one of the companies that meets the requirements. Along with that, we were focusing on liquidity boosters within 2024. So we pushed the companies, the issuers, to appoint liquidity providers. And we have the top 10 companies having liquidity providers. The government, it's a challenge that become an opportunity. Consolidation of pension funds, that create concentration of ownership. So we were very proactive, went to the government, discussed about these challenges, and our mandate is to upgrade the market. So they agreed with us that on the top 10 companies, they won't own more than 5%, and the remaining will be divided into discretionary portfolios, security lending and borrowing, liquidity funds, and the first liquidity funds has started during 2024, and 2 more funds to come. As well, we are working in market maker fund that will be dedicated for the market upgrade. So we're talking about 4 funds just to enhance liquidity. We launched the security lending and borrowing, short selling regulations, and IR best practices, guidelines. As well, 2 weeks ago, we launched the dividend policy, which was the first maybe in GCC to have a clear guidelines on dividend policy.
That's really impressive. Thank you, Haytham. I'll move to you, Sheikh Khalifa. Also, I understand several incentive programs and developments in Bahrain Bourse, if you don't mind.
I guess we want to promote IT and it's not working now.
Okay.
Basically, first I would like to thank our host, Tadawul Group, for inviting us. But regarding the question, there are few points my colleagues mentioned. First, I remember Lakh Mohammed was talking about the IPO last year that has a backlog issue from the number of IPOs. Is it still the same or?
Kind of.
Kind of.
I can tell you it has only increased.
Yeah, that's...
Sheikh Khalifa is referring, you remember, Faris, we have many requests that exceed the capacity of financial advisor, legal advisor, which build up the pipeline. And we always say to Sheikh Khalifa, say, mashallah. And,
yeah, I wish we have this issue.
It's a good problem.
Yeah. But the thing is, as our colleagues mentioned, whatever happens in Saudi, it trickles down to GCC. So we're always happy to see the developments. But in terms of the context of Bahrain, we mimic what Muscat is doing in terms of having a plan. In Bahrain, we have the Economic Recovery Plan that was launched in 2021, which has a few pillars, but with the context of a broader economy is the diversification of investment. Right now, in terms of GDP, the oil sector only contributes to 15% instead of 40% 10 years ago. And 85% comes from different sectors. So that's in terms of the macro level economy. But in terms of Bahrain Bourse, we initiated many initiatives, starting with the amendments to BIM market, which is similar to Numu market in Saudi, which led to listing of some of the companies, along with incentive program that are on the buy side and the sell side. So we have the listing incentive program and the trading incentive program, which also resulted in having 3 market makers joining us last year, which I believe personally will have an effect on the market positively, and we'll have a milestone to achieve in 2025 regarding liquidity because of that. Other than those 2, there is an IPO pipeline that started with the government, led by the government, along with some of the entities like Mumtalakat and so on, to list some of the GREs in the exchanges that will drive the public or private sector into listing, utilizing the listing incentive program. So they all work together to try to promote or increase the liquidity of the market, increase the number of investors, also fragmentation of investor base. Because in Bahrain, we tend to have less retail and more institutional investors. So that will help us fragment the investor base as well. And moreover, we plan to increase the number of incentives program that will include not only the trading side and the listing side, but also on the debt market. I remember His Excellency, the Minister of Investment, mentioned having the debt market cross-listed or dual-listed elsewhere, and we'd love to have it in the region. So this is something we hope to continue to work on across GCC and see where it goes.
I think the debt market is going to be a priority for the entire GCC for the reasons you mentioned. And I do agree with what you said, Sheikh Khalifa, on the importance of these initiatives to kickstart and boost the liquidity on the secondary market. So good luck with that. I'll go the way around, and we are more than halfway. So I'll ask you, gentlemen, to maybe in this second round focus on shorter answers. And I'd like to maybe emphasize the GCC theme. You all are members of the GCC Exchanges Committee, and I've been hearing it's working really well with good chemistry and good collaboration. So I'll carry on with you, Sheikh Khalifa, going the way around. What do you want to reflect on the work of the collaboration, let me call it, between the GCC exchanges, be it on the regulatory side, sharing experience, technology sharing? If you don't mind enlightening us, please.
First and foremost, I would like to acknowledge the team behind Tadawul, who worked on making GCC Exchanges Committee works the way it is now. There is less bureaucracy, more action. We have delivered in some of the items. Maybe it's not visible to the general capital market participant, but the amount of work that's year-round is tremendous. We meet on quarterly basis, and we entertain ideas. Some of the ideas doesn't go through, but we move on to other ideas and see what could possibly be done. And we have a short-term vision and also a long-term vision in it too. So this is where I want to sum it up. You want a shorter answer, and this is
Thank you. Shukran, Allah Sallam. So I'll go to you then, Haytham. Looking at the priorities, if I may call it, across the GCC, cross-listing could be one of those themes where collaboration can probably accelerate in the near term, and other initiatives to also boost the secondary market liquidity. Any perspective you'd like to share on those 2 points?
I don't have short answers.
No.
Even to my name. It's good to mention that I believe that investment doesn't have passports. It's about the accessibility, and investors are looking for good opportunities and investment rewards. So they can move cross-border easily, and the best thing to do is to collaborate and make it the liquidity flow goes through the markets. So there are a lot of initiatives. We have almost signed with most of the GCC markets. So we are ready in terms of enabling cross-listing, and it's now part of the issuers to decide to cross-list. As Oman, we understand that the lack is that our market price are below book value of most of the companies, so they do have the motive. With a proper awareness and marketing campaigns, I think we will reach to close cross-listing arrangement. We, with Bahrain and Abu Dhabi, are part of Tadawul Hub, and Tadawul Hub is all about passporting and easy access. It's a different concept of Asian Connect in terms that it allows trading through local brokers and settling through local clearinghouse. So itself, it's an initiative, and the first reward for us as Oman, we see market makers are ready to operate cross-border into Oman. So that's the first thing, and we have announced the first license last week, and hopefully that they will start operating soon.
Fantastic. And that was, by the way, short and precise. Shukran, Haytham. Abdulaziz, if I may, again on the GCC theme, but more on how can the GCC exchanges attract more international weighting, more international investors? Your perspective, please. And you have highlighted some of that in your first round.
I think, as I touched base earlier, which is we are doing this, by the way, so which is we have to be advanced to facilitate for the ease of doing business in the GCC in terms of the technology. We should enhance of market accessibility. It has to be much easier, and which is we are doing that much. We are working at, we are meeting at least 4 times a year in order we are discussing a lot of the important items such of passporting, such of unify investor number to find a way of to link the technology with each other. And also we are doing this is for the 5th year with HSBC. We are doing a roadshow in UK, and we are aiming, leading in Tadawul, aiming to do that roadshow, GCC roadshow, and maybe starting in Saudi. And then we go internationally even, go abroad, not just to London. Might we go to New York, to the Asia. And also there is a lot of other type of, like ESG, we are unified to have a requirement or a guidelines of the ESG reporting. And as Sheikh Khalifa, he's just mentioned, might be is not that much feasible, but we enable that and make that ready for companies in order if they would like to take it as a guideline. So there is a lot of cooperation is going on, honestly, in terms of the services, in terms of the, and we are learning from each other.
Yeah.
If, for example, Faris, quickly, European exchange, more than 10 years they tried to unify such of rules. Still they did not reach. So what we are doing is not an easy, but we are doing really hard, and we achieve a lot of good things.
That's fantastic to hear, Abdulaziz. Shukran. Mohammed, you are the chair of the committee. Anything you would like to add, reflecting on what you heard? Or if I may, if you can maybe highlight the priorities you think the GCC as a bulk should focus on in the short term.
Well, so we formed this committee. I think, as my colleague said, or my brother said, when we go to any international investor, they look at us as a block, standalone. And this is because of many reasons. We have a lot of similarities. There are similarities in, one, the political stability, the leadership, the transformation and diversifying away from oil, which resulted in visions that you find it in every GCC country, the young population. So the fundamentals are almost similar. And on a micro level, when you go to the stock exchanges, we have a lot of similarities as well, especially back then. No one was part of the inclusion. The market's mostly dominated by retail activity, a few IPOs, and then we've gathered and we've worked on many initiatives and an example for inclusion. So we all included except for Bahrain and Oman. So all of us shared our experiences with them and also worked on doing a roadshow within the GCC. So Omani companies did a roadshow here, Saudi investors went to Bahrain. We worked on many issues like the sustainability, and we've actually published a unified guideline for the GCC. And the beauty of it, it was a guidelines for us, but mandatory for other markets. But still, we all agreed on the framework, and that resulted in a growth in the investment. For example, in Saudi, we went threefold in the past 3 years. What we are looking at many initiatives on the back end, on the front end, and they can do it bilaterally, like the Tadawul, and we put a commitment in ourselves that every market should have a bilateral agreement with the rest of the GCC, so every exchange must have a direct channel with the other markets, which will ease the cross-listing. We also share our plans on the fintech. We'll try as much as possible on harmonizing the regulations. So we discuss, and there are markets who are advancing in an area more than the others. So how was their experience? We share, for example, some of the things that we're currently doing. I think the value that came out of this committee is outstanding. There's no bureaucracy. Everyone, I think they have their own priorities. They are similar, I think, in general, and they have specifics. Depends on where they stand and what are their plans. But we know we have a big duty trying to support our economy and developing a vibrant capital market which should support the private sector. This is in general our views for 2025. And I want to tone down my optimism because my boss is here, so I don't want him to increase my targets. But comparing...
I don't think that would make any change, by the way.
So in January 2025, we did 6 listings compared to 2 listings in January 24. And I think this year we will have an outstanding result on the debt market, since you've asked about it. As of today, we have one. It's the first one under the new regime, which we aim to have a faster, cheaper access to the debt market for our listed company for the reasons and how important the debt market for listed companies and for the economy. And this week we are doing 3 concurrent IPOs, 2 on NUMO and 1 on debt. And based on the early numbers, all of them are doing extremely well. And we believe this will open the door for more companies to explore and tap into the debt market. And we believe this year will be an outstanding year, not just for equity, for the debt and for the funds. What we are also working on enhancing our market-making infrastructure, which will lead to increased liquidity in our markets, and this has a direct impact and correlation with the number of listings. So many, I don't think we have time.
Yeah, but may I add just within the GCC committee, I think it would be good to announce or give notice of the progress we did now with the unified IR guidelines.
Please.
Which is going to be released or launched very soon.
That's fantastic to hear.
So, hopefully by today.
Fantastic. You're saying this is likely to come out in days, yeah? Yeah. Maybe. Just to make sure. Okay. Good luck. I'm going to put pressure, and I'll take a note of that. Gentlemen, this is really impressive momentum, and I mean, strong primary market, as I said at the outset. But I hear clear priorities across the different exchanges, focus on sustainability and focus on improving secondary market liquidity further to the successes achieved. I think for us, this is something to take note of and reflect on for investors and everybody alike. We're running out of time, but we'll extend a little bit. We'll give each one of you a minute, if I may, with any key messages or call of action you would like to highlight to our audience today. So I'll go with you, Abdulaziz, from the end.
Yeah, I think the message is it's the opportunity in the Middle East and specifically in GCC, and we are really taking that in front of our day-to-day responsibility in order to enhance our services, technology, and to bring more and more companies. Specifically for Qatar, we are really focusing to attract more and more private sector to the market, to build more and more a type of the assets. Still, we don't have that much. We did not yet touch the debt market yet. Still, we did not have touched the real estate as a REIT and all of that stuff. Tokenization, it's become very important subject. We are really looking to that seriously. So this is, I think, within the next five years, we're going to be a lot happening in all of our exchanges in the GCC.
Thank you, Abdulaziz. Haytham.
It's better, talking while seeing the counter is already zero, so there's no pressure. I will say that we have mentioned the primary market is too active, and we need to really focus on liquidity. We, as an exchanges, we are doing a lot in terms of, ticking the boxes of all what can bring supply and demand together. And it's not within the countries, it's within the GCC in terms of harmonizing the standards and so on. So we can benchmark between markets instead of just benchmarking between companies inside the same sector, same market. But one of the most messages that I want to give to the issuers mainly, that the infrastructures are ready. They need to build the awareness of maximizing the shareholders' wealth. And that comes when you have proper communication with the investors. I will quote one of the good messages that I got from my chairman, that we need to teach companies or issuers not to become a public company, is to be a public company and sustain. And that will create liquidity when we have the information, the communication with investors, the momentum that they can see the stories of the companies and how it grows, and that will bring liquidity.
That's a nice quote, by the way. Thank you, Haytham. Sheikh Khalifa.
I will just reward what they said, but basically we have robust economies, dynamic. The number of opportunities that we have far supersedes anywhere else in the world. And numbers speak for itself. The international capital that flows or kept flowing in our region, especially GCC, in the last few years is a testament to the stable environment that we have, the amazing infrastructure that we built, whether it's the technology, the legal, the business side of things. And therefore, I would hope that from the investor side, they seek these opportunities, and also the issuers to look at exchanges as a different method of funding their future. Not only for different purposes, but essentially exchanges link issuers with investors like banks, lenders, and borrowers. And we want to go back to this simple formula for them and provide them with the ease of IPO, less costly, and have the ability to grow their company within the capital market.
Makes sense. Thank you. Mohammed, any last closing statement or update you'd like to share with the audience?
Yeah, maybe I'll start with what Sheikh Khalifa ended. We're committed to present our economies in the best possible way. The opportunities that our exchanges provide to the local and international investor will continue the momentum, and we're committed to grow their investments in our markets. For us at Tadawul, we've held the number one in terms of growth in listed companies 2024. We're committed to hold this position this year, and it will be a busier year, more listings, more liquidity, and we better serve the market participant, whether they're issuers and investors. It will be a great year, inshallah, for us in Tadawul and for all the GCC exchanges.
Very, very well. Shukran jazeelan, Mohammed, and thank you all for this very insightful discussion. We went a little bit over time. I'm sure they're upset behind the stage, but honestly, this is a privileged panel, and I'm sure the audience had a very insightful takeaway from this. So I'd like to thank you all for being with us today, and for those visiting Riyadh from outside, but also living here. I hope you really enjoy the fantastic weather and enjoy the beautiful city. Please join me in expressing gratitude to our panel today. Thank you so much. Yeah, I think
Well, thank you very much, Mr. Faris Al-Ghannam, and the great panelists for that very engaging conversation and fantastic news about the capital management system launch and the commemorative book celebrating the listing of 400 securities on the Saudi Stock Exchange. It's a big takeaway from that. Next is going to be lunch, which I'm sure many will be happy about. It's going to be a short break. We'll be back at around 1:25 p.m. in about 25 minutes from now. Lunch will be in the courtyard, and I hear that the orchestra, the Toref Orchestra, will be playing there as well. So we'll see you all back here at 1:25. Thank you. Well, welcome back, everyone. Hope you had a refreshing break, and I hope you're ready for some exciting announcements. We begin this segment with our MOUs and announcements that reflect this year's theme of empowering connections. Each of these partnerships represent a step forward in enhancing Saudi Arabia's capital market and driving economic transformation in alignment with Vision 2030. Without further ado, let's now begin with our first signing. Our first signing will be with the Saudi Exchange and Jakarta Futures Exchange. We're pleased to announce the signing of an MOU futures between the Jakarta Exchange and the Saudi Exchange that aims to encourage large Indonesian firms to access the Saudi Exchange. Ladies and gentlemen, a round of applause for the Saudi Exchange and the Jakarta Future Exchange. And now for our second MOU signing, we have Maqasa and FIS Global. This is an MOU between the Securities Clearing Center company Maqasa and FIS Global to provide the required technologies to support participants in the Saudi derivatives market. Ladies and gentlemen, a round of applause for Maqasa and FIS Global. And for the third MOU signing of today, we have the Saudi Tadawul Group and Financial Academy. We celebrate a strategic collaboration between those two entities. This MOU aims to offer specialized programs for the financial sector in partnership with local and international universities. The Saudi Tadawul Group and Financial Academy. Another round of applause, please, for the Saudi Tadawul Group and the Financial Academy. For our next MOU, we now move to an important agreement in the realm of investment. Awqaf Investment Company and SNB Capital are signing an investment agreement to help develop specialized investment products to serve private awqaf with total assets of over 8 billion riyals. Round of applause for Awqaf Investment and SNB Capital. Next is a strategic partnership between Awqaf Investment and Ihsan. This investment advisory agreement aims to provide advisory services, advancing Awqaf fund management. This is our 5th MOU of today between Awqaf Investment and Ihsan. Get a round of applause for Awqaf Investment and Ihsan on their MOU signing. And for our 6th MOU of today, we now turn to a major announcement between Al Jazeera Capital and Target regarding the launch of the Wahat Al Nakhil Real Estate Fund. This fund has a target size that is exceeding 1 billion Saudi riyals. Al Jazeera Capital and Target. Congratulations, Al Jazeera Capital and Target on their MOU signing. And finally, we're pleased to announce an MOU between BMG Financial Group and Dalipal Holding Limited to enhance Dalipal's presence in the Middle East, including a potential listing on the Saudi Stock Exchange. Congratulations once again to Dalipal Holdings Limited and BMG Financial Group. Ladies and gentlemen, today's signings exemplify our unwavering commitment to forging a more interconnected and innovative financial landscape. These strategic partnerships will pave the way for an enhanced market that is full of opportunities, expanding global collaborations, and a strong Saudi capital market. Please join me once again in congratulating all of our partners on these landmark agreements. We now move on to further announcements. We have several exciting announcements to share with you, demonstrating the ongoing growth efforts and commitments to establishing a capital market that evolves with the needs of the stakeholders in mind. WAMID Data Products. We're delighted to announce the collaboration between WAMID, Google Cloud, and Deloitte to launch and develop capital market data products. This collaboration reinforces SDG's role in driving innovation and digital advancements in the Saudi capital market. Also, IDA Connect. We are pleased to announce the launch of IDA's mutual fund platforms, a seamless solution for accessing and managing mutual funds in the Saudi capital market, excluding those listed on the Saudi Stock Exchange. So exciting new offerings by STG subsidiaries, in addition to the ones already announced throughout the day. Thank you, everyone, for joining us for these celebrations, and enjoy the rest of the event. We now move on to track 3, of course. We now move on to track 3 as the team prepares the panels on my left. The next panel is entitled The Capital Crystal Ball, the Future Landscape of the Capital Markets. On this track, it explores the impact of technology and how investment banks and asset managers are adapting to meet the future needs of their investors. For this panel, please join me in welcoming our moderator, Mr. Yazid Al-Salloum. Yazid is the Managing Director and Chief Executive Officer of Bank of America in Saudi Arabia, Kuwait, and Bahrain. As well as our esteemed panelists, we have Mr. Raed Al-Humaid, CMA Deputy of Market Institutions at the Capital Market Authority. We also have Mr. Mohammed Al-Shamsi, Chief Executive Officer at Diraya Financial, as well as Mr. Naif Al-Misanid, Managing Director and Chief Executive Officer of Al Jazeera Capital. And lastly, we have Mr. Lu'ayba Faqih, Head of Securities and Acting Chief Technology Officer at SMB Capital. Welcome all.
Assalamu alaikum wa rahmatullahi wa barakatuh. Good afternoon, ladies and gentlemen. Welcome to Riyadh, where it actually feels like London today. So a warm welcome to my fellow panelists, and a special thank you to the Saudi Tadawul Group for organizing such an amazing event today. So As we find ourselves inching towards the middle of the 21st century, we find ourselves encountering new investment trends. Players are finding the need to diversify their income streams. We also have technology kind of flipping the whole game on its head. Investor behavior and adaptation is shifting as we go along. The more players we have in the game, we find the need for collaboration to produce synergies or fierce competition. And is the capital market ready? Are the players ready today? So we have a really insightful panel tonight, and we'll be hearing from our guests today on some of these topics. So I'll begin with Mr. Naif al-Misnid, from CEO of Jazeera Capital. So with the kingdom's kind of investment and financial services landscape evolving and changing rapidly, what are the asset classes that are garnering the most demand, you would see, and how is diversification shaping the long-term growth strategies?
Thank you, Yazid, and good afternoon to everyone. So I think with the change that we've seen over the last few years in the landscape of investments, and this was fueled and driven mainly by the big initiative 2030, investors continue to track returns. And that's mainly happening today on the traditional asset classes, so we still continue to see growth and demand happening in the equity market, in the real estate markets. But also we've seen a new introduction of asset classes that are somehow new to the Saudi market. So we've seen a bigger role being played on the VC side. Private equity is becoming more and more popular, and investors start to discuss and the investment landscape that can be provided in that asset class. All what I want to say is the following. I think we've witnessed a dramatic change on the behavior of the investors and the players themselves. So even the institutions that are taking the lead today, I would say, on the market, used to become more focused toward the traditional investments. I think they felt the change and they felt the threat at the same time, and they saw the opportunity. So those who are not into innovation or who are not planning to invest in their future will find themselves very soon in a position that is very difficult for them to continue on growth. A simple example is the real estate sector, for example. Simple real estate used to be the infrastructure and the superstructure. Nowadays, I think there will be more asset classes to be introduced within the underlying of real estate, whether it was mezzanine lending, sukuk issuances, and so on and so forth. Private credit is a very big asset class that I think will come to the Saudi market very soon. Fueling the vision cannot stand alone only on the balance sheet of banks. In my opinion, that asset class will be increased dramatically over the coming 1 or 2 years, and there are attractive risk-adjusted returns for investors, and it will be an important component of many investors, in my opinion, in the near future.
Thank you very much, Naif. Mr. Ra'id Al-Ahmed, a question for you. From a regulatory standpoint, how do you see market evolution playing out over the next few years, particularly when it comes to economic shifts, emerging investment trends, and ESG integration?
Good afternoon, Yazid, and good afternoon to you all. I'm very glad to participate in the CMF 5th version of Tadawul event. For sure, Yazid, I think the topic that you have mentioned is very, very important, and I think the nature of capital market is that it is definitely always evolving. And maybe just to touch base on what has been happening in the last 5 years, I think it's definitely a massive growth and the massive development in all aspects of capital market. If you take any element or any statistics, I think you will find it doubling or even more, whether it's asset under management, whether it's number of market institutions, unit holders, account opened, fintechs. I think everything has been massive. Maybe just to touch point, since we are in Tadawul event, to 3 statistics that are related directly to the market. Tadawul has been in the top 10 markets in the last few years in two aspects. The first one is the market cap of Tadawul, which is $2.7 trillion. The second is the number of listing and IPOs. And I think the average in the last 2 years has been 50 or more than 50. And this also puts Tadawul as in the top markets when it comes to listing and offering. I think this all has been happening because of economic activity, but also it has been enabled both from an infrastructure and a regulation point of view. And let me just pick just a few that has been recently announced. I think the first is the development that has been done in the debt market. And I think last year and end of last year in specific, there has been an overall revision on the debt market and what does it take from end to end for an issuer to go into the market. The revision has been done. The aim was two things: time that is taking issuers to go to the market and what would be the cost implication in that. Requirement for the prospectus of the offering has been reduced almost 50% of the requirement in all type of offering, public, private, and also exempt offer. Definitely it has been a very exciting 5 years, and I'm sure that the future will have much more, and I think there is also much more plans to come.
Thank you very much, Raed. Just shifting gears to tech and automation, I'll direct my next question to both Lu'ay Bafaqih and Mohammed Al-Shammasi. Both of you represent institutions that are exemplary in the tech space. I mean, I think there's no doubt that technology is completely transforming the financial sector. But my question is, how are digital platforms, automation, and AI reshaping investment services and market operations?
Thank you, Yazid, for hosting us. Thanks for Tadawul for this great event. Very well attended globally. I think we have seen participants from all over the globe. So it's a testament for how advanced is our capital market and, inshallah, the future of our capital market. If you look at probably what Naif mentioned is the asset classes and the changes we have seen in the asset classes. If you look at this putting a different lens and look at the participation of investors within this asset classes, after many years of decline in number of participants in the mutual funds we have seen from 2006 peak, we have seen many years, almost like a decade of a decline in number of investors. What really changed this trend or bucked this trend is really the innovation side of the business. So we started to see new asset classes like the REITs, then this was followed by a wave of new fintechs playing mainly in the global advisory space, etc., that really have changed dramatically the overall picture of the market. So technology has not only played a transformation role for how we operate as CMIs, but it also really participated in creating the next generation of wealth for the market participants. If you look at the number of new investors joining these new platforms, working with platforms like us at Diraya, we have seen really an exponential growth within that side of the business, and it really transformed the trend of the market after many years of decline. Robo-advisory is one example of that. We have seen in other places, in other parts of the world, the growth of, for example, social trading as a mean also of attracting the mass segment into the market. So these innovations and these new changes in the market is inviting a larger segment to participate in the capital market activity, helping in improving the overall growth of savings, overall growth of people really looking for retirement solution, saving solutions, etc.
Joy?
Yeah, Assalamu alaikum. I want to look at technology from a different perspective. And actually, I always look at technology from 3 angles. One is the data, okay? And I think all CMIs now, they need to start looking into the data. If you look into how the systems today arrange, most of them, they are not preserving the core system to perform what it's supposed to do. You see that lots of coding, lots of development on these systems to either capture data, storing data, generating reports, which is not the ideal. So data will be the name of the game, and preserving the core systems to perform what they are supposed to do. Because AI cannot work without data, CRM cannot work without data, robo-advisory cannot work without data. If you sort this, then we get into the implementation of the technology. And here, technology, we need to look at it on 3 levels. From a client perspective, it will bring more capability, more solution, and new product offering. And sometimes it's not, I would call it, it will be an incremental innovation. So if you have market making, you bring SBL to it. You have custody with fund admin, you have a new offering, which is asset servicing. Then if you have different components, you put it together, you bring prime brokerage. So this is from a client perspective. Technology will enable new offering and servicing that you can offer to the client. On an organizational level, it will bring huge efficiency, and this is where also the technology needs to serve, because once you do that, you will get into the third element, which is scaling. And with scaling, it means clients and the market will be looking for a lower cost and less expensive offering that you can provide to them. So I see that there are lots of effort that is being, CMI is doing at the moment on technology, and there are some pioneers when it comes to robo-advisory. Also, FinTech is providing some good offering, which is gonna keep enhancing, and we will see a fruitful, inshallah, sector.
If you allow me, Yazid, I think just to add to what Mr. Mohammed and Mr. Lu'ay just mentioned, I think definitely technology has impacted scale big time. And I think given that the Saudi population is definitely a young population, the average age of the Saudi population is 25 years old, and 60% is below 30. If we look at the robo-advisory, as my colleague just mentioned, I think robo-advisory has only introduced under the FinTech Lab as one of the experimental model in 2022. Number of portfolios that has been opened up to now is 382,000 in just 3 years. And I think this is exactly what my colleagues mentioned, that technology and of course the demography of the Saudi Arabia can impact scale big time. If we go even more specific, I think 68% of the robo-advisory clients are below the age of 36. So this also gives some shed lights about how technology within a young population can definitely be a disruption and impact the scale as well.
Thank you, Ra'ed. And I think that that's an excellent segue to my next question, which I'm going to come back to you, Lu'ay. So Ra'ed mentioned the young population in Saudi. With this young population becoming increasingly tech-savvy, how do you see investor preferences shifting? And also, how are the other players in your network, how are they adapting their offerings to cater to these new market entrants?
I think the market is going through a major shift, especially with, I would call it the young generation. One of the key or major changes that we are looking at is the definition of trust. Before the trust, I need to know where are you, I can, deal with you, you give me all the papers and everything. Today, young generation, they trust someone in another country, they give him his credit card, and they are expecting, the shipment to reach to the door. So trust is becoming more about reliability, availability of the service, and they don't want to talk to anyone. They don't want to bother them with calls or physical or one-to-one meetings. They want to do everything while they are on the go. So digital experience is basically, this is becoming part of their lifestyle, and they're expecting to be served from this angle. This means that the experience that we need to bring to them and the way we are offering our service is not becoming, you know, like with, I call it older generation. It has to be enhanced and to cater for that. I always tell an example how they are shifting. We used to tell our kids, don't ride with a stranger. Today we ride with them more safely than, you know, maybe other. So this is how things are changed, and we need to cater for that.
Absolutely. Mohammed, how do you see Saudi investor preferences shifting and evolving, and how should APs such as Diraya adapt to these shifts?
So if you look at the overall segmentation of Tadawul exchange, so if you go back like 10, 15 years ago, this was highly dominated by retail investors. The second wave was the growth of institutional investors into the market. Third, we have seen international investors coming and really sitting themselves here in the market. And now we started to see a very different new set of traders, mainly in the algo space and the market making space, also making their way into the market. So the liquidity pockets that are really available in the market has been dramatically changed over, I would say, a decade and a half from where it is. And with that also, we started to see a lot of opportunities really happening and the innovation happening with the way we make money and with the way we invest on behalf of clients. So we started from the long-only traditional fundamental-based models into more of a style models. Now we started to see more of a algorithmic-based decision-making and AI-based decision-making. So all of these now are really shifting the trends, and we started to hear clients demanding a different way, new ways for us to cater for their investment needs. The game is no longer just a fundamental equity-based team that will provide you with a fundamental research and will make calls based on specific fundamental ideas. There are much more to that. And if you look also from the customer segment, and I have few teenagers in my house, and the way the new generation, the Gen Z, the millennials, they want really to conduct their financial affairs is really on the go. They want a similar experience to the way they order Uber, to the way they order books or services from Amazon or Noon. They want really the financial services to be designed for them in a way that with the least number of clicks, with the least amount they need to spend on the app, basically to go and change and challenge the traditional models that financial institutions has been operating, to make it easier for them with the least number of clicks. I'm sure the regulators want really to protect and safeguard against disclosures, against really suitability, etc. But this really gives us also huge opportunities as companies to innovate and find new ways of really staying in compliant and yet providing the services for this younger generation, which is very hungry really for saving products, for financial products. The overall disposable income in the country is growing, which really means that there is more money to be invested in financial and real assets. This is now the challenge that we need to live up to make sure that we have the products and services with the least touch points for this younger generation to enable them to invest and save.
Thank you very much, Mohammed. Naif, you mentioned the real estate asset.
A foreign investor that will be able to trade directly and will be identified as qualified foreign investor. The first one is residence in the GCC countries. After the period of the public consultation and implementing the regulation, can start immediately trading at the main market. The second category will be residents in the GCC country and in Saudi Arabia who has already worked in Saudi Arabia, opened an investment account during their residency. They can remain the account even after they leave Saudi Arabia or the GCC. And I think these two categories will definitely be a new flow of investor, will be a new category that will also diversify the type of investments of residents in the GCC and Saudi. The second, I think, 2025 will be the year to also look into a revision of the fund regulation providing more fund structuring, catering for different type of investments and asset managers as well. Passporting has I think, done a very good milestone of the GCC regulators agreeing on the passporting as a concept. Now each market is looking into the framework of that passporting and how to activate the cross-border of funds between the GCC countries. Another, I think, important project is related to the netting regulation, where CMA, along with SAMA and the Ministry of Commerce, has been more fund from Saudi Arabia. And I think we will also cater for those type of investors. This will be complementing the regional headquarters framework that has been announced by the Ministry of Investments. And I think this will also cater for a new entrants and new people that will establish in Saudi, establish fund in Saudi, bring know-how, bring asset management, and of course contribute to the Saudi and start looking from Saudi Arabia to the international market. So no doubt that the last 5 years has been exciting, but I'm really confident that the next 5 years will be even more exciting with much more growth, hopefully.
Thank you, Raed. That sounds exciting, so looking forward to hearing that announcement. Lu'ay, collaboration clearly is key to market growth, but how do some of these initiatives, such as fintech labs and advisory committees, how do they create open channels for innovation and feedback sharing?
It's extremely important because, first of all, you are bringing all the stakeholders together, okay? So from the fintech, the financial institution, the regulator, the client, so you can have this open discussion with them. So you are bringing all of them, so immediately you can test things in production, okay? Like you see if it's working or not. You follow through the whole process. The second thing is basically develop the technology itself. With these type of initiatives, you are enhancing the APIs that will come out of it. So how you're gonna, link to it, how it's gonna perform in the market. And the last and not least is basically give incentive to startup and to these fintech, to drive more technology. But also what we see today is with the evolution of what's happening, you see most of the fintech, they started with what I call the wrapper, okay? Whereas like they don't have the product or the service, but they come as a window dressing and bringing the product from someone else. And now it starts evolving into where some fintech, they are coming with a real core product or a solution that is really amazing, and it's something that we need to look into and to partner with them and encourage them because they will add value to all of us, definitely.
Thank you. Naif, with the increasing competition that we're seeing, how can industry players such as Jazeera Capital, how can you leverage strategic partnerships to enhance market positioning and also create some unique investment opportunities?
Well, in my opinion, the dynamics have changed in a way where it forces people to think differently. And technology was the first trigger. Now, the opening of the Saudi markets is another big booster that will allow us to think differently. It used to be, when you say think strategically or partnering up with someone, that used to be limited toward an industry players, and that usually take the shape or form of a JV or a merger and acquisition, and so on and so forth. But now, I think even that definition of strategy and partnership have widened enough where you could see a financial institution partnering up with a telecommunication company. You leverage the client base of the technology company with the product offering of the financial institution or the capital market institution. So limit is the sky when it comes to partnerships now, and people will be creative. And the Saudi participants have proven to become, all of the players honestly, have proven to prove that they are extremely well positioned to become innovative in their thinking process. One good example is a company that is presented today here, and we'll be congratulating Diraya for the listing, inshallah, very soon. But this is a company that started from an idea in IT, and look at Diraya's today. A company that have been how many times covered? 160 plus?
162.
But that's a good example that I think makes us proud from one side, but also it gives a clear message that the market is so big and so wide where people should be encouraged to think and think differently. Now, the fundamentals are there. The basic thinking process will continue to be as is. But the way of tackling new businesses, in my opinion, will change dramatically. Data, technology, partnerships, regulation, the movement is so fast, and I'm not sure how we'll be coping with all of these things happening, but this could also lead to some sort of specialization in the financial market. Because at a certain point, we all competed in two simple things: equity, real estate, and trading. These was the three products that we could offer to the clients. Today, I think you will see more and more specialization for certain institutions in the real estate, in the fintech space, in the VC, in the private equity, and that will require a lot of work and partnership over time.
Thank you very much, Naif. Finally, moving on to future readiness and capital market developments, I'd like to point a question to the regulator on the stage, Ra'id Al-Hamed. In the medium term, over the next couple of years, what are the next major market developments that financial institutions such as ourselves should be prepared for?
So I think maybe we mentioned a few, and I think definitely what will be in the near future, I think all of these aspects are aspects for market institutions to look into. And I think we mentioned the account opening, and that will introduce new categories. And actually that will make market institution should be ready to account for how can we open accounts for people in the region and also international. How can we automate that? So this will be number one. And I think number two, looking into the fund regulation that will in the very near future will be revised and passporting will be introduced. What does that mean? To look and compete from a regional perspective to start offering. And I think definitely Saudi Arabia as the largest capital market will definitely have an advantage. Market institutions should position themselves properly to start attracting more, offering their investments funds even more. I think also a very important milestone is looking into the debt market. And I think the debt market has many changes that has been done last year. I can mention a few that we have already last year licensed the alternative trading services, and I think this will also provide new investor base to the debt market and hopefully newcomers to join. The market maker that has been introduced a few months ago specifically to the debt market, we hope that more institutional market maker will participate and provide liquidity. And I think this is something that whoever will pick it up will definitely generate more to come. Thinking about the offshore licensing, and I think the offshore licensing has been looked into differently because usually offshore will be a separate regulator with a separate regulation. I think the idea that we are introducing is complementing the regional headquarters with the same regulator. And what does that mean for newcomers to come into Saudi, base their business and use it as a hub? So no doubt, I think the idea is to look at the Saudi market not from a local perspective, but from a regional and international perspective, and how can we attract more?
Thank you. We've obviously created an environment with the regulator's support that really fosters healthy competition. So to make room for this question, and I'll leave this question to the rest of the panelists, and I'll let it be the last question. But what advice would you give an existing young player, an existing young competitor firm? What advice would you give to kind of stay ahead of the curve in this highly competitive environment?
So I think definitely the potential is huge. The plans and what is to come is much more than what has happened. I think the key is to start look at the Saudi capital market from an international perspective. The idea is to start thinking regionally and internationally, and how can we attract more. I think this will be the next chapter for the Saudi market.
Inshallah. Any other comments from the panelists?
The market has been blessed overall CMIs with a fabulous growth rate. If you look at the period from 2020 until sort of first half of 24, the overall market, the profitability of CMIs have grown by more than 20% per annum. So this is really a testament of how capital market has been growing nicely in the past. And if you look at the segmentation, all segments of the market, the local ones, the international ones, the regionals, all have been benefiting really from an expansion on their top and bottom line. And the key thing I think that really enabled a lot of these is really their investment in technology. So historically, this was a market that was dominated by the incumbents, the large local banks. We started to see somebody like Diraya really taking more shape by investing in technology, making sure to bring something quite unique and differentiated to the market. Most recently, we started to see players in the algo space, which really typically being catered for by the international players, also heavily investing in technology and reaping the fruits of that investments by really bringing something quite unique to the local market that the incumbents or the local platforms are not able to cater for. So we started really to see technology, and every time you invest has really created a new opportunity. And if I look at this from a benchmarking perspective, I've been talking really to a number of players outside. The sheer percentage of technology engineering minds on these companies are really increasing significantly. I think we are relatively lagging as a market when it comes to investing in tech talents and engineering talents and making sure they bring and add value to our business in the market. I think we need really to expand that massively and invite more of these talents really to operate within the sector.
Inshallah.
I'll advise them to ensure convenient, because convenient is the new loyalty for clients. And specialization, in my opinion, will become more and more important over time.
I think my advice to them is don't offer the whole menu, be specific, bring something new, and this is where you're going to differentiate yourself. The biggest mistake will be is like, I go and compete on something that is already dominated by different players. I think this will be the wrong choice for them.
So be fresh and know what you're good at. Fantastic. Thank you very much to the panelists. Thank you very much to everybody for attending.
Thank you very much, Yazid, Saloom, and the panelists with him for that last session. Our next panel will cover innovation in chemicals, energy, and the oil sectors, and their impact on economic growth. Please welcome our moderator for this session, Mrs. Paula Hua, Director at Rothschild Global Advisory Group, and our esteemed panelists. We have Mr. Yusuf Salim, Chief Financial Officer at ADNOC Drilling. Accompanying him would be Mr. Peter Hutton, Investor Relations Senior Vice President at Saudi Aramco.
Hello. Hi. Good afternoon, everyone. So I'm honored to moderate this panel this afternoon with two esteemed industry leaders, Mr. Salim and Mr. Hutton. So our panel today will cover industry, oil and chemical industry, and how they interact and with each other, and how they are driving economic growth as well as sustainability. We'll look at topics such as technology, innovation, and strategic partnerships, and how those elements will also impact the future of our industry. So without further ado, let's dive into the discussion. I think perhaps I can start with setting the scene. So Peter, maybe the first question go to you.
Okay.
At Aramco, you have the privileged view of the global oil and gas market. So how do you see, in the current context, how do you see the oil demand evolving, and what is the role of the chemical sector in the context of hydrocarbon demand?
Sure, yeah, I mean, I think you're right. I mean, not only we're the largest producer, but also we've got significant global trading operations as well. So we've got visibility in different regions of the world, as well as the significant levels of crude that we're moving out of Saudi. And we're also doing that on products as well. So we do get a good view on that one. You know, we're dealing in the market day to day, and we've been very, very clear that we see demand as remaining very, very firm. We were saying this through the second half of last year, where a number of people were questioning that one, and it turned out to be correct. So 2024 was, again, another year of record high demand, and we're seeing very much the same in 2025. I mean, I think if you look at some of the forecasters that are coming out, up another 1.3 million barrels for 2025, and that's driven by a number of different areas. A lot of it in Asia. 60% of the growth we think will be coming out of Asia, not just China, though that's a key component. China got to about 17.7 million barrels a day in 2024, and continued growth from there. From continued demand for jet, but also chemical feedstocks, very strong. The economy is healthy, but other parts of Asia also remaining very, very strong. So we do see that there's demand in the near term is quite strong, and it takes into a couple of other areas. If I'm setting the scene, the first one is there's often an impression that supply is meeting that level of demand. Well, not so much, because a lot of the sales that have been made have been from inventory. So if you look at the level of inventories, we're near five-year lows. And a lot of it has come from shale, where the ability to continue to grow at the levels that we saw in 23 and 24 is coming under question. So I think there's something around that one as well. Yeah, and then on to more of the longer term, I think the drivers that we're seeing in the near term continue in the medium term, petrochemicals, feedstocks being one of those. We're still at below the pre-pandemic levels on jet fuel demand globally, and in some parts even more so. So there's a lot of catch up on there. But even if you sort of get out of those things, we're in the day to day, but we also have a very good view of the long term. We're very focused on that one. And if you look at some of the structural drivers for demand, those are very, very strong. It's not just the demographic growth that we're seeing, but it's also the affordability of energy, access to energy, and the sustainability of that, and security. That's driving long-term growth. And then finally, as we get more of the production of the global oils coming from shale, then the decline rate is actually increasing. Even at the 5 to 6% that it is today, that on 100 million barrels a day, that means that actually just to keep pace with no growth at all, which we don't see, you still need a new Saudi Arabia every 2 years. That doesn't sound like a declining industry to me.
No, not at all. And yeah, thanks for sharing such interesting dynamics on the demand side. So I think if we turn to Abu Dhabi, obviously Abu Dhabi shares some common themes with Saudi Arabia. So in your view, Yusuf, how do you see the sector's outlook in Abu Dhabi, and what do you see as ADNOC Drilling and ADNOC Group's role in that context?
No, look, I couldn't agree more, right? I think everything you mentioned, obviously that kind of global south
rise with kind of Asia being at the center of this, and it's a rise in terms of population, but also, as you said, it's urbanization, etc., and it's Africa as well in this kind of the full global south. It's also the AI drive with the data centers, with the requirement additional substantial amount of gas. It's the global LNG play. It's kind of just everyone focusing more on energy security, focusing more on kind of ramping up levels of production. So I think the long-term trends, we continue to see them as extremely positive. Maybe we see it also from a slightly different angle, which is the drilling and services activity levels, which we're seeing them rise pretty strongly. Obviously, we're seeing the drive in the US towards significantly higher activity level, as you said, with the very high decline rates in these wells. We need to drill more and more and more ever than before to keep the kind of the capacity going, and then also to increase that capacity. In the region, everyone has very attractive capacity increase targets. Saudi with the unconventional Jafurah, UAE with the 5 million barrels per day and the unconventional Ruwais, Kuwait with the 4 million barrels per day. So all of these global projects obviously require much more extensive drilling services and other solutions. So we continue to be extremely bullish.
That's great. So I think it's quite clear from what you just mentioned that ADNOC drilling and other ADNOC entities serve a pivotal role in shaping the future of Abu Dhabi's energy landscape. So perhaps I guess we can get a deeper dive into the company's vision, strategy, and initiatives around our objectives. So perhaps we come back to you, Peter. So as Aramco is the biggest company in the kingdom, must be a critical component as part of the Saudi Arabia's Vision 2030. So as the way you see it, particularly from the downstream and chemical perspective, what is the company's strategy going forward?
Well, clear strategy in the downstream is a key part of that one, both in Kingdom and actually a lot of it external to the Kingdom as well. So if you look at the strategy for the downstream, we've been putting an increasing proportion of our upstream production through our own facilities. That used to be sort of around 40%. It's now nearer 50%. In fact, in the third quarter, it was a little bit above that. That provides both visibility to our upstream, but it also helps capture the integration value on that one. But also in the downstream, both in Kingdom and externally, we're focusing on areas of high growth, which is both geographically, that's a little bit more in Asia, but on products as well, and that's more in the petrochemical sides, both in Kingdom and out of Kingdom as well. So we're able to do it in that one. One of the advantages, and I'm sure ADNOC will say this as well, but one of the things that we would say is that we get good feedback from the people we supply because of the scale, but also the reliability and the flexibility we have with that. So it makes it a very popular choice as a feedstock for chemical plants, which means that we can partner with people who are developing capacity because they want access to that advantage feedstock. It allows us to capture a disproportionate amount of their offtake for a relatively small equity stake. That's an advantage way. That's one of the ways that we're moving towards 4 million barrels a day on liquids to chemicals. We've also got the proprietary technology on that as well. So that's a key part of the downstream. If we're talking around downstream being wider than just sort of the retail, just the sort of refining and retail side, we're also very, very closely involved in what we were talking about this morning in terms of the new energies, particularly in renewables, and helping Saudi Arabia to achieve its targets on Vision 30 for that one. And we've got a target of around 12 gigawatt by 2030, where we're well on the way, but that's faster growth than you're seeing in most other places. So I think you can see a clear how the downstream fits into an overall target both for Aramco and for the Kingdom.
Yeah, no, it's fascinating to see how Aramco has clear steps in terms of trying to deliver the 4 million barrels per day. I believe it's doubling the throughput for the refining and petrochemical complex. Yeah. So I think moving to Yusuf, that ADNOC drilling is obviously a very key and important enabler for Abu Dhabi's domestic growth, particularly based on your focus on unconventional resources. But if I look at the ADNOC Group perspective, they're expanding internationally, particularly in the chemical perspective. So in your mind, how would you balance this domestic growth with international ambition?
Yeah, so as Peter mentioned, right, whether it's Saudi, the UAE, the entire region, there are very clear advantages. Obviously, reliability is one cost advantage, right, being the lowest cost producers in the world, which ultimately dovetails into any refined products or chemicals from that. Emissions levels, right, having the barrels which have the lowest emissions across the entire world. So all of this gives the region a massive advantage as effectively national oil companies and international oil companies from the region effectively seek to look outside. Obviously, ADNOC Drilling being kind of the full lump sum turnkey solutions provider for ADNOC, where basically we're able to drill and complete wells end to end, we're able to also take this capability outside. So for example, for the last 15 months, we've been having our first rig in Jordan, where we're also providing a full lump sum turnkey offering. And then as you said, ADNOC now has a much more global preview, especially now with XRG as well, ADNOC International. So that also opens up kind of massive opportunities for us. And what we continue to do is build our capabilities. So today, on more than 70% of our rigs, not only do we do the drilling, but we also do all the oil field services, which otherwise would be done by different global oil field service companies. So having that end-to-end offering allow us to, one, support ADNOC outside, and then also support other clients across the region. And that's why we've kind of gone through last year pre-qualifying with KOC in Kuwait, pre-qualifying in Oman, and very imminently this year we're going to be live in both countries in terms of operations to also be able to offer these capabilities on a wider regional perspective.
That's fantastic to see, and clearly there is a very careful striking of balance between the domestic growth and international expansion. So I think for the next topic, perhaps we can move on to technology related, as how technology can help shaping our industry, which was more or less perceived as a conventional industry, but we'd be surprised how much of a technology element that's currently already embedded in this. So perhaps I can start with you this time, Yusuf. So ADNOC Drilling has recently embarked on, from what I remember, several strategic partnerships with leading global technology leaders. So how do you actually think, how important are these partnerships in terms of accelerating your growth and development? And what are the major innovation or elements that you see coming up in the drilling sector?
They're totally transformational. So we have multiple kind of technology transformation streams. One is EnerSol, which energy solutions. That's effectively our technology and AI for energy platform, where we have 51% and our partners Alpha Dhabi have 49%. We've completed 4 acquisitions last year in the energy technology space, predictive analytics, computer vision, etc. We also have, when we're completing kind of acquisitions, worth another $700 million this year, again, in that space. This helps significantly improving safety, increasing efficiency. That's how we've gone from a 45% EBITDA margin 3 years ago to over 50% EBITDA margin today. The second stream is our partnership with our sister company, AIQ, which is kind of an AI partnership between ADNOC and Presite, where we basically deploy their AI products, which is emissions prediction, digital twins of reservoirs, predictive maintenance, etc., on all our rigs. And the third is also internal kind of R&D efforts by ADNOC Drilling. We have transformation projects in the industry coming up, like effectively the AI rig, the partially autonomous rig, where you have some of the drilling automations become autonomous, and this way you reduce the amount of people in hazard way on the rig, so you significantly improve efficiency. You also have more remote operations, which allow you to use your best talent to run as many rigs as possible at the same time, and hence improve performance, and obviously all of this while increasing efficiency as well. And I know Aramco has similar efforts as well with Context, your partnership with Cognite, so I'm sure it's also something you're looking into extensively.
We do, yeah.
Yeah, that's what I expected as well, because I know that as Aramco, you also put very strong emphasis on technology and particularly AI in these days. So from your perspective, how significant do you actually see the AI opportunity in the hydrocarbon and chemical sector?
Oh, very, very significant. I mean, technology's always been at the forefront for Aramco in the 90 years of its existence. And, we've always been at the sort of the cutting edge of this one. That takes us, from digitalization, you mentioned, digital twins. Our first fully digital field was back in, was 15, 20 years ago. So we've been doing this one consistently. And we have an advantage because when you're 100% operator of such large, prolific fields, you've really got an ability to deploy technology at scale in a way that not many other companies can do. So it's always been a key part of ours. We've got large reservoirs, but we've got large data lakes as well, very huge data lakes. In fact, for example, Abcake, which is the main processing facility for sort of gas and liquids, hydrocarbons in the kingdom, that has 1.6 billion data points that we're able to use for AI. We already monitor around 10 billion data points a day that we send through to our engineering centres. So this is really, really huge. And then remember, we've got 90 years of seismic development and studies which we've digitized, and that's forming part of what will be one of the largest industrial large language learning models anywhere in the world. So that's the key thing. That's not the only area of in AI as well that we're developing the kingdom's first quantum computer, and we're developing the first interfacing AI, one of the largest anywhere in the world. So this is something which is the next phase of deploying technology. As Yusuf was saying, it's about costs, but it's about using the learning that you have to access new elements. For example, you also mentioned Jafura. By using the technology and the machine learning, we've been able to identify new opportunities around that as well. So I think those are key elements of that one. We work with lots of different developers always through, but I think this is one of the key areas that we go. Include not just on operations, also in financially, even in investor relations. So this time next year, you might not have me, you might have a robot. So he'll be a lot more eloquent and probably better looking as well.
I prefer you.
I do remember around the time of Aramco's IPO, I actually got the opportunity to go to the technology hub within the Aramco campus, and I was very amazed back then. That was back in 2019. I'm sure that it has even improved now after 5 years.
Absolutely.
Yes, perfect. So I think now, sometimes personally, I think AI, without knowing too much of it, seems to me as a buzzword. AI, everybody talks about AI, then that becomes a buzzword. But actually, after our conversation, I feel it's actually a very much transformative tool that's, really driving efficiency, even in our sector as well. So, I think perhaps the last topic is a bit of a, let's touch upon the medium to longer term outlook for our sector. I think if we can go back to you, Peter, in terms of Aramco's broader overall corporate strategy in the current context of the market, how do you see that evolve in the medium to longer term?
Well, the strategy is actually fairly clear. It evolves in terms of the execution, but the strategy is pretty clear. I mean, it's based on the really almost unique competitive advantage that we have, particularly in the upstream, that we're able to pass through there. The fact that the upstream has got the lowest cost, the lowest upstream intensity, the lowest decline rate, the highest reliability, all of those things give us a real advantage that we're able to take through to the rest of the business. And the same kind of things and focus on discipline also helps us in other parts of the business as well. That helps us with growth as well. So clear, we've got around 3 million barrels a day of spare capacity. We've said we're growing the gas by about 60%, but through to 2030. That also comes with 1 million barrels a day of associated liquids. 1 million barrels a day is a sort of decent-sized country's production of hydrocarbon. But also, I talked around the growth in the downstream and in new energies as well, renewables, potentially in hydrogen as well. So it's all of those things. So you've got the stability and the growth, but also very strong finances. In the third quarter, I think we're the most profitable company anywhere in the world. But it's not just quantity; it's quality. We've got of the peers that we're looking at in the international IOCs, the lowest gearing. We've got returns about twice the average of those. So you've got to have that financial strength to be able to deploy that one. So I think all of those things mean that, in terms of, we're really proud of being able to participate in the kingdom and the delivery of the Vision 2030, and that brings us an awful lot of opportunities in energy and new energies. We're also really proud of the heritage that we've got, to allow investors access to the heritage of, and leadership of the world's largest oil company.
Yeah, and I guess perhaps a very similar question to you, Youssef. It's how would you see ADNOC drilling, or maybe broader ADNOC, under ADNOC umbrella, the investment proposition would evolve in the medium to longer term?
So for us in ADNOC Drilling, it's to continue to transform into the global leading technology-enabled energy solutions provider. So we continue to provide end-to-end lump sum turnkey offering for oil and gas and broader energy companies to extract any resource from the ground, be it oil and gas, or be it some of the new resources, whether it's geothermal, some of the mining applications, etc. And as Peter said, in the process of doing this, continue to deliver superior shareholder returns. Over the last 15 months, we've delivered around 2x total shareholder return, 3x if you look at it since the IPO, one of the best performing stocks in the region. And this is a function of using this technology transformation to deliver kind of returns, right? We're above 20% return on capital, above 30% return on equity. So it's all about how do we use these fundamentals, strategy, technology, to deliver kind of real shareholder value, and that's what we expect to continue to do.
Yeah, that's perfect. So I think we're actually quite right on time.
Deliver on time. What we like to do.
Yeah, no, I think it's. Thank you very much for the two speakers today for your very much invaluable insights and contribution to the panel and to all the audience today. So I think, it's if I really look at the transformation, I think there's undoubtedly the Middle East region will continue playing a leading role in this transformation. So very much look forward to to continue to be part of the region. So,
absolutely,
and the transformation.
Riyadh is always an incredible place to celebrate this transformation of the region in.
Absolutely. Thank you very much.
I think there's
you have a question? Okay.
Question to Peter about I know that Aramco will be producing the hydrogen, the blue hydrogen, right?
Mm-hmm.
And you own the green hydrogen.
Correct.
Yeah. Could you tell us about the future of this blue hydrogen? How is it?
Well, we have a lot of advantage. Here we go. We're going to go over our time here, but I'll use it. I use what time we have. Aramco has a lot of advantages. I mean, to deliver on blue hydrogen, you have to have access to cheap gas that we've got. You've got to get competitive advantages in terms of CCS as well, and the geology that we've got, which makes it such a prolific for the upstream, have the same kind of characteristics, which is very advantage for CCS as well. You want to be close to the source of emissions, so you're not moving the carbon significant distances, and also you want to be able to have a track record of delivering high-tech, large-scale industrial complexes, on time. But we've also said, there's a lot of things to go through. We'll only do this one if we get, attractive returns and we get the offtake agreement. So we're in discussion around those as well. But I think if hydrogen's going to work anywhere, it should be working here in the kingdom.
I think that concludes our panel. Thank you very much for your attention.
Thank you very much.
Thank you.
Thank you very much, Paula, Peter, and Youssef for such an insightful and captivating discussion. We now move on to a panel moderated by Omar Al-Zaim, Chief Executive Officer and Head of Investment Banking at Goldman Sachs, Saudi Arabia. We'll explore the role of banking in Saudi Arabia's economic transformation. Please join me in welcoming the panelists. We have His Excellency Dr. Khalid Al-Dahir, who's the Vice Governor for Supervision and Technology at the Saudi Central Bank, SAMA. We also have Mr. Tony Cripps, Managing Director and CEO of SAB. And lastly, we have Mr. Ezquil Holkman, CEO of D360. Welcome all to the stage.
alaikum. Thank you everyone for joining us in this session. Very happy to have esteemed leaders from the banking sector so we can talk about a very topical theme of financial innovation. And I think, one of the important things that we think about the structural transformation of the economy, one of the underlying factors is, of course, financial innovation. There's a big pipeline of projects coming, and we think about themes of sustainability in the banking sector. And I think we try to address some of these themes, hopefully, with the speakers that we have today.
It's not something new. We've been seeing innovation in different models in financial services. And of course, technology helps a lot enhance and expedite the introduction of financial services. Technology just makes things faster, makes it cheaper, makes it more accessible, and that's really critical. But this morning there was Her Excellency, the UK Minister of Investment. She mentioned something that's quite interesting about financial innovation, and she mentioned something about Saudi Arabia, where she said it's about adoption. So just having the innovation, meaning the new models, new types of services, new technology, does not guarantee that there is impact for these types of models and services. The key is adoption. Okay. Now, so what drives adoption? In our view, what's more important is trust is a very important factor, right? If you trust that these services are going to deliver what they promise, then that's something that will encourage you to utilize it. But it's also other things. It's having the right infrastructure. If you can only do things in a very limited way, you're not going to really be adopting, right? It's about value proposition. So there are many factors that would affect adoption. And I think if we encourage this right adoption with the right trust, which is really, and if you go back to trust, it's really about building the right infrastructure that is resilient, that also enables, the right transactions to go through. But if you look at these infrastructures, things like the payment infrastructure in Saudi Arabia, which is very well known to be a leader worldwide, right? For that to be devaluation that ensures that that infrastructure is actually delivering what it's supposed to be delivering. And it's also about what sits on that infrastructure. So card schemes or offerings and so on. And that's continuous, right? So, as you know, we allow, for example, Apple Pay. But last year, we also announced Samsung Pay. This year, we announced, inshallah, in 2025, Google Pay will be there. So these are, always evolving, always encourages the adoption, especially with a lot of change. So things, different industries, as you said, require financial services. So travel and tourism. That means other people that come from other parts of the world would expect that their financial needs are going to be met. So even this week, we just also announced that JCB is going to be, you'll be able to transact on all of the MEDA point of sale ATM platforms. So, that's continuous innovation, right? It also requires talent, right? At the end of the day, it's a critical point to make sure that we have the right talent that serves the different segments. So again, with financial services and the innovation in financial services, you reach different segments, right? You reach people that are maybe for traditional organizations might not really be profitable to deal with, might be difficult to work with, whether it's a certain segment on the retail side or on SME. Yeah. And again, with Vision 2030, there's a lot of encouragement and value for SMEs. So then how do you utilize technology, AI, data analytics, to cater for the SME segment? And SME, as you know, has grown significantly over the past few years. Now, as a market share is around 8% for SMEs and growing.
I think maybe it's a good time to address the 92% that's remaining, which is maybe between the corporate and the retail. But the question maybe goes to Tony. Around the pipeline that we see is still quite large in terms of public projects, corporate projects, and we talked about new industries as well. So just to kind of set the scene in terms of the opportunity for the banking sector, how do you see that kind of corporate pipeline and innovation playing into that?
Yeah, innovation's key in the capital markets. And I've been asked this question since I got here 4 years ago. The pipeline's so big, how is it going to be financed? Because the banking system needs more money. And the answer is through different avenues. More access to the capital markets, more access to foreign investment, and that's happening. We're seeing the issuance of dollars regularly from all of the banks with high success. It also comes within the banking system itself, innovation around alleviating the balance sheet growth that we're seeing, which is very strong and above deposit growth. So the idea of securitization becomes compelling, and that's something that is in focus. And in other markets like Australia, where I come from, that's a very deep, understood market, not just for housing, but also for commercial property. So as those things develop, I've said from the very beginning that that's what people should be focused on, the innovation and the reliability of that, the support from the central bank to provide the guardrails, the safety, and that will allow the banking system to keep innovating and finance $1 trillion of infrastructure around the sectors that are very well defined. So I think what you're seeing, yes, occasionally there's some liquidity tightness, and that's normal, but what you're seeing is increasing confidence from the offshore market in investing in Saudi, and we need to open up avenues to allow that to happen. So that's where banks need to innovate as well. How do we create products? An example that I think is very exciting that I spoke about 2 years ago, and it hasn't happened yet, but we're hearing it probably will soon, is offshore investing in the Saudi property market for non-residents. And as that happens, then those offshore residents will need bank accounts locally, and then that will allow us to create other products, not just housing, but to create insurance products, to create wealth products. So as this opens up, that funding mix that so far is purely domestic, apart from the capital markets, institutional issuance, there's more avenues for funding, as we have seen in other markets. And with that, gives me confidence that the ability to finance what's required in the next 7 to 10 years is going to be there. And as a bank, we're very confident.
I mean, it's an entire ecosystem, right, that has to be enabled. So you start
streams.
enabling one part, and then it just unlocks the rest of the parts and pieces. And maybe with that kind of, as I wanted to get your views about how we think Saudi Arabia is positioned with the factors that exist with country, with macro, the regulatory, to really unlock and enable that financial innovation. I mean, because of your experience, obviously, in different markets, geographies, technology, innovation, it'd be great to get your views on that.
Yeah, so thank you very much. Actually, when I moved to the kingdom a year ago already, time flies, this was really a year ago, I was expecting a lot of things, but not the amount of calls I get from friends in America, New York, in San Francisco a lot, in Europe. The calls changed. At the beginning was, why are you moving there? What's going on there? And now they are, I'm going to be there for this, for that. Let's talk. And I think the impression from outside in was basically an oil country, oil economy, and it's not at all. And actually, I think you mentioned the systemic aspect, right, of a sector of economy, and I think His Excellency touched on the parts required for that systemic to be. So what I found, it's something that is structurally being designed to be successful, in the sense that understanding the systemic, one thing cannot exist without the other, right? So I think Tony and His Excellency covered the fact that you need, of course, the regulation. You need, of course, if you think about the success of places like the Silicon Valley in the Bay Area, right? You need talent. And it's done. You can attract talent here. If you bring the right talent, you can bring it. You can do even a premier residency now to attract and retain them. And then there is such a push, such a move for education of young engineers in the kingdom for example, when we go around graduates in universities in the US, Saudi graduates want to come back this is attractive at that level, which is very impressive. So you have the talent. Besides talent, you need, which we didn't cover yet, which is you need the money for entrepreneurship, for things to happen. And the kingdom in the last years has created, and I'm sure in the last panel with the stock exchange they have covered it, it's a very dynamic stock exchange. You're seeing a pipeline of IPOs. I think there are like 40 coming, right, and 5 whatever. So it's a very healthy pipeline for IPOs. So you can only have innovation if you can do the whole cycle, and that's covered here. And that's why I think people are not calling me now, they're coming here. It's very, very impressive. So you have the funding for innovation, you have the talent. Of course, it's a cliche, but I was checking 70% of the people in the kingdom of the Saudis, less than 35. Yeah. But if you put some foreigners and blue-collar expats, it's very young. But it's not just there. The adoption is there, which is what His Excellency made reference to. And the adoption is proven. This is, I think, probably the only country where if you're a successful YouTuber or podcast, you're in the top 2 or 3 in the world. So the population is very good in adopting new technologies. Probably going from chatting and doing social media to banking, there is a boundary condition, which is trust. And that's where we all partner together with the regulator to make sure that that trust is built and maintained. And that's critical. And I think that a bit closes the system to make it work.
And that's quite an important part. And Your Excellency, I go back maybe to you around the controversial question always comes around regulatory flexibility to enable innovation. So how do we think about balance of innovation and sustainability, innovation and resilience of the financial sector?
Well, it's an important point, and we always get this type of concern and question. At the end of the day, when we talk about balance, people always think about trade-off, right? And for sure, we do not want to think about the trade-off between innovation and stability and resilience. We want to make sure that the financial sector is resilient, that is stable, and it is trustworthy. So that is something that is all of us are, I'm sure we're confident that we would like to continue with that. And it's a core mandate for the Saudi Central Bank, financial and monetary stability. So, but what we believe in is supporting innovation fully in a way that maintains that stability, right? So we believe in prudent innovation. We believe in ensuring, that things are risk-based, so it's not a one-size-fits-all for, introducing innovation. And we need to make sure that whatever is being introduced, is also has clear consumer protection elements, right? So that if there are any issues, the consumers do not feel that they are at risk. And what the Saudi Central Bank has been doing over the past several years, we've introduced different programs and welcomed innovation. Through one of the examples is the regulatory sandbox. So through the regulatory sandbox, we work with innovators, entrepreneurs, and leaders in the financial services ecosystem to experiment with different models. And we've been doing that for the past several years, and different models have come up, right? Buy now, pay later as an example, microfinancing, so addressing different segments. And through that, you get enhancement of the regulatory platform. All of the framework and regulation gets improved and enhanced to, in a prudent way, accept all of this innovation and provide it in a reliable, sustainable way. And we need to really make sure that that continues. This trust is critical, and we need to make sure that we move, at pace with the introduction of innovation, right? That's a commitment, and it's a critical part as we maintain stability for the financial and the financial sector as a whole.
Yeah, I think you touched on BNPL, microfinance, and even some of these crowd lending and NBFI platforms in Saudi. That's generally when we think about financial innovation, where all of us see the change. But maybe Tony, back to you. There is still some room of financial innovation in an incumbent bank, in a corporate bank.
Yeah.
What do you think are opportunities there for financial innovation?
There's still many. I mean, one thing about innovation, to His Excellency's point, is, it's about trust. So I think if you're a big bank with a good brand and you come up with the right product, in the end you'll win over a smaller rival that has less scale. So as a big bank, it may be a bit harder to be nimble. And we've seen this in previous cycles, or at least I have, 20 years ago when the internet was a thing. And some people believed in it, some people didn't, but obviously it's now ubiquitous. And we created products back then that automated many of our transaction services. So it provided faster, better solutions to customers who were able to integrate their own systems into our foreign exchange capabilities, as an example. It also de-risked, because it used to require a person to quote, and now you had a machine that had a program that quoted. And so you removed the bias, you removed the risk in front-running orders, which became a problem, a very public problem. So it wasn't just also about, for the bank, about faster, better services for customers, also about managing risk. And automation technology does that for you. I think in Saudi at the moment, with the SME strategy, decreasing the friction for an SME to open an account, to operate the account, and creating products that help them with their cash flows, like the digitization of trade solutions, allow them to, trade with somebody instantly, or much less. It used to take a week to swap documents, physical documents. Now we can do it in hours through digitization. And then, of course, their bills get settled faster, within a day or two instead of a month. So their cash flows become better. So, I mean, we used to open maybe 50 SME accounts a month if we were lucky, and now we open 1,000.
Oh, wow.
So this has happened in the last 2 years. And we know that the Saudi economy will grow its SME base to 25% of GDP within a pretty short period of time, and that creates employment. I think in the corporate space, at the larger level, again, reducing friction for cross-border payments and centralisation of treasury functions is a big capability that we're very focused on. And at the retail level, it's the online processing of mortgages and credit cards and buy now, pay later, something we're involved in. Open banking is something that banks normally are afraid of, but ultimately it creates better consumer visibility and better products and actually tighter margins in the end. So all of that's a good thing, and we're very focused on delivering the innovation.
Well, I think open banking has really allowed for a lot of the innovation we saw in MBFIs, right? And moving away from maybe reliance on the banking system, core banking and incumbent banking system. But maybe, Izzy, going to you as a challenger digital bank, we typically think as the edge that these challenger banks have is their financial innovation. And a big theme, obviously, is financial inclusion as well. And financial inclusion is quite important to access, let's say, the SMEs, the retail segments that maybe we can't through the traditional channels that we have. So what do you think is, within the SME and retail space, opportunities for innovation, and how important is really financial inclusion? And is that really what you target as a challenger bank, or is inclusion a result of innovation, not actually the target?
Yeah, I like it. You say, you put it that way. I think financial inclusion is a problem we're solving for, but one of those. I think the critical areas that being a new bank, you call it challenger, but it's like a new bank having no legacy infrastructure, no legacy teams, no legacy anything. We can start building front base, something new. I think for innovation in the lending space, lending eventually is the arbitrage of uncertainty, right? So lending is the art of guessing if you're going to get the money back or not, correct? And lending, especially responsible lending, when you want to do it properly, requires knowledge of the customer. And that knowledge of the customer in the past was usually rule-based algorithms with the classic 10, 15 questions we have all answered at some point, opening an account, your age, if you're married, if you have a job, how long your job. And with that, we were able to somehow guess if you were trustworthy or not. I think what happened in the last 15 years while we were coming to the office every day and working is that the ability to store data with the concept of the cloud that separates computing from storage has grown exponentially to the point that we know that our phones today have more capacity to store and compute than the space shuttle, right? So, and that is part of the infrastructure that has come to the kingdom, and we have it here. We have Oracle Cloud, Google Cloud, ABC, we have Amazon Cloud. So cloud computing allows you in an asset-light way, because you want your assets to be dedicated to the proper business generation. You can store an amount of information you dream of storing, right? And if you can store it and you can compute it real time, then you can run, as we were discussing with Tony, algorithms that you were dealing with them probably in the 90s already, right?
Yeah.
We knew the algorithms, we couldn't put it in practice. Today, we can run them real time, and what that does is that basically with the same risk appetite, you're lending to people that they should get loans, but they don't get because they don't answer, they don't take the right questions. And that comes to something very specific in the kingdom, which is, we're privileged in this panel because we're working in banking, and banking is an industry that touches society, touches the process of generation, of wealth generation, of improving the lives of people. And to do that, we need inclusion in the Saudi way. Here we don't have an inclusion problem like in Latin America. Here it's different. People are already living with bank accounts, they're properly in the system. We probably have to lend to them, right? And they're prime, they're not subprime. They're people that can afford loans. But to go there, and if you look at the vision, I think the vision is calling for about 35%, at top of mind, 35% of the economy being in hands of SMEs. That's a blessing, because SMEs hire faster, fire slower, trickle the economy through little towns and villages. So I think SMEs are very relevant. How big? Well, I think His Excellency mentioned that about 8% of the loan book of the system is with SMEs. We can aspire, if you think about benchmarks, I think America is 23%, most countries are in the 20s. I look more at the Japanese and the Koreans, they're in the 60s. Wow. I love that. I don't know where the kingdom can go, but it's naturally a very entrepreneurial society. People jump into things, so I think we should enable that creativity. And for doing that, we need to lend to the employees of the SMEs as well, which today usually are out of the system in terms of lending. So that's something that digital banks are uniquely equipped to do. We want to do that, applying old-fashioned banking standards. So we remain conservative, and we have within our risk appetite. And then, of course, you need to lend to the entrepreneur, that person that is starting something somewhere in a small town in the kingdom to prosper and to create wealth around it. So for us, in our vision, is definitely lending to prime customers that are underserved more than, you're not excluded. These people are not excluded in the kingdom, they're underserved. So we want to do that. And I would love also to see that our industry, it's a whole, and challenger banks, more than challenger banks we're going to do things that probably incumbents are not doing, but eventually we'll do as well, and we will do it together. I think the chairman of the CMA said that this is one of the few countries where the business pool for banking grows faster than the economy, because there's an exponential need for working capital, etc. So it's not more about, it's about just serving and doing it. So that's a bit our vision around it.
Yeah, I think we've seen the incumbents really develop as well in terms of financial innovation. So it's not just the digital banks, but even digital channels of incumbents that have changed. I think we're privileged because we have a regulator, an incumbent, and a challenger bank sitting on this panel. So maybe I just wanted to have 1 minute of each of you, what you think, your role would be in enabling this sustainability of the ecosystem. So we'll start with you, Your Excellency.
Yes, thank you. So, again, innovation, and as Tony and Izzy mentioned, is critical, and I think it is important to contribute to the overall economic growth and development. Yes, as Izzy was saying, inclusion, and inclusion is not about having access only. I mean, today we are at 94, 95%. of people having access to financial services. So it's like literacy. Literacy is not only about reading and writing, right? It's have improved, the bar has gone up significantly. So it's about the reach to more tailored, focused, valuable products and services that meet that segment's needs and requirements, right? In a more cost-effective way, which also means better for the organization, better for the investors, because at the end of the day, that more cost-effective and efficient way to serve will be critical to be able to apply the technology to cater for that specific requirement. Now, as a regulator, we need to ensure that all of that is being done while maintaining the trust in the system, while maintaining security, reliability, and sustainability of all of these services. So it's really critical for us to make sure that we continue on that journey of trust. At the end, we welcome through all of the programs and the platforms that we have, through the sandbox and other platforms that we connect with investors. So you're all welcome to reach out to the Saudi Central Bank, explore the different models that you would have, as many have done. And you mentioned open banking is an extremely innovative way to provide new services. And it's really adopted by all, existing large stakeholder financial institutions and also new incoming financial institutions. So you're all welcome. We would love to work with all of you, investors, entrepreneurs, and innovators in the financial sector, and ensuring the stability of the financial system.
So, Tony, I think...
Yeah, I'll be brief. It's a partnership. We need the central bank for the trust element. Yeah. But what the innovation banks create, the digital banks, whatever you want to call them, is they push the incumbent large-scale banks to open up. I mean, we partner with fintechs all the time. We invest in fintechs. We help them grow. And that's in our interest as well. But they push innovation. Ultimately, the scale of incumbent banks will end up, if margins get pressed low enough, what happens is the fintech model by itself becomes difficult. And so you end up, perhaps the incumbent bank becomes a back end. So you end up with solutions like embedded finance, where we'll do the credit and the processing, and the fintech will provide a better application or platform to do different things. And their customers we don't touch normally, but we're happy to touch through back-end processing. Yeah. Over to you.
Yeah, and for us, very, very similar. So I think D360 Bank is a good example of what a kingdom is. It's a kind of public-private we're working together with PIF backing us and the Raya Financial as together with many other very well-known investors, get into reality a bank. It's just a bank that is digital, and we hope using data, a very asset-light infrastructure, and being able to reach Saudis that are underserved today, complement the picture of the financial sector, and move forward towards the vision. And I think the future, as Tony well said, is going to be very blurred, and should be a lot of fun for everybody being part of the industry. Absolutely.
We look forward to it. Thank you very much for your time. Much appreciated. And thank you for the audience.
Thank you. Thank you. Thank you so much.
Gentlemen. Thank you. Well, thank you very much, Umar. Thank you, Umar, and to all the panelists on that last session. Now on to our second fireside chat of the day, which will be moderated by Mrs. Georgia Tolley, journalist and radio presenter at Dubai Eye. She'll be joined by His Excellency, Mr. Mazen As-Sideri, who is the advisor to the General Secretariat of Council of Ministers, to discuss the role of policy and research-driven insights in unlocking market potential. Thank you.
Hello there, good afternoon, and welcome to our next conversation here at the Capital Markets Forum 2025. As we just heard from Mo, I am Georgia Tolley, and I am delighted to introduce this fireside chat with someone who has a really deep understanding of what makes the Saudi economy tick. I'm joined on stage, of course, by His Excellency Mazen Al-Sideri. He's worked as an advisor to the General Secretariat for the Council of Ministers for nearly a year now. Prior to that, His Excellency garnered more than 16 years of experience in the financial markets, with a particular focus on the TASI market. He's previously issued reports on the Saudi budget and oil markets. He possesses, as you imagine, extensive knowledge of most of the publicly listed companies right here in the Saudi market, including their business models and their economic structures. So, as you can imagine, I am really looking forward to his insights on unlocking market potential here in the kingdom, plus the prospects for policy-driven economic growth. Sir.
Thank you, Kelly, and it's an honor to be with you.
Absolutely brilliant to have you with us, sir, and congratulations on your recent appointment. It really is inspiring to witness the kingdom strategically placing individuals like yourself to influence policymaking and, of course, reinforce the foundations of growth in both the financial and the economic sectors. Now, as you've just heard, you bring a real wealth of experience to this role. Could you expand on how you envisage this impacting your work with the General Secretariat of the Council of Ministers?
Well, the Saudi government right now is adapting the vision of 2030, that it is managed and driven by the leadership of our Crown Prince Mohammed bin Salman. That would require with each member to be disciplined and creative. My experience, 16 years you have mentioned, had helped me to understand the Saudi economy very well from top down, and following more than 200 companies and different sectors, different economics, different industries, had helped me to understanding from bottom up on the other side. But experience can't be valuable unless if you have critical thinking of the past and a vision of the future. And market to me is the greatest economist if it is have the minimum requirement of efficiency. And we saw the improvement in the market in the last few years that enhanced the efficiency in it and became a good thermometer of the economy and the sentiment and the growth, looking for the forward growth. And all of that had helped me trying to add a value in my new role.
What actually informs policymaking in Saudi Arabia today? And as part of your answer, could you maybe give examples on what has led to economic planning and decision-making?
Well, the Saudi policy with the vision, it's very active. It does not just follow with static strategies or static target, for example, the economic growth or the quality of life. It's actually updated with the global changement and have always fast reaction, as you saw in COVID 2020, which changed the priorities and enhanced directly the economy, the data, and let's say the data infrastructure, the digital government. We're seeing it either with technology, the artificial intelligence. You see how Saudi Arabia proactive in adapting the artificial intelligence. Well, so many countries still some actually did not follow the same approach, wherein the policy here is trying to be very fast and active. And keeping on the other side the main targets as the growth and the economic growth And it's not just a question of transition, economic transition. It's economic transition, social, cultural, environmental either. So all of that need to be active and try to harmonize it together.
It's interesting to hear there that it's not static, that it's evolving, that there's an evolution. To what extent is research part of this picture?
Well, as I used to be a researcher, usually research is a matter of conclusion, but this is not my school. Research is always idea how to debate paths and future and manage the uncertainty in it, the return of risk of each path, and to look to it. And that can't be done without a strong, or I could say, solid, reliable number of data. And we saw that had happened in Saudi Arabia in the last 10 years, how data has been improved in terms of quantity and quality and transparency. And it's not either limited just to the economy, and across sectors or across activity, I would say, and those are instead of sectors, across activities. And that had helped to improve the research that always, the Vision 2030 was based on numbers and deep study.
I can tell that you have a very analytical brain there, step by step. And you mentioned, of course, Vision 2030 there, and Saudi Arabia, as we all know, going through a significant economic transformation to reduce its reliance on oil. So what concrete measures are actually being implemented to accelerate this diversification? And as always, I'm asking for examples.
Well, Tali, it's not secret. Saudi Arabia have a capacity for production 12 million barrels with the lowest cost of extracting. It's not easy job, but it's not impossible. But if we look to the numbers in the last 10 years, the amount of oil revenue to the government budget had reduced as a weight from 90% to 65% in the last 10 years. Looking forward, in the midterm, there is the budget strategy for 5 years is announced. It's out and trying to be reasonable with the oil prices expected to be. On the other side, there is a B plan, or there is alternatives when things change. And for example, 22 oil prices went up, and 2022 had crashed. 2020 had crashed. So always there is a alternative plan to try to manage it. In the long term, there is actually strategy that the public sector try to increase to be 65% of the GDP, maintaining the level of the same CAGR of growth, but the weight of public sector to go, the private sector to go to 65%. Calibrating with the investment, either with the PIF, that's supposed to add more to the economy. All of that will reduce the need for the government spending to create job and growth and give it more to the private sector. And from time to there, from now till there, the other non-oil revenue might improve. So it is a strategy moved with actually steps, moved with stages that make it solid and make it actually possible to achieve in long term.
You touched on the role of the PIF there, and of course, there's also public-private collaboration that plays a critical role nowadays in driving economic development and innovation in Saudi. How effective is this type of collaboration at driving growth and also, importantly, innovation?
Well, it's not a secret that there has been, the vision was actually announcing about $1.3 trillion investment between public-private partner. So till last end of 24 was announced more than 800 billion of the 1.3. The accumulated amount was more than 800 billion. That how you saw how that had helped the private sector to participate, for example, in the renewable energy, where Saudi Arabia targeting to use 50% to be as an input to create energy and electricity in 2030. We saw that, for example, in the housing boom that goes up from the penetrating of housing from 40 to 65%, and with a strong infrastructure between banks and mortgage and regulator had helped the private sector to participate, and developers and landlords and constructors to help to build in this project. And going forward with the infrastructures that's going to happen, for example, or the giga project as Al Qiddiya, for example, Neom. There is so many actually, and airports and ports, all of that is going to be, it's a field for partnership that's still growing to the future. And this is To go back again to your third question about oil, this is the steps to push the public sector or the private sector to participate in the economy. It's not just calibration. Yeah? You could look to it from other side. There is a supporting. For example, the SMEs has been supported in terms of financing and give them some channel to invest. And there is motivation, where you can see it with the local continent, for example, to help the medium size of industries in Saudi Arabia to pick up and to grow and to add, to create for them a market. So through all of this channel or all of these frames, the calibration will help the private sector to add more and to innovate more. Back again, if you check numbers, the amount of venture capital being raised was in Saudi Arabia in the last 2 years. And this is adding more to innovation and creating a new culture between the new generation to be entrepreneurs and to be and either with the old generation, which was more to the classic, I could say, economy. So it's creating a great harmonize that will help the private sector to be an equality and diversification that it is needed with the future of humanity in 23 and 24.
It's exciting to hear of that foreign direct investment coming into the country. We're about 3/4 through our conversation so far, Your Excellency. So I'm going to go to, I'm thinking of this as our quick fire sort of final session. I'd like to really tap into your knowledge base and the experience that you've accumulated to date to ask about the capital markets and get sort of quite specific questions. Okay, so here we go. 41 IPOs launched in Saudi Arabia last year, raising a total of nearly $4.1 billion. Yes. That's according to very recent reports. Do you expect this momentum of IPOs to continue in the next couple of years?
Yes, I think for several reasons. One of the reasons there's so many big family business would like to integrate and to be listed, and that's give them more governance to the company and stability. The second thing, there is so many innovative business in Saudi Arabia. We're seeing this changement happening in mining, happening in renewable energy, happening in artificial intelligence that might add more, and data and technology business that might add more to the economy. And one of the good things in the Saudi market had happened in the last 10 years, it represents more the economy. We saw Aramco, we saw more digital companies, we saw renewable energy. So all of that had helped us to show that the market is a good representative of the economy. Back again, this number of IPOs that might happen, that will help. And back again, the number of venture business and private equity we see, normally it's end up with the IPO as an exit plan. So all of this, I could say, movement and investment, it's directing to show that the amount of listed companies might go up in a future. No doubt there is a reason related to the market, for example, the liquidity valuation, but this is actually, I could say, those are incentive to the amount of IPOs. But as a trend of IPOs to continue, I think those drivers will maintain and will continue.
So watch this space on that one. Okay, so what additional measures could or can be implemented to sort of further enhance the Kingdom's appeal to foreign investors? We spoke about FDI, but let's talk specifically about what measures should be introduced to enhance the stock market.
Well, we saw recently, since 2018-19, when they integrated with the MSCI and FTSE, and we saw flow of foreign investor, and the free float is increasing year after year. It's exceeding, and if we exclude Aramco, it's exceeding 13%, and it's growing. On the other side, we're seeing derivatives in market, and it's growing gradually. And the more derivatives is increasing, the more the trading will go, and the transparency of market and the efficiency will goes up. There is so many job has been done, but it will take time till it actually, we could say it's mature or pick up. And market, the more the market is efficient and shows it, I would say, the more the market is attractive, it shows the economy is attractive. You know, the more the economy is prospering, the more it will attract FDI in the future. Because nobody will invest and put his money in economy he does not trust. And the more you see investors in hedge funds or mutual funds believing in valuation and believing in growth, the more they will add money. You could see so many markets with a low valuation and other markets with high. The Saudi market, if the MSCI one is emerging, MSCI is one of the highest valuation. It's above the average. And that shows the trust happening in this market. And trust in the market is a trust in the economy.
You mentioned there the wider economy. What additional measures can be implemented to, further advance the kingdom's image or the kingdom's appeal to foreign investors?
Well, as I told you, the market to me is the best economist, and it's the biggest, actually, I could see, index for foreign investor. Given more that Saudi, that we could say that the segments or the target or the new industries being created in Saudi Arabia is adding more opportunities. And the idea here in Saudi Arabia is not to fill a gap. It's to add a value. The idea of this economy is to add a value to the world. It's not just to fill a gap. It's not a question of creating financial solvency. It's a question of creating economy that could be resilient, that could be having a higher rank in the G20, and could add to the humanity challenges. We're going to face so many challenges after 30, 40 years in global economy in terms of environment, in terms of scarcity of water or food, and all of that is trying to be here in Saudi Arabia to be managed and to help the world to address those concerns.
My final question.
Yes.
We're perfectly to time, by the way. I'm very pleased with that. Okay, so what trends should investors be most aware of when they're considering opportunities in Saudi Arabia? What actually differentiates the kingdom from other potential countries that they could pick to invest in?
Well, it is the desire to achieve the target. It's the ambition to achieve it on the other side. And the third thing, it's to adapt to new markets and new segments that wasn't there, that wasn't here, or maybe not in other economies. We're in an environment to try. It's not to try to. It's trying to add a value for others, not just for Saudi Arabia, for every partners. And I think this is what makes it attractive for a global investor with this desire and this ambitions.
Excellent. It's been an absolute pleasure learning more about the Saudi economy and the future of the Saudi economy with you this afternoon. Thank you very much indeed for your time, both enlightening and, I'm sure you'll agree, entertaining. So please join me in a round of applause. Thank you very much indeed, sir.
Thank you very much, Georgia, for that talk. We've all witnessed how government policies are playing a critical role in driving economic growth. We're excited to see the new opportunities being unlocked for the kingdom right before our eyes. Which takes me into our next panel, curated to include a selection of distinguished leaders in the financial services industry. We'll explore more innovations surrounding advanced trading technologies and investment products, driving the evolution of the Saudi capital market and highlighting various efforts to attract regional and foreign capital. Allow me to introduce the moderator, Mr. Edmond Christou, Senior Equity Analyst, Gulf Financials at Bloomberg Intelligence, who'll be joined by Mr. Adam Matsueki, sorry if I pronounced that incorrectly, Matsueki, Head of EMEA Business Development at Citadel Securities. We also have Mr. Omar Ardati, Head of Private Equity at A&B Capital. Mrs. Helen Flannery, EMEA Emerging Markets Products and Head of Futures Execution at Clearing Global Product, Goldman Sachs International. We also have Mr. Shahjan Mirza, Head of Asset Management at BSF Capital. And finally, Mrs. Gunjan Chauhan, Global Head of ETF Capital Markets and Market Intelligence at State Street Global Advisors. Welcome to all the panelists and moderator.
Thank you, everyone. A quick introduction to my role at Bloomberg Intelligence, which is the research arm of Bloomberg. I've been covering the financial sector and the GCC, particularly in Saudi, since 2017. I have seen the development of the financial sector and the transformation that has gone since 2017, which is very impressive. And that's why I'm very excited to be here, and many thanks to the team at Tadawul for organizing this panel discussion. And thanks for the panelists and the speaker here today who will share with us their review on how innovation and technology can help unlock liquidity, support growth, and efficiency. As you know, the Kingdom has the highest construction pipeline or project pipeline in the MENA region, and it's one of the highest spending country in the emerging market. This pipeline is around the $740 billion over the next 5 years, and that requires a lot of liquidity, requires a lot of capital raise, and FDI and inflow of investment money into the Kingdom. I think today it's a great opportunity to talk about the tools available from technology, from market structure, how to enhance and improve liquidity, and enable the sustainability of the financial sector, which become a key focus for investor and regulator in the Kingdom. So let me start with Mr. Adam. When we talk about investing in technology, it's a big topic. It's very hard to put a number on how much investment you need in the technology. But there are technologies such as collocation and omnibus that become very common nowadays in the international market. I think Saudi is taking the lead on this. I just want to understand, and the audience want to understand, how this could help liquidity and attract investment into the Kingdom.
Absolutely. So let me start, maybe, you mentioned WAMED, right? Let me start by saying that WAMED operates a well-designed data center, and they have a client-centric approach when it comes to conducting business. So we do appreciate that. When it comes to your question and collocation and implementation of Omnibus, this brings the Saudi market in line with the global standards. And the standardization of connectivity, as well access to securities, borrowing, lending, is critical to attract a wide range of investors to the market. From a market maker perspective, a standardized and a well-developed market will also incentivize us as a liquidity provider to be active across a wide number of symbols, and also will push us to additional asset classes. So at Citadel Securities, just to give you an example, we trade all the listed equities in the US, regardless of the liquidity profile of the issuer. And when we look at the Tadawul, we have also ability to provide liquidity across all the listed equities as well.
This is very interesting. And Ms. Kunjan, can you give us some examples from your organization on what's the impact of technology in this market here?
Yeah, absolutely. Look, I think one of the big beneficiaries that all investors will be from improvements in technology will be efficiency. Efficiency that if we get it right across the capital markets ecosystem, it should really translate into savings for the end investor. So I think that's one of the key areas that we're really excited about, and some of the work that's been done in this region in particular and from the WAMED initiatives is really exciting.
Very good. And Ms. Helen, can you try also to give me some color on how Saudi positioned itself compared to other GCC countries?
Sure. And I would say, Edmund, thank you. It's really great to be here. And I think likewise amongst just such an esteemed audience. Just at a personal level, I will say, coming from Ireland, I feel like I'm coming home. I'm really enjoying the rain out there. It feels very much at home out there these days. With the formation of WAMED and with WAMED's delivery, I would say, of co-location, it's a key enabler of a new and differentiated product in the region. Co-location as a service allows basically market participants to locate their trading servers in close proximity to the exchange servers. It naturally, to align with Adam's point, is something that it's a very mature product across a cash equity and derivatives markets globally. It turns around and it can reduce latency whilst also bringing further trading resiliency to the marketplace. And I think as we've seen the rollout with WAMED and with the Tadawul team here in Saudi, it's certainly brought further liquidity to the marketplace here.
And I keep hearing about Omnibus. Can you explain to me and the audience why this is important, or you think it's important for the local and international market?
I certainly will. And Omnibus, without a doubt, is a key new development, and I think it's been very positive to see the updates from the CMA with the official announcement and the rollout for the debt market. But Omnibus as a new product streamlines for many investors both the trading and the post-trade process to allow them to more seamlessly trade and settle in the market. It's an ease of entry product into the marketplace. So it's great to see it come to the market for debt, and we see the great positive indications with its release for the equity markets and bringing that to all investors.
And I believe Saudi is the only GCC country that is willing to implement the omnibus in the near term.
There are varieties in the other GCC markets, but I think Saudi is heading in the right direction, yes.
Perfect. Omar, we talk about technology and fintech. How do you see this is an important part of the liquidity?
Sure. Fintech startups are definitely playing a transformative role in reshaping the financial markets in Saudi Arabia, particularly in democratizing access for retail investors in Saudi. So, for example, you see platforms like Manafa, which is a Sukuk crowdfunding platform, and Raqamiyya, which is a leading debt crowdfunding platform as well. They've opened up new avenues for the retail investors to invest in private credit, but also more importantly, they're driving liquidity to the SME sector, which is otherwise not available by the traditional lenders today. Similarly, we see social trading, we see also digital wealth management platforms such as Vanri today, also offering seamless, low-cost investment solutions to the retail investors. And again, these innovations are not just enhancing the digital services, but they're also reaffirming the status of Saudi Arabia as a fintech-friendly economy. And if you allow me, I'd like to touch also on us as traditional financial institutions. I mean, to us, it's no longer an option to partner with fintech startups. It's a necessity, and we're seeing more of that taking place with AMB Capital and with other CMIs as well. By partnering with fintechs, banks as well as capital market institutions can leverage cutting-edge technologies to deliver better products. They can leverage on AI, open finance, data analytics, and again, offer innovative products to meet their customer needs.
And we're talking about products. I found ETF, it's an easy way to access markets, especially emerging market or new market coming to the focus of international investor. And when we look at ETF, especially the fixed income ETFs, they tend to be a good instrument to improve liquidity, exposure. And when we look at the region sitting on a large Sukuk issuances from the government, for example, in the kingdom, and Sukuk has proven over time that is less volatile and provide higher risk-adjusted return. However, when we look at the volume traded into this ETF, if I look at the ETF, Saudi ETF listed in Europe, for example, or the Saudi ETF, that is equity, listed in China, Hong Kong, it's still the volume is low. So there is a lot of work to do. I just want to understand from you the challenge and the opportunity when you market or you discuss this kind of asset classes to international investor. Ms. Konja?
Yeah, sure. I'm happy to perhaps kick us off. So, first I'll take a step back and just think about and remind the audience what ETFs are.
Yes.
Ultimately, it's a form of technology, which is really used to wrap a basket of securities. They can be fixed income securities, they could be equity securities, they could be commodities. They are index managed or actively managed. So you can have, ultimately a pool of assets managed in a variety of different ways, wrapped in an ETF structure. So I really look at this as a way of democratizing investing, because once that basket of securities is wrapped, the ability to trade that out in the open market and for all investors to have access to the same underlying investment performance by the investment manager, whether you're a retail investor all the way through to a sophisticated institutional investor, you're benefiting from the same investment management of that ETF. You're also largely benefiting from the same price point of going into that product. So I think it's important just to level set and baseline, you know, the ETF. It's not a unique product on its own. It's really the ability to wrap, and a technology perhaps, a pool of securities, and then have those traded on exchange.
How do you see the volume improving for this ETF?
So I think getting into, you know, the volume consideration, ultimately there's a few dynamics that come into play. You touched upon fixed income ETFs as well, and I think that's an important market structure development to touch upon. ETFs and how they trade on exchange, and fixed income ETFs in particular, have widely been recognized to bring greater price transparency to what might have been seen as quite an opaque market. There wasn't a lot of transparency in underlying fixed income markets, and as you've seen, the increased adoption of fixed income ETFs have really brought an improvement of price transparency to fixed income markets more holistically. It's also accelerated the electronification of fixed income trading more broadly, which I think is another component dynamic that's at play. As for how you can increase more trading, I think there's three dynamics at play. A diverse investor base. It won't work if all your investors are retail or if all your investors are institutional. You really need that mix. And I would say that diversification of investors should be a whole range of investors from all around the world. The benefit of being able to cross-list ETFs really allows you the opportunity to get that broad diversification of investors. The second is a diversification of liquidity providers. You really want a number of different organizations willing to price these ETFs, willing to make markets in these ETFs in different market conditions, which can again just bring about depth of liquidity, which is crucial. And then the third is you want to create an ecosystem around the ETF. Create for market participants the opportunity to be able to have derivatives markets, futures markets, and the ETF market, where these instruments can be used in some cases interchangeably to hedge risk or take investment exposures, depending upon the type of investor you are. So I think that there are three key dynamics at play.
And the way I view it, it's a two-way investment. If you want to encourage cross-border financial collaboration, we see Saudi ETF being listed in Hong Kong and mainland China. On the other hand, we see Chinese ETF being listed in the local market. However, Ms. Helen, I want to hear your view on what challenges this market could face with a local listing from outside equities into the local market, given that 70% of the participants in this market are retail investors.
So you raise a good point that retail is very active in the market and they like getting involved. And I think firstly those ETFs, for example, with that that global connectivity layer into China, into Hong Kong, and into Japan, and further back to Saudi, play a great global connectivity layer that's not to be underestimated, and I think is a very positive development forwards. With respect to bringing further retail to market, I think to Gunjan's point, it's a great wrapper product, and you've got a capability to wrap a diverse set of products in there. But one thought out there for the audience is with respect to putting an ETF together there with a series of small cap and mid cap Saudi stocks that have a positive play into Vision 2030. If anybody would like to talk to us afterwards, we'd love to get involved in an ETF and bring that to the retail community.
Excellent, thank you. Adams, anything you add from the market participants here? Anything that you think could be supportive for a local listing or international listing of equity or fixed income from Saudi into the international market?
I think the two answers were very comprehensive. Let me add the following. When you're building a local ETF market, I think there are three important pillars. Pillar number one, listing, attractive listing to have a broad investor base, and both of you touched on that. I think fair and transparent regulation, and in our view, the regulation also should promote on-screen liquidity. And number three, a solid market structure. And there is a number of things that are important when it comes to market structure. Among them is a well-developed primary market with a diverse set of authorized participants, but also a creation and redemption market that can support small sizes. And this is important in order also to build liquidity on the order book. When looking at maybe inspiration when it comes to building a local ETF market, I would probably not look for inspiration in the European ETF market that is very fragmented. And from that perspective, the fragmentation is penalizing the and the European ETF market. One concluding thought maybe from my side would be...
Which market do you suggest?
I think, we know which market is the biggest when it comes to the ETFs, so that's probably the area to focus on. In order also to build a local ETF market, potentially a reform in a pension fund with regards to asset allocation could work as a catalyst, as a means to grow the local ETF market as well.
Which is important for the depth of the capital markets. And what we talk about, the liquidity and the need for liquidity to support the banking sector and support the big vision and the
Edmund,
construction.
just before we move off this topic, just one important example that might be helpful for the audience to really see, the point I touched upon at the start, the democratization of investing.
Yeah.
This region is considered highly attractive for many investors for a number of different reasons. And at the end of last year, we launched in partnership with the PIF, the Kingdom of Saudi Arabia Bond Fund ETF, which is a UCITS vehicle listed, in London on the London Stock Exchange, but we're already seeing European investors being able to participate in a number of fixed income exposures that go back to this market. So that is an example of accessing wider foreign direct investment to stimulate ultimately what's happening here.
That's why I was expecting to see the volume traded much higher, because it's a peg to the dollar. It's a low risk, high return, so high risk adjusted return. And also you have indirect exposure to the oil market. So it's a very unique characteristic for international investors. And we know there is huge interest from international investors into this region. So you will expect ETF to be a good way to access, gateway to access to the local market here. This question, I found it quite interesting because I didn't know, for example, that Saudi is the most active in the stock borrowing and lending. Probably we hear a lot of news about stock borrowing ahead of the IPO, Aramco, etc., but it's the most active in the Middle East. I think this is, if you agree with me, it gives more financial innovation strategy for the asset managers and allow for more liquidity pool for the newcomers and increasing the revenue opportunity for the existing investors. I want to hear Adam first. What do you believe the challenges facing the market maker on that front, maybe in terms of the limited counterpart fees, etc.?
Sure. So I'm going to refer a lot here to the equity market, and I think Tadawul has done a great job growing the market, and we've seen a tremendous progression and new developments in the market, which we do appreciate. Instead of challenges, I'm going to focus on the risk, which I think it is quite important and something that I'm actually quite passionate about. A risk, what we're seeing with liquidity in developed Europe when it comes to equity markets, we're seeing that there's a clear trend that the liquidity is moving off order book. There is less and less trading done on the order book, and roughly 45% in European equities today trades of order book, and then further you have increases in internalization, and that will continue to grow. And a lot of the internalized trades are also not visible, so they do not show up on the tape. And it's a problem because when investors are supposed to build a liquidity picture, it's difficult to build a full liquidity picture with that. Why do I mention this? At Citadel Security, we operate globally, and we can navigate through the complexity. But I think a couple of you mentioned before, and we're making reference to an investor. From a perspective of an end investor, it is critical for the liquidity to stay actually on the order book, on screen, for the transparency of the market. Hence, if you ask me about the challenge, I'm not going to point out a challenge, I'm going to point out the risk. In the interest of the Saudi equity capital market, I would advocate for the incentivizing and promoting actually that the liquidity in equity market stays in the order book.
Order book. So you think we're starting from a new page here. So it's better to start from the right one, which is on the order books, and keep it controlled, I guess. I
think so, right? I think we're seeing a number of challenges, and I refer to Europe now, but if we looked at the US market, the same story continues, and the same trends continue, and they do fragmentation brings opportunities, but also creates a lot of cost for the industry, and especially for the end investor.
Okay, good recommendation. Ms. Helen, how do you see this market that is evolving? What's the opportunity and the challenges for the supply and demand part of it?
Sure.
So I think with the very positive changes in the stock lending and borrower regulations back in 2021, I think have really opened up the stock lending and borrow market, which naturally feeds into market making, into derivatives, and into the wider, and ultimately into derivatives in the wider ecosystem. I think key aspects that came out with respect to the GIMSLA legal agreement, updated legal disclosures, as well as a much improved legal and operational framework. And I will say, off the back of that, actually, we're seeing a very good and significant pool of assets come to the market from lending that can feed into that capital markets ecosystem. It's initially probably been led by a lot of the international investors and custodians who have long established processes in other markets, lending processes, as well as the operational and technical capabilities. And now they're bringing those assets and lending those in Saudi. But equally, I would say, and I would really highlight the strong progression from both local investors and local custodians of actually, at a very fast pace, of actually building their technological, operational capability and actually starting to bring those assets to market. And I think we'll really see those assets come through this year that will feed into the ecosystem across market making, derivatives, etc.
And that will allow for more leverage, more volume trades, and more liquidity into the market eventually.
And it really feeds in, I would say, we've got very good liquidity at the large cap names, but actually feeding into the mid cap and the smaller cap names and actually bringing liquidity and further diversification of actually investors into those names. And so I think that'll be positive. I'd really like to highlight the continued progression that I think EDA is partnering with the wider group, investors, custodians, etc., and is actually continually to be very open in terms of progressing the overall stock lending and borrow initiative.
Thank you, Ms. Konjan. You have any view on the...
Yeah, I'll add that it's worth seeing how far the market's actually come. You know, I was taking a look at some of the data produced and published by S&P, and in 2023, the Saudi lendable market was 13%. 2024, it grew to 58% over a 12-month period, making a jump of that significant size, I think is testament to how much work, and Helen touched upon some of the 21 reforms that have been done from a market structure perspective. That's really accelerating the pace at stimulating the stock lending market. So I think it's worth calling out a lot of the positive work that's happening that will allow for more continued progress.
Very impressive development. And also on the top of this, we have a large IPO pipeline. And what I hear from my audience is diversified. There are different sectors coming. It's not Aramco only. We can see that really the private sectors picking up on the IPO. Also, we talk about alternative asset classes, which also was music to my ear, plus securitization, different kind of securitization. I'm personally involved in the mortgage securitization topic, which I found it fascinating, especially with the liquidity tightening within the banking sector. But Mr. Shahjan, I want to hear your view on how this market is evolving and what opportunity and how it feeds back to the same topic is liquidity.
Sure. No, thank you, Edmund. And I think we're circling back to your opening remark about potentially trillions of dollars of investment that are required specifically in real estate infrastructure and industrial investments under Vision 2030. I mean, no doubt by any measure, it is a historic and unprecedented economic transformation that we're going through. So we've heard a lot about technology, we've heard about fintech, but I think we need a comprehensive, fintech of course is an important part, but a comprehensive set of capital market solutions that will basically cater to a lot of these investments which are greenfield in nature, right? As part of that ecosystem, I think we've already started seeing, especially in the last, let's say, 18 to 24 months, that interest coming in, and we need a lot of foreign participation, cross-border collaboration, and a lot of that will be institutional in nature. Yes, democratizing access through crowdfunding platforms, as we've seen locally, and also the direct lending through some of these platforms. That's all well and good, but I think given the nature of what we're trying to achieve, we do need widespread and significant foreign investor participation as well. So, and for that, I think it's the whole spectrum, because today I think it's between straight equity participation and obviously bank lending. So I think we need to fill in all the boxes below that. So securitization is a key aspect of that, especially when it comes to infrastructure debt and how are you going to achieve the infrastructure financing goals that we have. And I think it's also around that, the frameworks, like I think very recent that we have a listing underway and like for example, allowing stock investors to invest in companies that do real estate in the holy cities, right? Mm-hmm. So this is the first step. Second step, I'm sure it's in the works that there will be consideration to direct real estate ownership as well. And easing all of those frameworks in order to incentivize investments, right? At the end of the day, it's obviously a risk-return balance that both local and global investors look at. And I might be biased because I'm based here, and but I think what we're seeing is that versus other geographies, other regions, we definitely are very, very competitive. I mean, a good example of that is on our level, digital infra, which was one of the first investments we did, is specifically data centers. So when you look at the risk-return metrics and in the market that it's slated to grow at an explosive pace in the next few years, I think there's few global comparables that can match up. So I think it is basically, and I think the beauty about the vision is, as far as foreign investors are concerned, there is a great amount of clarity and a great amount of collaboration, public-private, across the board on how to bring together, right? How everything comes together, and this forum is a good example of that. And our hosts obviously are a very good example of how they're fostering those cross-border partnerships and collaborations.
Thank you. And Omar, going back to fintech, I think fintech always have a challenge of funding and regulatory frameworks. Yeah, I'm very impressed with the action Sama has been taking in terms of the fintech, encouraging fintech, sandboxes, all of this, to promote fintech and to be, I mean, most important is build healthy relationship between fintech and banks and financial institutions. They are not competing, they should be working together. Just want to hear your view on the funding and the regulatory aspect. What opportunity there, what can be changed? How do you look at it?
Yeah, thank you. Look, I mean, Saudi Arabia's young and tech-savvy population is one of the great assets here ahead of us. And indeed, fintechs can play a very big role in driving market innovation and more liquidity to the market. And there are challenges, but there are three key ways to harness the potential of those fintechs. I'll try not to take too much time. But number one, we have to foster the fintech ecosystem, an enabling fintech ecosystem. And that means we need more innovation hubs, we need more accelerators, we need to funnel more liquidity to those fintech startups. And we take pride that AMB Capital and the wider AMB ecosystem, the bank is known to be one of the, let's say, preferred fintech startup partners in the market. But we also manage AMB Seed Fund, which is a fund focused on investing in startups within fintechs operating in Saudi Arabia. More of these initiatives will help across the issues related to the funding or liquidity hurdles available for fintech. Number two is an aspect which we probably missed in the question, but it's enhancing financial and technology education. I think we need to see more programs for the youth. We need to see more collaboration with the universities to make sure we create a pipeline of talent, ensuring sustainable long-term growth within this sector. And I'm glad you touched on the regulatory aspect because great initiatives like Sama's regulatory sandbox have been instrumental in allowing those fintechs to test, to go to the market, to deliver those products. And honestly, we as investors, we like to see this continue. We like to see the regulator continue to be open for adopting innovation and allowing the market to test within a controlled environment. If you lose that control aspect, it makes it unstable for the market. It makes it dangerous for the consumer. So yes. I think we are exactly where we need to be. We just need to see more activity there.
think one of the things that I learned recently is Arab National Bank, they do have program for startup where you can do banking with the startup, deposit the capital, provide banking services to encourage the startup to take the first step in the ecosystem. So I think we need more action like this from the rest of the banking sector. I think the last question is a closing question.
Can I just, one minute?
Go ahead, Adam.
One minute, because you touched on education.
Yes.
And I think this is critical, right? When we're looking at the IPO pipeline that is large and diverse, we're looking at expanding into new asset classes. Let's remember that the key driver behind the equity market growth in Saudi Arabia was the retail participation. And it's going to be critical for the retail also to participate in other asset classes in order to drive growth as well, in our opinion. And with 2/3 of the population under 35 years old, the youth of Saudi Arabia is a demographic powerhouse, and they stand in front of a chance to fuel and drive the growth, right? So you touched on the education, and I think in order to keep the retail clients engaged in the market, and it is critical to continue the focus on education and continue on the investor protection to make sure that the investors are there for the long term.
Excellent. I think that we talk about education in terms of the asset classes, plus regional equities, international equities, different markets, because I think most of the retail investors in the region here are very familiar with the US equity, probably less familiar with Chinese equity. So a lot of education needs to be done to understand other market structure, how to read the financial of it, how to read the market and the economic structure of that particular country. I think the last question I would like to ask you is, maybe someone in the room can help hearing your wish list, but what do you think this year, what do you hope the market to be improving on from regulatory front to help you do your business or to help the sophistication of the capital market in Saudi Arabia?
Yeah. Look, I think we've seen a very healthy activity in terms of VC and technology in 2024. I think there was more than $460 million deployed into non-mega deals within fintech, funding more than 175 deals. It would be great if we can see more late-stage investments, deployment into late-stage companies. There's a bit of a gap today in the market there particularly. It would be great if we can also see more IPOs within the technology space in general. And on the regulatory side, I think the next disrupting regulation is going to be probably around open finance and open banking. Open banking will change the landscape in Saudi Arabia. It will enable those fintechs to be more efficient, more powerful, and more competitive as well. So we'd love to see more on the regulatory aspect in that front.
Thank you, Omar.
Thank you.
I have one sentence. Yeah. I think on the regulatory side, it would be good for the market and especially for the local institutions to be able to offer trading under swap to level the playing field. That's
Thank you, Adam. Listen.
3 quick things that we'd love to bring to the market. So roll out the cash omnibus model to further grow the fundamental investor base into the market. Number 2, in line with there, a strong issuance pipeline for 2025 and onwards. And number 3, a return for everybody, including the retail audience out there, the TASI to finish the year at 14,000.
Thank you.
Yeah, I guess I'll switch to the alternative asset classes. But going back to the point Adam made, so I think I have to give credit to our retail investor class. They are very well exposed to all alternative asset classes, including real estate, private equity, venture capital. So I think that education level, so I think they're a bit ahead of the curve. So credit to them. And but I think the wish list, if for this year and beyond, I think like I was alluding to earlier, I think we do need to have more foreign institutional participation, specifically in real estate and infrastructure to begin with, and I think it's incumbent upon the local capital market institutions to basically foster those linkages and those bridges between us and those institutions, because it is a big ask, like we said. So.
And I'll wrap up with, from an ETF perspective, to be able to really encourage market makers with competitive market-making incentive programs on exchange. I think it's crucial volumes remain on exchange, I think it's really important that we continue to drive up the trading, and I think competitive market-making incentive programs can help from exchanges.
Thank you very much. From my point of view, I think I learned something very important. I do focus on the banking sector too much, that the banking sector is the source of funding for the transformation agenda under Vision 2030. But clearly it's not. It is the whole ecosystem, including the capital market, the fintech, the alternative investment, and the market structure, the omnibus or collocation, all of this fancy word. I think all of this make healthy ecosystem to attract foreign money into the kingdom, which will become the focus in the foreseeable future for everyone. Thank you very much for attending. Thank you for the insight, and hope to see everyone soon. Thank you.
Thank you. Thank you.
Thank you all for that panel and everyone here watching and those on the live stream as well. It's time to talk some data. On this panel, we'll explore how institutions, investors, and regulators are leveraging data to create smarter and more efficient markets. I'm honored to welcome Mrs. Reina Takla, business editor and head of business section at Arab News, as our moderator. She'll be joined by Mr. Yazid Al-Dumaji, chief executive officer at WAMID, Mr. Doug Peterson, special advisor and member of the board of directors at S&P Global. We also have Mr. Mahdi Miri, chief executive officer at Direct FN, as well as Ms. Catherine Ferber, global head of emerging markets trading product at Bloomberg LP. And finally, with Mr. Oliver Newton, who's the chief executive officer and chairman of DeFi Technologies and co-founder of Valor. Welcome, everyone.
So good afternoon, everyone, and good afternoon, ladies and gentlemen, lady and gentlemen. So today we are going to talk about data. All right, I have a nice introduction, which I'm gonna share with everyone. So data isn't just about numbers on a spreadsheet anymore. All right, so it's the fuel powering investment decisions. It's the secret sauce behind winning trading tactics, and the very DNA of how our markets are working nowadays. So today with us, we have an all-star team, which I had the privilege to meet half an hour ago, and I am looking forward to getting more insights from them. And they are going to share with us their knowledge on how data is transforming everything, the challenges of making money from data and making it right, and the mind-blowing possibilities that lie ahead. From Wall Street to the cutting edge of DeFi and everything in between, we're going to dive in and learn more and more information. Are you ready? Good. So I'm going to start my first question with Mahdi. From Direct FN's perspective, how valuable is data as a strategic asset for both investors and sell-side entities? And how can it be leveraged to drive value and create advantages, competitive advantages in today's market?
Thank you, Arina. And thank you for having me here.
It's a pleasure.
So your question is about data as a strategic asset. Absolutely. What I believe is that data is the new alpha. So those who master it will not only participate in the market or win in the market, but actually will define the market. So in Direct FN, we are working with investors, we're working with market participants, whether it's brokers, asset managers, banks, or with exchange and institution. And with that, we believe the strategic value of data is coming from three big ways. Number one, investors. Number two, for the sell side. And number three, for the data being a revenue stream itself.
Okay.
So for investors, it's really about making smart decision, fast decision. So the time where you had an investor looking at charts, price charts, it's over. So what investors need to see today is real-time AI-powered data that will help them look into insights and foresights so they can see basically market opportunities before the market moves. Mm-hmm. Number two, sell side. So already today we have brokers and banks. They are using analytics, advanced analytics, to build their trading strategies, their hedging strategies, to improve the execution. So algo trading and data-based models is not just an option. It's essentially part of the fabric. Number three, the data as a revenue stream. What we are seeing today with our clients, prospects, is that companies are already packaging data and making it available, monetizing it with their customers. And we are working, helping them in that. The challenge really is how to use the API, how to use the cloud, and how to use AI to make it scalable. We're talking about real-time data and historical data. So these are three main ways where we see the strategic value of data.
That's quite interesting and concise at the same time. So I'm going to move my next question to Doug. So S&P Global is a leading provider of data analytics, actually, to the financial markets. Could you share with us some of your insights into how market participants are currently utilizing data, what key trends you're observing in data usage, and how S&P Global is anticipating the future of data in the capital markets. In particular, what I am interested in learning or in hearing is your perspective on how data is driving decision-making in the markets.
Thank you, Reina. Thank you for having me here today. Let me start by going back 165 years ago when S&P Global was first formed. So we've been in the data business, I call it content, for over 160 years, 165 years this year, we're going to be celebrating it. And about 15 years ago, we took what was a publishing company and said, let's turn it into a data and a content business for markets. And this was a really important shift in the strategy away from the traditional publishing businesses where we worried about advertising and saying, let's move all those businesses out and let's focus completely on data and market businesses. Today, that business is a $13 billion top line, a market cap of over $160 billion. So that in itself should give you the view that data is valuable, that we have this kind of a business. And if you think about that then, at S&P Global, now what are the trends that we see? My answer to your question is people want data all the time, immediately, in every form, however it could be possible. And what that means is that many years ago, we used to provide publishing things in paper. We used to provide things in PDFs. We still have to do that, but that's actually not the way people need data anymore. They need it to go straight from machine to machine. Some people need it on a screen. Some people need it to get downloaded into a pitch book. Some people need it to be downloaded so you can actually print a PDF. And that goes for everything we do, whether it's a rating, whether it's a benchmark in the S&P 500 or our index business, whether it's for our market intelligence business, it's a commodity price, it's a Brent crude price. No matter what it is across the business, we have to think about delivering that data in the form that the customer needs it right now.
So even for data now, there's customization, not only in products and services. Interesting. Now, Yazid, moving to you. So WAMID sits at the intersection of innovation and capital markets. How do you think we can effectively navigate the challenges of data monetization, while adhering to regulations around privacy of data? And what role does the Saudi Tadawul Group and its subsidiaries play in this process?
Good question. So I would start with something very important. We in the capital market industry, we are a heavy regulated industry.
Mm-hmm.
So we are used to work with heavy regulated entities, and we have the regulators today with us.
They're watching us.
And I came from a regulator, so I understand how regulations are heavy. However, as a capital market infrastructure, and all of the financial institutions find the way of finding the balance of how can they innovate while they maintain the regulations and not adhering to it. So I would suggest 3 things that we are doing in WAMAD and in our project today in data monetization. First is comply with the regulations. So today in Saudi Arabia, we do have SADAYA and NCA regulations related to data privacy, cybersecurity. This is very important that we are taking care of it in our projects and any product that we are providing to our customers. Second is a clear and good governance framework and classification.
Mm-hmm.
So once you have this clarity of classifying your data, you know how are you going to deal with it and what kind of governance that you are going to apply to this.
Mm-hmm.
Third one is listen to the market, understand what would be the need for the market for this, what kind of products they are looking for, and listening to Mahdi and Doug. Data is, capital markets are driven by data. Data is there for more than 100 years ago. So everybody in capital markets are looking for data, using data for making decisions. In WAMAD, what we are looking for is to provide this service with a good quality, with enough depth.
And indeed, you mentioned about regulations, and we're seeing in Saudi Arabia recently more and more data centers are being relocated or built in Saudi Arabia. From Oracle to Amazon to Google, huge data centers are being built here, and this will help even further with regulating or maintaining the data in the country. Correct me if I'm wrong.
Of course, and today we announced our partner with Google. So this is one of the things that we are using, because in Saudi Arabia, there is a clarity, strategic direction to adopt data and AI industry in the kingdom. And this is where WAMAD are planning to play a major role to enable the innovation in the capital market.
Amazing. So congratulations on the Google deal. Now moving on to Catherine. So Bloomberg is at the forefront of providing market data and trading solutions. Could you share some of your insights into the evolving data ecosystems that you observe, particularly in the realm of competitive pricing and AX data, and how these advancements benefit traders both on the buy and on the sell side?
Sure, thank you, Raina. And I'd like to first of all thank the hosts for the opportunity to participate in this panel today. I think we all would agree that it's been really compelling and exciting to feel and observe the transformation that's underway in the Saudi capital markets. I think what we've heard a lot about today is the role that digitization is going to play within that transformation. And this is an area where I'm hoping to share a few insights. Bloomberg provides a wealth of data and data services, but my specific area of expertise is fixed income, and within that, electronic trading. So I was hoping to share some stories about how data is driving trading behavior. I love what you said earlier, Mehdi, about data being the new alpha. I definitely share your sentiment there. So maybe just some numbers from the EM debt space, first of all. 3,200 investors traded an EM bond electronically on Bloomberg last year, and that number is growing. And if we look at the extent of electronification that we see taking place, in EM debt, we see around 5 to 10%, we estimate, of trades that are currently occurring electronically. Whereas if we look ahead to, say, the US Treasury space as a leading indicator of what we can perhaps expect, there, market intelligence indicates that as much as 63% of transactions, or volume rather, is being done electronically now. You spoke about an algo trade earlier. We just did the first US Treasury algo trade not that long ago. So data is going to take us on that journey for sure. And when we look at what investors want and how they're interrogating data to approach doing a trade and deciding whether or not to do that trade in an increasingly digital fashion, what we see is what you described, Doug. They want breadth of data, they want everything, but they also want it distilled down to the most meaningful insights delivered to them right when they need them, which is quite an interesting challenge to try and solve. So how do we do that? We give them sell-side indicative quotes through tools like AllQ and QMGR on the terminal. But increasingly, also what we're trying to do is help them distill those insights via the likes of composite prices. So you may have heard about the recent launch of IBVal, which is an intraday evaluated new composite price, which we've launched. What that does is it takes into consideration as many different data sources are available, including real electronically executed quotes, to give clients real-time ticking composite pricing to give them as good as possible an indication as where they're likely to trade. What are they ultimately trying to figure out? They're trying to understand depth of liquidity, directionality of the market, and ultimately to get confidence for that next trade. So we think composites help them with that a lot.
Amazing, amazing. Thank you so much for your insights. Now moving to Olivier. With DeFi technologies exploring the intersection of decentralized finance and that data, do you think AI and data automation are creating new opportunities to improve how capital markets operate, especially in areas like analysis and decision making?
Yeah, no, absolutely. I think when you look at kind of the digital asset space that we play in, you've seen really a whole asset class emerge around cryptographic principles. And new cryptographic principles in the form of zero-knowledge proofs, fully homomorphic encryption are really paving the way for the data analyzed across blockchains and other sectors to actually be verified, audited, and independent for actual usage. Because when we analyze artificial intelligence data sets or a large amounts of data from consumers, we need to properly disseminate and make sure that information is secured. And within regards to the digital asset class, which has really been kind of like a testing ground for new technologies at scale, I think we're going to be able to abstract a lot of that innovation to access and utilize large-scale data sets for the abundance of downstream applications.
And is this happening anytime soon, or maybe more than longer?
It's happening with AI data sets and things of that nature. I mean, the other week, the European Union and other policymakers out of the Bank of International Settlements have put in place basically kind of regulatory frameworks to utilize technologies like zero-knowledge proofs to basically secure, digitization of dollars, whether that happens in a centralized fashion or decentralized fashion. And when we're analyzing, the world's money supply in a digitized format, we need to make sure that the endpoints of that data is secure.
All right, so we'll see how this will evolve.
Absolutely.
Yazid, coming back to you. WAMD is the innovation arm of Saudi Tadawul Group. How do you specifically support the development of the Saudi capital market through its data initiatives? And what are some of the key projects you are currently focused on?
Excellent. As you said, the focus of WAMD is enabling innovation in the capital market. We are doing this through focusing on two pillars. The first one is the data solutions. The second is the infrastructure technology. So in data solutions, as we saw today, we announced our partnership to launch our project for the data terminal.
Can you tell us more about that, please?
Sorry?
Can you tell us more about that?
Okay. So what we are planning to do is to offer a set of data that suits the demand of the market. We are focusing on satisfying the issuers, the capital market institutions, the investors through series of data with easier accessibility and with enough depth, and actually, the most important is with a good quality. As we talked before in the first question, we are working on the classification and making sure that our data have a good quality which satisfy the need of our clients.
Okay.
On the other side of the infrastructure, today we are offering the co-location, which helps the capital market to increase the access of institutional investors, especially for the HFTs. So today, the HFT trading is around 25% of daily average trading.
You're talking about in Saudi Arabia?
In Saudi Arabia.
Not globally.
Yeah,
okay.
Saudi Arabia. And also, another thing that we are offering is the stakeholder platforms, Liqa. We are now arranging the General Assembly's meeting and other things. So these things that we are focusing on. So the focus is to enhance the infrastructure and ease the access to the data in order to ease the access, increase the transparency in the market.
in order at the end of the day to increase the liquidity, more investors, attract international investors. Correct. All right, so moving on to Mahdi. Beyond its value as a strategic asset, how can data be effectively monetized? Can you give us some example of successful data monetization models that DirectFN has implemented? And what are the key considerations for firms looking to leverage their data for revenue generation?
Okay, so we talked about the strategic data as a strategic asset. Now, when we talk about monetization, what we are saying is that data, it's a business in itself, right? And what I would say is, you know Spotify?
Yes.
So I think this is a bit the Spotify moment for data, where we are converting raw data into on-demand revenue-generating machine. And I think that's what we are all trying to do, and that's our clients are trying to do. And before talking about examples, Doug was mentioning earlier, to give you a feel of the value of the monetization, talking about billions of dollars. This is a global trend, but this is also actually a local and regional reality here. And so if I want to maybe describe 2-3 ways where that we are witnessing or that we are helping clients monetize. The first one is data as a service. Number 2, analytics as a service. And 3, for me, is really the hyper-personalization of data embedded into a platform. So these are the 3 vectors. Briefly, on the data as a service, again, providing raw data is over. It has to be enriched, powered with AI, available for clients. We have more and more demands for what I would call smart feeds from clients, from brokers, and from the institution to make better decisions. And that's why in Q1 we are launching, as part of our financial content, we are launching a state-of-the-art new offering that's going to combine real-time data with analytics and with AI content.
Is this a scoop?
This is in Q1.
So no, I mean, is this a scoop? Are we getting a scoop now?
Yes, this is the scoop. It's not a wow moment, but that's a Spotify moment, yeah. Number 2, so I said data as a service. Number 2 is going to be analytics as a service. So what, again, clients and end users want is enriched data that is not telling you only, it's not a number, but it's a foresight, what to do next. I think that's obvious from all the conversation that we have had here. And number 3, more important, how to put all this together. So basically, the best model is not to give separate data here and there. It's first aggregate the AI enrichment of the data, personalize it, and then embed it into a platform so that you can give continuous value. You don't want an investor or an institution to go and dig data in multiple sources. You want them to look into, maybe an image is better than words. Just imagine you have a dashboard where you can see your data, but you see also suggestions on what to do next. So this is the direction that we are going to, and we are working with our partners.
Wow, cutting edge technologies and looking into the future. Moving on to Doug. Looking ahead, what are some of the most exciting emerging areas of interest for market participants, in your opinion, regarding data? And how is S&P Global preparing to address these evolving needs, particularly in areas like DeFi, private markets, and energy transition?
Great, thank you for that. And I'm going to talk about 4 things very quickly. First of all, since we have Olivier on the panel, I'm not going to get into depth on DeFi, but watch this space because there's a hype cycle a few years ago. There's incredible hype about it. It died down, but it's becoming a reality, and especially watch anything that has to do with collateral. Analytics and collateral in addition to everything that Olivier talked about. Second, energy and energy transition. This is something that is real, and the way I think about it, I'd like to distill it back to the question of how are we going to electrify the planet? Because right now we have a planet which is driven by hydrocarbons, and there's discussion about how do you move to alternative energy and how do you do it along the way? What's the role of LNG? What's the need for copper, for different types of metals, nickel, cobalt? In order to have all of that come together in one space, our customers and markets and regulators want to know, how is that going to happen? What are the prices? What are the risks around energy transition? Third, private markets. Private markets isn't something new. It's just that it's expanded so fast. And in 2022, when inflation was peaking, the people who had been lending money to mid-cap companies moved up to large-cap companies, and that space has boomed. It's gotten very large very fast. Now, if you're an investor in private markets, if you're a pension fund or some sort of a large global investor, you now have an asset class that you don't have the same kind of mark-to-market capabilities, pricing capabilities, risk management capabilities, because up until now, it's never been priced every day. But you have the exact same risk in your portfolio. So this is something that private markets, we're getting incredible questions, and this is an area that we're putting a lot of investment in. And finally, generative AI. I'll be very brief on generative AI. This is another area, it's high on the hype cycle, but what we have to start looking at isn't building the models. It doesn't matter what OpenAI and DeepSeek are doing, because eventually those are going to become big commoditized models. What's important is the agents that are going to be built on top that are going to allow us to take advantage of those AI LLMs and actually deliver things of value.
That's interesting. Thank you. So moving on to Catherine again. We're seeing a trend of buy-side firms hiring quants and data scientists. Is Bloomberg supporting this trend? And what are some of the innovative ways buy-side firms are utilizing data to enhance their trading schemes and decision-making processes, especially with the use of automation?
It's fascinating going from sort of macro data trends, which are all really exciting, down to some sort of more micro applications of data within the world of fixed income trading, but definitely echo some of those trends, private markets in particular, as themes that we're seeing on our side outside of trading. So yes, Raina, we're definitely seeing an increase in buy-side investment in their own individual IP when it comes to trading decisions. We've seen a lot more hiring of quants, of data scientists to try and build out their own methodology for data being their alpha, effectively. What sort of data are they interested in the fixed income space? Of course, the AX data, those sell-side indications of a desire to buy or sell a bond, but also trading data. And by trading data, I don't just mean what did they trade, with whom, and at what price. They want to build as rich as possible a story around the trade as they possibly can, so they can learn as much as possible from it. So we're talking about how many counterparties they asked on a trade, whether or not all of those counterparties responded to the trade request, how quickly, what their price quality was like, how reliable that price was versus the pre-trade indication of that sell-side counterparty's level. So that's the kind of level of depth that they're looking to get. And what are Bloomberg doing to provide that data? We're doing a fair amount, so we make it available to our clients on the terminal. We give them pre-formatted reports to sort of suggest insights to them, but we also make it available to them. They can build their own bespoke reports and extract them programmatically, or increasingly also clients who want to behave in a more sort of codified or code-like fashion can use tools like the Bloomberg Query Language, BQL, to make Python-like requests of the data to perform their own custom analysis of it. So yeah, we're doing a lot to make that data available. And again, why is this important? Ultimately, to drive trading in more efficient ways. And that's where tools like Rule Builder, our automation tool, is being increasingly adopted, where the buy side are taking those gleaned insights to drive adoption of increasingly electronically traded workflows.
So basically the whole point is to get things more efficient, quicker and faster.
Exactly.
And make more money.
Where they feel reliable, so they can do the easy stuff more quickly and then focus on the alpha generating difficult stuff.
Interesting.
Yeah.
Now, Olivier, there are some challenges of data monetization due to regulatory constraints, as we all know. Can technologies like blockchain and self-sovereign identity, also known as SSI, help companies share and profit from data while staying compliant?
Yeah, no, absolutely. I think we've only been, the idea of decentralized finance is barely 5 years old. I think around 5 years ago, I was previous company that I founded and was running. We were one of the largest Ethereum miners globally. And over I think it was the summer, August 2020, I was checking kind of our real-time dashboard, and all of a sudden, our Ethereum mining revenues quadrupled in the span of several weeks. And I think it was really the first time that people were using the blockchains for something with a relative impact. And how that works is, the more transactions that are being put onto that network, the more miners are essentially being rewarded. And I think going from, what was, I think it, started off in 2020 as a few $1 billion of locked value on-chain, went up to a few $100 billion. We're seeing kind of a similar emergence in terms of real-world assets that are being utilized with that kind of backbone of decentralized finance in whole new ways. And in terms of SSI and how that comes into the factor is there's great kind of identity solutions for individuals, corporations to interact with blockchains that basically unlock a whole new way of financing, collateralization, and bringing traditional finance mechanisms with kind of an added value of what blockchains can enable, which is smart contracts, agentic finance, which we're seeing trends of now, and I think it's going to pave the way for really a new data-centric approach to automation of financial system entirely.
And it's just the beginning right now. What we're seeing is, what we will see in the going forward will be...
Well, I think the biggest data point, since we're all talking about data, is just the prediction of kind of, traditional financial assets or RWA assets being kind of tokenized. And I think we're at just over $100 billion, and that's kind of 4 or 5x in the last 6 months, and it's predicted to hit 30 trillion in 2030.
Wow.
So I mean that amount of growth will unlock the next wave of financial applications that we've yet to even scratch the surface of.
Interesting, impressive actually. And my final question, we only have 5 minutes, so let's do it quick. So looking ahead, where is my question? Okay, so looking ahead and taking into consideration the vast impact of AI is having on everything we do and we know in life. What are some of the future trends in data monetization that you might see? And I'm addressing this question to everyone. And how do you think this affect the capital markets or the capital markets going forward? Doug, I think you would like to start with answering this.
Yeah, let me start. My first comment relates to the data question about generative AI, and that is that everybody in this room, no matter what you do, the first question you have to ask from a governance standpoint is, how am I going to protect my data? Do you want your data to be the one that's used in a model that's being built? Because once it's there, that model is going to be using your data forever, and are you going to get paid for it? So make sure that you use this opportunity right now to lock down your data, make sure you're protecting your intellectual property. And for 20 seconds, I also want to encourage the Saudi Tadawul Group to continue this type of a forum. Capital markets are global, but they're also local and regional, and I'm really encouraged by what's happening in the Saudi market, the liquidity that's coming in, the institutions that are starting to have much larger balance sheets, and we're very pleased at S&P Global to start building a local presence because we think this is one of the most important markets of the future.
Anyone else would like to share with us what are the key trends you can see going forward in data? Yazid.
Yeah, what I can say is imagining the future with a very fast change is difficult. So if we go to the 80s and we look at the trading floors and how trades are executed, and you tell someone at that time that after 20 years there will be the trading floors will be a legacy, I would say they will laugh to you. Exactly. So I can't say that I'm going to imagine the future very, very clearly, but what I can say is, as Doug says, data and set of data will change and it will become more important. I think it will be termed to be the new currency for the capital markets, building a lot of ideas and products around it. So Mahdi talked about that the era of raw data is done. Today we are in the new area of implementing the new layer of AI So this is the idea that now we are exploring of how are we going to implement generative AI on the data that we are building. And then from there, I think new use cases and new models that we are going to see.
And definitely no phones.
Hopefully.
Mahdi, would you like to share with us your thoughts?
Yeah, so you're asking about the trends, maybe just in short. I see some short-term or even current trends and a little bit longer term. In terms of current trends, I think we talked about platform-based, AI-powered. So this is a reality. There are multiple examples. I think tokenization is something that is big because this is going to drive, especially on the back of AES, on the smart contracts, etc., a big shift in the market. Now, further down the road, I think if you have the data and we have liquidity, this could be actually a new asset class. So, a few years back, a few decades back, no one was thinking about carbon trading. So in the future, we'll be talking about, I think, data trading. And this is not really very far in the future. There are already examples, Snowflake data. You can buy it, you can sell it, you can rent it, you can use it. And I think this is a big trend that's coming. Obviously, we'll have to balance it with what Doug says, which is data protection and regulation. So these are the trends that we see now and further down the road.
Interesting. Catherine?
Well, I think it's fair to say that the pace of change is changing.
Interesting.
And Bloomberg has a wide-reaching AI strategy. To speak outside of my own sort of immediate sphere, we've just launched AI-driven news summaries, which was in the press a few weeks ago. But my role is to sort of think about reimagining trading for the age of AI. And really, that's just about delivering as many learned insights from the data as we possibly can. So that's going to be my focus. It's back to that how, when, what, with whom question from earlier.
All right. Olivier?
Yeah, I think really kind of the exponential utility of data is going to be the convergence of all of these topics we've discussed. And I think maybe it was 5 years ago, how every portfolio manager essentially needed to have some sort of mandated, ESG subsection of their funds. I think that's going to be a paradigm shift to, basically people who manage money, whether it's large institutions, individuals. There's going to be kind of a mandated or required AI component to the management of your data, really, because it will look, it won't look smart if you're not using, agentic capabilities within financial portfolio optimization, and the ability to bring in technologies like tokenization enables the automation of all of those trading technologies.
Amazing. So that was quite interesting. As I was telling you before this panel, I was a little bit stranger for this topic, and I think I've learned some pretty interesting stuff, and I hope the audience as well found this beneficial. I thank you so much, and I thank everyone. And apparently the future of the capital markets is being written in data. So we will look forward to see what the future will hold. And until then, we will keep on exploring. Thank you so much, everyone.
Thank you.
Thank you.
Thank you.
Thank you. Thank you very much, Reina and panel. Next, we're privileged to welcome experts from firms that are major contributors to the Kingdom's long-term economic goals, with a focused discussion on the role of real estate and construction sectors as part of the Kingdom's diversification efforts. Please welcome our moderator, Mr. Raed Al-Qubasi. He's the Senior Vice President, Real Estate Investments at Awqaf Investment. And our panelists, we have Mr. Fahad Al-Aslami, Chief Financial Officer at Saudi Real Estate Company, followed by Mrs. Samia Hajju, Strategy Vice President at Al-Kithri Holding, Mrs. Leila Al-Suhaimi, Sustainability Manager at Rital Urban Development Company, and finally, Mr. Saoud Al-Muhanna, who is the Investment Manager at Sukuk Capital. Thank you.
Assalamu alaikum, everyone. Good evening. It's such a pleasure to be here today, moderating this important discussion about the future of real estate and construction. We are in a rapid time of transformation, new technologies, mega projects, and sustainable goals. Evolving financing strategies are all reshaping on how we build and invest in real estate. The question is, how do we continue building more smarter, greener, and financially sustainable development? To explore more, we have a great list of panelists. So, ladies first, we'll start with Leila. We'll start with Miriam. AI and smart materials are changing the way we build. How can these innovations improve efficiency and sustainability in construction?
Thank you, Raed. So today the construction is tremendously evolving, and we're talking about AI at the one hand and smart material in the second hand that are playing a crucial role. So one of the biggest challenges that we have in the construction are project delays and also the complexity of the designs.
Yeah.
So with AI-powered tools, we are able today to automate the process of design, also to extract data from the blueprints, and finally to be able to generate drawings that are compliant with the regulations. So at Al-Kithri today, we use AI-enhanced BIM, which is the building information modeling, that allow us to improve the accuracy, to build faster, and also to have more cost-efficient construction. In the second hand, we are talking about smart materials. In the smart materials, we are talking about something like the image panel, to give an example, that will allow us to have an excellent thermal insulation, to lower the energy consumption, but also to reduce the minimal waste. So by leveraging AI and smart materials, today we are able to build faster and in a more cost-efficient way.
Great. So as we are all proud, Saudi Arabia is preparing for Expo 2030 and the FIFA World Cup 2034. What infrastructure priorities need to be addressed to support these global events?
So yeah, this is very good news for Saudi, and we are all very thrilled about that. The Saudi World Cup in 2034 and the Expo in 2030 are preparing Saudi to host a huge influx of global visitors. For example, just for the Expo, we are expecting almost 40 million visitors for almost the 6 months. So all this, inshallah, beyond preparing amazing events, this I'm sure the kingdom will ensure it. The challenge is going to be how to make this infrastructure that we will be building valuable and also functional beyond the events are over. And now we are talking about 3 priorities. The first one is a sustainable urban development, and the challenge is to design housing that is more for the long-term growth and also efficient housing that is also relying on energy consumption, a lower energy consumption, and transportation. The second one is scalable accommodation. Today we are talking about preparing the hospitality. We are talking about 230,000 rooms. Also the housing that will serve the long-term needs, the visitors that are coming from the worldwide, but also will serve the long-term residents, the residents of the kingdom, but also of the GCC.
Yeah.
And the last priority, not the least, is going to be to an efficient mobility. Today we already started actually with the Metro of Riyadh, which is a huge example and a very successful one. We have to expand the network, the transportation network, and to ensure a seamless connectivity from the airports to the key venues to the key hubs. And also, by allowing a modular construction one more time, we'll be able to reach to serve the immediate needs while completing the global ones.
Great, great. So, since you talked about the residential, now when it comes to the affordable housing, as we know, it's a growing need worldwide. How can eco-friendly and innovative technologies help housing more accessible and scalable?
It's funny because every day I open the news, we are talking about affordable housing in Pakistan, in Indonesia, in Rwanda, in whatever. And it's something that is rising globally. And the challenge is to build quickly, affordably, without compromising the sustainability. Because today everyone is talking about the ESG. We have to be ESG compliant. So today, with better techniques that are cheaper, and I will talk one more time about the modular and scalable construction. We will be able to build off-site and bring to the site the entire sections of home that are ready to put. And we also gain through this quality control, a better quality control. So all this will allow us to reach a better...
Great, great. Thank you, Samia. Now, once you talked about the ESG, now we come to the, mashallah, to Leila. She knows a lot about ESG, and as you know, sustainability is no longer an option. It's a business driver. How do you balance sustainability goals with profitability while ensuring long-term impact?
It's a really excellent and pertinent question now that we're at a significant event in the kingdom that's based around finance. Certainly when we're integrating our ESG KPIs across the organization, we also need to understand our profitability ratios and do proper cost-benefit analyses against each KPI to understand where we're sitting. Because while we think of people and the planet, we also need to be profitable as well as sustainable. So the second year of our ESG reporting was an exciting and very significant year for us as we announced KPIs such as working towards a 5% reduction in water consumption, 10% reduction in electricity consumption, and other KPIs that really have financial impacts on the organization as we work towards aligning with our sustainability goals. A significant one as a real estate developer is that we're working towards having 40% of our portfolio to be sustainable by 2030, working within LEED and Mosterdam certifications. And these have a return on investment, but there's a cost to be accounted for upfront in the project cycle. So it's very, very important to consider that through the project planning phase and the strategic implementation phase in the organization as one of the vital pillars of how we integrate sustainability successfully.
Great, great, wonderful actually. So can you share a success story where your sustainability initiatives made a real difference and how you measure that impact?
Well, I would really turn to transferring 40% of our projects in our portfolio to be sustainable as a great success story that we're working towards, very diligently on. Sustainability is a new and exciting journey in the organization that we commenced with the onset of our listing in 2021. And we did that because we obviously understand that sustainability and ESG considerations have an important impact on increasing things like international investment exposure and sustainable buildings, because the real estate industry approximately contributes to 40% of global GHG emissions. We need to really understand our impact in the industry and ensure that it's positive in Saudi Arabia, but also on an international scale as we work towards driving sustainability globally.
Great. So how does retail measure the success of its sustainability programs, and what key factors determine whether a project truly aligns with ESG principles?
Well, we always say the devil's in the data, right? So it's really crucial, just as we report on financial metrics when we do financial reporting, ESG has qualitative and quantitative non-financial data that we need to adhere to, and we track this month to month across a range of different departments. And we do that, regularly, just to ensure that as we're working towards driving KPIs that we've set forward and that we're disclosing to our investors, it's really important that we know where we're sitting. And this is, it seems like something simplistic, but I would say that this is one of the success stories, because what we've actually done in the organization is we've digitized our data collection process. So what this does is we're also limiting the human error, slippages of, just inputting data manually as we start to, make sure that this is authentic and valid.
Thank you, Leila. Now we come to the gentleman when it comes to Mr. Fahad. Vision 2030 is driving massive real estate projects. How is Al Aqariya aligning its financial strategy with these opportunities?
بسم الله الرحمن الرحيم. السلام عليكم ورحمة الله وبركاته. Thanks, Raad. Thanks for this question. And I'm happy to be part of this panel discussion in this global forum. Return to the question. Vision 2030 brings exciting opportunities in real estate and even hospitality sectors. Al Aqariya is strategically positioned to benefit from these opportunities. One of major Vision 2030 goals is to increase home ownership to 70%, in addition to launching a premium visa program which allows non-citizens to purchase real estate. This creates high demand on residential properties. Al Aqariya launched a project of 3,000 plus villa plots and completed that project, and also launched 700 premium residential units in partnership with Roshan and other sub-developers. Al Aqariya funded this project through internally generated funds using WAFI off-plan sales mechanism. This helps us to reduce the risk, increase the profitability, optimize cash flow, and even strengthen our balance sheet. On the other hand, we partnered with the government in Giga project, infrastructure project, through our subsidiary, Binya. We partnered with Dir'iyya, with Qiddiya, with Red Sea, and Green Riyadh. This is also supporting Vision 2030. Saudi Arabia, as mentioned before from you guys, is rapidly becoming a global business and entertainment hub in the future, preparing to host major events, Expo 2030, FIFA World Cup 2034. We are capitalizing in that. We will enter into hospitality sector. We signed agreements with Marriott and Hilton for 2 hotels. Marriott in Riyadh, the brand is Autograph Collection. And in Jeddah, the brand is Canopy by Hilton. This will add more than 500 hotel keys. So this will contribute to the Vision 2030 tourism goals. In addition to that, our current rental revenue, or our IGA, income generating assets, we are a big player in offices in Riyadh. There is a big demand. We have more than 200 square meter. We'll add to it 112,000 square meter. And also retail and food and beverage, we have 37,000 square meter. We'll add to it double this number, 73,000. Also, there is a big demand now because of this expansion, big demand on high-quality residential units, and this is our competitive advantage as Al-Aqariyya. We have gated communities, we have semi-gated communities, we have 1,800 residential units for lease. We'll add to this 1,800, 560. In general, we believe in Al-Aqariyya, aligning our strategy with Vision 2030 is not only contributing to the vision, but also benefiting us for long-term profitability and sustainability for the future, for our organization and our shareholders.
Great, great. So now when it comes to technology like PropTech and blockchain is transforming real estate finance, how do you see these innovation shaping the industry?
There is no doubt that this advanced technology or technology in general is shaping real estate finance. PropTech and blockchain are becoming essential tool for more efficiency, more transparency, and also supporting investment growth. A blockchain, for example, can streamline the sales contract or off-plan sales contract through smart contracts. In a market like Saudi Arabia, where fast-growing market and there is big player and big project, large-scale projects are constantly being developed, this could be also a game changer and have impact. And international-wise, there is also development in PropTech, which is tokenization, allows for fractional ownership of real estate. This is a great tool. I think there is a big future for it because it will have greater access to the market, more liquidity, broader investor base, and international investor can take a small portion of your real estate. Also in government work, real estate government agency hosted a big event called the Global PropTech Summit last October. And the final statement of that summit stressed on the importance of investing more in PropTechs and enhancing the what they call digital economy. So these developments in general in PropTech and blockchain, what in real estate area, are aligned in general with the Vision 2030 focus in digital transformation and will play a key role to reshape our industry in the future. The challenges in front of us is how we smoothly adapt that, how we manage the risk, and how we make sure it is add value or sustainable growth for the future.
Great. In 1 minute answer, like as mashallah, Fahad, you have more than 20 years experience in finance. Just now when it comes for finance professional aspiring to become a CFO in real estate company, what skills are most critical for success?
Yeah, great question. Thank you, Raid. The CFO role in general in all industries is changing and evolving. It's becoming forward-looking, navigating the future, rather than traditional CFO is always backward-looking. So I think for a CFO in real estate to succeed, he must go beyond financial expertise to become a strategic leader. In general, the industry is capital intensive, so I think financial modeling, investment structuring, and risk management are great skills. Also, the new CFO or modern CFO is not a number guy. He's guiding long-term growth. He's playing a crucial role in sustainability and digital transformation, managing investor relations, and making sure that financial planning in the organization are aligned with the corporate strategy in general.
100%. Thank you, Fahad. Now, when it comes to the alternative financing, many real estate developers, Saud, and contractors struggle to secure bank financing for smaller projects. How does Sukuk fill this gap and offer a funding solution?
Thank you, Raed. First and foremost, بسم الله الرحمن الرحيم والصلاة والسلام على أشرف الأنبياء والمرسلين نبينا محمد وعلى آله وصحبه أجمعين. I'm very glad to be here today, joining the panelists with the distinguished guests discussing matters regarding the economy. Now, back to your question, if I can rephrase or clarify one point here and mention a number, is today as we speak, 87% of the financing or the clients we have accepted and issued sukuk for have good ties with banks and they have a credit history with bank. So why bother come to sukuk? What are we doing differently? Over the past 5 years, rapid changes, huge investments by both the private sector and the public sector, especially in the real estate residential sector. It has caused several things. For example, the financing from banks to real estate have increased 3.7 times since 2018. And that has caused the financing portfolio of the total portfolio in the banks to increase from 15% contribution to 30%, 3-0. In addition, it has caused also the average duration of loans to increase from 4 years to an estimated average of 8 years, and also increased the loan deposit ratio from 70% to 81%. What does this all mean? It means that the capacity of banks to lend corporate is not what it used to be before. With the initiatives and KPIs, the giga and mega projects, for example, Saudi World Cup, Expo 2030, and increasing the housing percentage from 61 to 70%, among other infrastructure projects, require an alternative financing solution. And that is where Sukuk Capital comes in. Today, as we speak, our portfolio consists of more than 350 companies across 12 sectors, with a total portfolio size more than 5 billion Saudi riyal.
Great. Now when it comes, which types of real estate companies benefit the most from Sukuk today? And where do you see the biggest growth opportunities for Sukuk in the sector?
So when it comes to real estate, we are focusing on residential real estate developers, commercial real estate developers. Our portfolio today stands on financing more than 2,868 units across 11 cities in the kingdom. Which is covered by entrusted investors of more than 450,000 investors. And where do we see 2025? We are focusing on two main pillars. The first one is issuing sukuk, which is either private or public sukuk with a hybrid structure, which is mudaraba murabaha, and we believe that will give options to investors in order for them to liquidate their investment. So it will increase the liquidity. The other thing is we are focusing on 2025 to issue real estate equity investment, which is musahamat al-aqariyah, after the new regulatory framework from the Real Estate General Authority with the Capital Market Authority.
Great. Thank you, Saud. Before we wrap up, I'd like to ask each of you if you had to give one key of advice to real estate leaders preparing for the next decade. What would it be?
That would be. I think they should consider the disruption from PropTech and other technology and take it seriously.
Great. Samia?
I would say, and being very enthusiastic about it, is embrace the new technologies. Take the risk to try new technologies, even if it's very scary, but the traditional one starts to be really outdated, so take the jump and go ahead.
Leila?
Climate change is real. It's not a political agenda. It's here to stay, and our real estate portfolios and operations need to adapt for the risk that's pending.
As you diversify your suppliers of material, you should diversify your suppliers of money.
Great. Thank you all. What a fantastic discussion we have had. We have covered everything from innovation, sustainability, and financial and alternative financing solutions. One thing is clear. Saudi Arabia is not just preparing Saudi Arabia is not just building real estate. We are shaping the future of the industry. This incredible progress is made possible by the visionary leadership of King Salman bin Abdulaziz and the Crown Prince Mohammed bin Salman, who keeps inspiring all of us. Thank you to our panelists. Thank you to all of you, and hope to see you soon, inshallah. Thank you all.
Thank you.
Thank you very much, Raed Al-Qubaisi and the esteemed panelists for such a lovely conversation with exciting views on the potential that we see here in the Kingdom of Saudi Arabia. Our guests for the last panel of the day will share their multifaceted approaches to sustainability across environmental, social, and economic dimensions. We'll hear examples of their initiatives on reducing carbon footprints, promoting social equality, and ensuring economic viability. Without further ado, please allow me to welcome again to the stage our moderator, Ms. Georgia Tolley, journalist and radio presenter at Dubai Eye. If I could also introduce the panelists for this panel, we have Mr. Scott O'Malia, who is the Chief Executive Officer of the International Swaps and Derivatives Association, ISDA. With Mr. Scott on stage, we have Mr. Eric Ringvold, Chief Business Development Officer at the Voluntary Carbon Market Company. Thank you all.
Hello there. Yes, good afternoon. Last panel of the day. Fantastic to see you all out there in the audience. Thank you for staying with us. I'm Georgia Tolley again. Thank you to Mo there for introducing us all. And I am delighted to lead this next panel. We're going to be focusing on mobilizing capital for global sustainability. As you can, I'm sure you understand, a really important topic and one that we're really excited to get into. We're going to be exploring specifically how financial markets can play a crucial role in supporting sustainability initiatives. And of course, we're going to talk about the different approaches that organizations are taking. Plus, I promise we will get into the nitty-gritty of the challenges that businesses and indeed governments are facing when it comes to the transition to the green economy. As you just heard, two great panelists, so let's get cracking. Okay, Scott, I'm going to start with you. How can the global capital markets play a role in creating these global sustainability objectives that we're all desperately trying to achieve?
Well, it is super important. We have a problem of shortage of investment. Governments are not going to be able to provide the roughly $1.5 to $2 trillion per year needed to make the transition to a more sustainable economy. These are to reach the 2030, 2040, 2050 goals of net zero. And to do that, what better place to go than private markets, capital markets, to raise the funding necessary? We have a terrific track record here. One of the things we need to do is get a price on carbon, right? To make sure that we incentivize investment over emissions, to invest on sustainability over pollution. And then by pricing carbon more consistently across different regulatory regimes, across the existing programs that we have today, whether they're the European cap and trade systems or other proposals, we can develop a more consistent carbon framework. pricing carbon in an appropriate way, that will drive the investment into these technologies. But it's not going to be done without capital markets. This kind of conference, these kind of conversations are so important to move that forward.
Eric, do you agree with Scott there? I'm pretty certain you do, considering the industry you work in.
That's right, and I mean, overall, it's clear that capital markets has a critical role to play to channel funding towards the sustainability projects we need to see. In particular, at the Voluntary Carbon Market Company based here in Riyadh, we're working on making that happen through, one of the mechanisms, right, which are carbon markets. And I think it's important to say that carbon markets comes in two flavors. It comes in the compliance flavor and the voluntary flavor. The compliance markets across the world are actually already getting pretty big. We're talking about a 100 trillion market already today, whereas the voluntary piece is relatively small. And I think whereas several countries that have these compliance market in place, that's fantastic, but we're not yet covering all sectors, we're not yet covering all companies, and hence voluntary carbon markets can also play a critical role in sort of covering that gap and being a very important additional mechanism.
Scott, how is your organisation in particular looking to participate in these global efforts?
So ISDA is a trade association, and we convene 1,000 of our members globally to agree on standard definitions of what an eligible carbon credit is. As Eric and I were talking, we were all talking in the back, there are a couple of standards out there that we need to drive towards. ISDA has used and updated in our definitions. We provide a definition for the European trading system. So we define what a carbon ton is there. For the voluntary markets, we do the same thing. And the Integrity Council is an organization that was put together by the private sector to set high standards for carbon. So we have integrated those high standards into our definition so counterparties, whether on Eric's exchange or other exchanges, can negotiate bilaterally or on exchange, can negotiate for the trading of carbon. So definitions are important. We also provide legal contract terms and definitions, so you can the documentation to support the counterparty trading. The other bit of work that we're doing is around legal foundation, understanding what these products are in bankruptcy are very important. So voluntary carbon products and crypto products have the same issue. Non-standard products, non-tangible, these intangible assets, trying to get your arms around things that you can't put your hands on necessarily, right? They're crypto or they're air in this case. So how do we make sure that the transfer of economic value occurs? And so one of the things we do is working with governments around the world, define what those rules are going to be. What is property and how do you pass security? Those are very important. So we're very interested in driving very high standards, both from a legal standpoint, but also a definitional standpoint to address confidence in this market and to build trust in this market. Because people have to trust the product if they're going to trade the product. And so these are some of the areas that we spend a lot of time. We also work on accounting standards. We think that's very important. We'll work with our membership to build market liquidity. The work that Eric's doing to create a secondary market, trading secondary markets, you need standard products. So we think there's a lot more standardization in this space that needs to be done so he can create innovative products like securitizations, futures, et cetera. Because with those products, you're going to get a forward price on carbon, which is essential to answer the first question of pricing carbon and making long-term investments and driving private capital into these markets. Right now, there's not a strong, consistent price curve in the future about what the price is going to be in the future. People, how do they predict where their investments are going to be? How do they hedge that risk as they think about that? So these are the things that we think about all the time. We work with our membership worldwide to develop standards, confidence, trust in the market, so we have something that we can really work with.
Eric, this feels like a good time to dig into the voluntary carbon market that you helped to create 18 months ago. How does it work?
Yeah, I mean, actually this journey started almost 3 years ago, and it started at Saudi Aramco before it was brought to PIF and Saudi Tadawul Group, our sponsors here today, to really take on and develop in the Saudi market. And actually, when we started out, 3 years ago, there was essentially no demand and no supply, no conversations at all about carbon markets in the kingdom. And so what we've had to do over the last 3 years is we've had hundreds of conversations with companies, we've been holding workshops, we've been engaging companies one by one to really do the awareness building which is required to get such a market into place. And so I think that has been really the fundamental piece, is getting companies to understand how an important tool this is. Actually, it's a tool that is probably the most cost-effective way we can decarbonize. It can create immediate climate impact versus waiting for technologies years in the future. And by the way, what we've seen as well is that corporates who are willing to engage in voluntary carbon markets, study after study show that these are also the companies who are the fastest to decarbonize. And it kind of makes sense because, if you're putting a voluntary obligation on yourself, you're more interested to decarbonize, right? So it all kind of comes together on both sides, where you have the faster decarbonization and funding being provided to crucial climate projects across the world.
He's being a bit modest.
I thought he was being modest, yes.
His journey started much earlier than this. I referenced the definition, getting high standards and definitions. Eric was the one that helped form the organization, the Integrity Council, for scaling voluntary carbon markets. When did you start that?
2020.
2020. So that's the standard that we have now adapted to put in our definitions. It represents the highest standard out there today, and we don't need multiple standards. This is you don't get more with standards, you get less with multiple standards. So we're really driving towards a single standard or one or two standards. And the two we like are the Integrity Council work, and also the UN CORSIA, which is around airline emissions. We really think it's important that everybody use the same standard, because we will damage trust if we don't have consistent standards, and we will be trying to trade two different products if we can't do an apples to apples comparison. So standardization is very, very important for this early stage market, because you do have that. Eric mentioned the European trading system for a cap and trade system. We know what a carbon ton is there. Our job is to try to begin to link these up together, so we're trading the same product roughly globally, and we can begin to use science and data and independent verification to validate the product you have, and therefore you will drive up supply or drive up demand, which will drive up price. You will get the right response for investment. So we think there's a lot of work to be done. It sounds easy, right? It's not. It is going to take a lot of work, but Eric's been on this journey for some time and has done great work here.
So I can return a compliment, because when we started our work here in Riyadh on the voluntary carbon market, one of the first things we needed to do is have legal agreements in place with the players that we wanted to buy and sell carbon from. And for us, what we did is we took the templates that ISTA is putting out there, and we have a ready to go way to engage with players all over the world, which is standardized, trusted, and makes it easy. So I think what you're doing is also, you can see it live, and really enabling the companies to succeed in the industry.
Thank you.
So I thought Eric was being modest because he didn't mention how many companies have voluntarily already signed up to participate in your voluntary carbon market. You've had a huge level of interest and success, haven't you?
Yeah, and we're extremely pleased to say that we've had 35 of the biggest companies in the kingdom sign up. And actually, these correspond to over 40% of all of the emissions that we have in the kingdom. So I think there's a really, really positive base to work off. We've had some international success. We actually sold the credits that were used to offset the COP29 event last year to SOCAR, the Azerbaijani oil company. So I think we're on a really good track. And I think the message from us to all of the companies here is, we need further engagement. So companies are understanding this is important, they're getting involved, and we need to see further increases in how much companies are offsetting to really make this a real thing, so that we can all contribute to the global net zero, and that we can all contribute to the Saudi green vision by 2030.
Okay, so there's an awful lot of greenwashing going on. We know it's happening. We know that companies out there keep on saying that they're using artificial intelligence, that we keep on saying that their ESG levels are amazing and that they conform to sustainability standards. What needs to be done to ensure that the carbon markets can be trusted? Scott?
I think it comes down to using the highest standards. Let's agree whether they're UN-traded standards, whether they're private market standards, they should be the same standard. There shouldn't be a difference. We have two great standards today, the Integrity Council and Corsia. People trade both of them. There are some other standards out there, and the market is beginning to shift to these, and that's fantastic. I think independent verification through rating agencies are very important as well. They're available. Two of the firms that we work with, B0 and Silvera, they do a great job, and they do independent scientific validation that they are delivering on what they say they're to deliver on. Continuing to do that audit is very important, and making sure that we don't take any shortcuts. If we have to reduce the duration or the time available, so be it. Let's stick with the science, and then everybody can trust that. You can have an independent validation and audit, and then we're going to be at a much better spot, because these are really important investments that we need to make. It'll also stimulate production of new innovative technologies, right? When these things can deliver sequestration in the ground or saving habitats, we're going to really be able to do some great work here, investing in the new technologies, as well as providing essential offsets that you can't eliminate through other means.
Eric, it sounds like we need standardization.
Yeah, and I think my message will be that actually it's very possible to engage in the carbon market today with trust, with high quality standard. There actually needs to be no fear of greenwashing if you're doing the right thing in carbon markets today. Okay. What we've done at the Regional Voluntary Carbon Market Company is we've gone through an extremely diligent set of checkboxes to ensure whatever we're doing is of the top quality. So, like Scott mentioned, we're ensuring that the credits we're using are from one of the two super overarching standards. By the way, we're also making sure we're only using credits from the last few years. So we've been limiting to only using credits from the last 4 years, because we know over time things do get better, and every single year we're getting to more and more accuracy. And then just given the situation we're in the market, we've been adding on top of that a ratings agency checks, ensuring that we're only taking the highest rated projects and doing our own due diligence on top. So I think if you're willing to engage, with a partner like us who takes it seriously, there needs to be no fear of greenwashing. Then the question on greenwashing comes probably on two sides. So one is, are you using credits that are saying are doing what they say they do? Mm-hmm. And on the other side, are you using them in the right way as a corporate? And I think on that question, it's also clear you should not be only relying on carbon credits. At the same time, you should not be only relying on internal decarbonization. You have to engage with both sides and do both sides in parallel. And I think that's the way to ensure you're not getting criticized.
I've got 3 minutes left with you, gentlemen, and one more question. So that's about 1.5 minutes each. Let's talk about the role for the private and the public sector. To what extent should government be getting involved in this market, in this field?
Last year was a terrific year, actually, in terms of public-private alignment. At COP29, we had the UN Article 6 rules. These are the rules and definitions that underpin the Paris Agreement, and they set the rules for how countries are going to trade carbon amongst themselves. We've been waiting for that for years, and finally we have it. And that will help set, if it's good enough for countries to trade, it'll also be good enough for companies to trade, and we want alignment of those rules. The International Association of Securities Commissions, IOSCO, out of Madrid, representing 180 commissions around the world. These are the market regulators. Also put out a very nice white paper kind of talking about the existing rules and regulations that they already have in place. We don't need new rules. We have existing rules. They talked about how those alignment with this product class would work, and they will work quite well. It goes hand in glove. So we've had two important developments there that really give us a lot more clarity around this market and a real partnership between the public sector and the private sector.
Eric?
Yeah, I think first of all, when it comes to using carbon credits, In the past, we've seen the corporates get involved first, and then being the bulk of what is happening now. Like Scott said, now we have the UN Article 6 rules live, and we can see governments come in and be a second source of demand. So hopefully we're seeing, two firing cylinders. On the other side, governments, of course, play a really crucial role to enable the private sector as well. And that is by things like Scott mentioned in the past, providing legal clarity, incentives around the whole markets. But I think one very important thing as well is the introduction of compliance carbon systems. So for example, we have in the Kingdom of Saudi Arabia, we have announced the compliance carbon system to come live as a pilot phase by 2027. And by the way, such systems have, across the world elsewhere, been using 5 to 10% of carbon credits integrated into the compliance system. So this is another example of how these two worlds can interlink. And also, from our perspective as an infrastructure provider, we have a fully fledged exchange platform operational here in the KSA. And so that could be another potential for collaboration, is essentially to use the same technology that we have and just operate a voluntary market and a compliance market on the same platform, which is something we're hoping to bring to life.
That's a really positive conversation, not something that normally happens when you're talking about sustainability. So gentlemen, thank you very much indeed. Really fascinating stuff. Scott Malia, Eric Ringvold, thank you both very, very much indeed. I'm sure you'll like to join me in a round of applause. Thank you very much.
Thank you all. Thank you all who are still here. We're going to take a 5-minute break, if you can stay where you are, and then we will start with the Saudi Capital Markets 2024 awards ceremony. So a 5-minute break, please. In the script, it says good afternoon. I'm going to say good evening, ladies and gentlemen. Esteemed guests, thank you for everyone who has stayed until this time. We really appreciate everyone's timing with us today. It's my pleasure to welcome you to the 5th edition of the Saudi Capital Market Awards, a cornerstone event of the Saudi Capital Markets Forum. Earlier today, we've heard insightful discussions, amazing panels, and explored transformative trends that are shaping the future of our industry. Now we gather to celebrate excellence. The Saudi Capital Markets Awards 2024 recognizes outstanding achievements across 21 categories, honoring the market participants who have contributed significantly to the growth and the development of the Saudi capital market in alignment with Saudi Vision 2030, the Financial Sector Development Program. We extend our sincere gratitude to our award partners for their collaboration in making this ceremony even possible. Throughout this ceremony, we will be presenting awards that are tiered to represent previous recognitions by SCMA, gold for three times or more, and silver for 2 winners or more. To all the winners, please stay until the end of the ceremony for a group photo on the stage. To begin, I'd like to invite to the stage Engineer Khalid Al-Hassan, Saudi Tadawul Group CEO, and Mr. Fahad Kurdi from the CFA Society to present the awards. And now let's get started with the first award. To begin, we start with an award that celebrates the most impactful IPO of the year on the main market, recognizing its contribution to the growth of the Saudi capital market. The winner of the IPO of the year for 2024 main market goes to Rasan Information Technology. Congratulations to the team at Rasan Information Technology on winning the IPO of the year for 2024. Turning to Nomu now, parallel market. This award honors a standout IPO that has driven growth and innovation in the dynamic segment. The IPO of the year for 2024 award for Nomu parallel market goes to First Avenue Real Estate Development. Next, we recognize excellence in direct listings on Nomu parallel market, celebrating a transaction that highlights the evolution of the Saudi capital market. The direct listing of the year for 2024 goes to Miral Dental Clinics. Congratulations. Congratulations. This next award celebrates excellence in private placements, recognizing a standout transaction that has driven innovation in the market. The Private Placement of the Year for 2024 award goes to BSF Capital. Congratulations to all involved at BSF Capital. This next award honors the most impactful merger and acquisitions of the year, celebrating the leadership and vision behind the deal. The merger and acquisition of the year for 2024 award goes to SNB Capital. Turning now to debt capital markets, this award recognizes outstanding leadership and innovation in the critical area of the market. The winner of the Debt Capital Market House of the Year 2024 Gold Award goes to HSBC Saudi Arabia. Our next category celebrates excellence in asset management, highlighting a firm that has delivered exceptional results and value to its investors. The winner of the Asset Manager of the Year 2024 Silver Award goes to Jadwa Investments. The next award celebrates exceptional activity and contribution to the derivatives market. The most active derivatives broker of the year for 2024 Gold Award goes to, again, SNB Capital. Congratulations. Next, we celebrate excellence in equity capital markets with an award that honors a firm making a significant impact in the market's growth. The Equity Capital Market House of the Year 2024 goes to BSF Capital. Congratulations to BSF on their second win tonight. Moving on, this next award recognizes a firm that provides exceptional insights and analysis, driving informed decision-making in the market. The Research House of the Year for 2024 Gold Award goes to EFG Hermes. Congratulations once again. Our next CFA award celebrates excellence among general clearing members, recognizing their vital role in market operations. The General Clearing Member of the Year for 2024 Gold Award goes to SAB. Well done. Now we recognize outstanding performance amongst direct clearing members, a keynote component of the market infrastructure. The Direct Clearing Member of the Year for 2024 Silver Award goes to SNB Capital. Congratulations. SNB's third award of the night, mashallah. Next, we recognize excellence in brokerage services. This award honors a firm that demonstrates leadership, innovation, and outstanding client service. The Broker of the Year for 2024 award goes to Diraya Financial. Congratulations. Congratulations to Diraya on your first SCMA award. Congratulations. Our next category highlights excellence in custodial services, an essential pillar of the Saudi capital market infrastructure. This year's Custodian of the Year for 2024 Silver Award goes to Riyadh Capital. Congratulations, Riyadh Capital. Our final CFA award of the evening honors a leader in investment banking and recognizes a firm that has driven transformative transactions and innovation in the Saudi capital market. The Investment Bank of the Year for 2024 Gold Award goes to SNB Capital. A big congratulations to the team at SMB Capital for securing a total of 4 prestigious awards. Inshallah. Thank you very much, Mr. Fahad Kurdi, for participating in these awards with us. Next, our MIRA-sponsored award category goes to companies that have excelled in investor relations, demonstrating superior communications and engagement with their investor base. In honor of Mr. Sultan al-Daghathir, rahimahullah, the Investor Relation Awards will be presented by Mr. Abdul Aziz al-Daghathir. If you can please join us on stage. Mr. Abdul Aziz and Mr. Rayyan al-Karawi from Middle East Investor Relations Association. Recognizing leadership in investor relations, this award celebrates a large cap company that has maintained best-in-class market transparency and investor engagement. We have 3 awards here. The first award is the Sultan al-Daghathir Award for Investor Relations Program, Large Cap 2024. And the winner is Saudi Arabian oil company Aramco. Congratulations to the entire team at Aramco. This next award honors a mid-cap company for its outstanding investor relations program, fostering communications and trust with market participants. The Sultan al-Daghathir Award for Investor Relations Program, Mid-Cap 2024 goes to Saudi Aramco Base Oil Lubrif. Congratulations to Lubrif on this prestigious award. Our last award in this category recognizes a small cap company that has excelled in engaging investors and maintaining transparency. The Sultan al-Daghathir Award for Investor Relations Program in the small cap category for 2024 goes to First Mills. Congratulations. Thank you, Mr. Abdul Aziz al-Daghathir, for your participation in these awards. Our last award category, sponsored by GOSI and the Environmental Fund, celebrates excellence in sustainability practices. Starting with large cap segment, this award recognizes a company that has set new industry standards in sustainability. Here to present the awards and joining Engineer Khalid Al-Hassan and Mr. Rayyan Al-Qarawi on stage, please welcome Siham Gar'awi, afwan, sorry. Please welcome Ms. Siham Al-Jubairi with GOSI and Taghreed Al-Hurasan, I'm sorry, this needs to be written in Arabic, with the Environmental Fund. The Sustainability Program of the Year Large Cap 2024 goes to SAB. Congratulations to everyone involved. Continuing with sustainability, this award honors the mid-cap company that has demonstrated strong leadership and commitment to sustainable business practices. The Sustainability Program of the Year 2024 award goes to Solutions by STC. Congratulations to everyone involved. And finally, we turn our attention to sustainability, recognizing a firm that has implemented exceptional initiatives within the small cap segment. The Sustainability Program of the Year for Small Cap 2024 award goes to Andalus Property. Congratulations to everyone involved at Andalus Property. Ladies and gentlemen, that concludes this year's Saudi Capital Markets Awards for 2024. I want to say a big thank you and congratulations to all our winners, also extending a sincere thank you to our sponsors, our partners, and everyone who has contributed to making this event successful. We would now like to invite all winners to join us on stage for a group photo, and we look forward to welcoming you back next year, and have a lovely evening. Thank you. Ma'as salama.